energy insecurity, constrained economic performance, and undermined public confidence. Yet, we are now entering a new phase, one that requires profound recalibration of our energy system, institution, and investment architecture. The gas economy, still in its formative stages, holds promise, but also presents hard constraints and urgent decisions. Natural gas is often described as a transition fuel, but for us, it is not merely a bridge, it is a pillar in a diversified and pragmatic approach to energy planning, particularly in the context of industrialization, job creation, and spatial economic transformation. To understand gas in South Africa, we must first situate it within a global context. The geopolitics of natural gas are shifting. In the past 2 years, following the Russia-Ukraine conflict, global gas markets experienced one of the most volatile and uncertain periods in decades. European countries scrambled to reconfigure supply chains, moving away from Russian pipeline gas towards global LNG markets, causing price spikes, shifts in supply routes, and new diplomatic alignments. This episode laid bare a fundamental lesson. Energy security is national security. No country can afford to leave the reliability, affordability, and resilience of its energy systems solely to market forces or external supplies. This weaponization of gas through price manipulation, supply disruptions, and political leverage is not a theoretical risk. It is a lived reality in today's multipolar world. This is especially relevant for developing economies like ours, where dependence on a narrow supplier base can render entire industries vulnerable. South Africa currently imports approximately 160 petajoules of natural gas per annum from Mozambique, representing more than 85% of our total consumption. Sasol, the largest user, consumes around 125 petajoules annually, creating over 30,000 direct jobs and contributing approximately 5% of GDP. Yet the Pandemani gas fields are projected to decline between 2026 and 2028. This anticipated gas cliff is a significant threat to our economy and one that demands a coordinated and forward-looking response. Gas is not simply a commodity. It is a vector of industrial capability, spatial integration, and economic power. Around the world, countries are reconfiguring their gas strategies, not just around cost and supply, but around sovereignty, localization, and geopolitical influence. For South Africa, this reality presents both risk and opportunity. On the one hand, we are currently exposed, dependent on a single supplier with limited infrastructure and a shallow domestic market. On the other, we are strategically located, relatively stable, and endowed with underexplored petroleum potential. Our political economy must respond by crafting a developmental gas strategy, one that integrates domestic production, regional diplomacy, infrastructure finance, and market design. It must be grounded in public value, not just private gain. Historically, South Africa's gas sector was shaped by vertically integrated operations, notably Sasol, which played the dominant upstream, midstream, and downstream role. This legacy is being reconfigured. Recent developments include NERSA's rules for third-party access, aimed at opening pipeline infrastructure to independent gas traders and facilitating a more comprehensive wholesale market. Transnet Pipeline, the custodian of key gas transport infrastructure, is being repositioned to support this open access environment. There is also potential to establish a national gas aggregator or gas trading platform that can contract long-term supply and make volumes available to smaller parties, ensuring greater liquidity and lower entry barriers. Our most immediate lever is gas to power, not just for its ability to provide dispatchable electricity, but because it enables the kind of long-term firm demand needed to unlock capital for LNG infrastructure. A minimum of 75 to 100 petajoules of gas per annum is required to make LNG import terminal viable. However, non-Sasol demand currently stands at 60 petajoule, a volume insufficient to underpin a bankable investment case. The role of government, therefore, is to aggregate demand, facilitate offtake certainty, and ensure regulatory alignment. Strategic nodes such as Richards Bay, Kruger, and the Vaal Triangle are natural candidates for gas-to-power infrastructure, given their proximity to industrial activity, ports, and existing grid capacity. Gas is not only about molecules, it is about enable productive capacity. In the Just Energy Transition Framework, Mpumalanga can shift from coal dependence to a diversified industrial base supported by gas. Fertilizer production, ceramics, aluminum smelting, and food processing are all sectors where gas offers cleaner and competitive energy. A coherent industrial policy must be linked to gas infrastructure rollout. This includes spatially targeting new gas markets where they can support special economic zones, agro-industrial nodes, and mineral beneficiation clusters beyond our borders. South Africa must strengthen regional energy integration. The South African development community holds significant potential for shared gas infrastructure. Discussions are underway around pipeline extensions from Mozambique, integration with Namibia's gas finds, and exploring regional LNG storage hubs. Our current chairmanship of G20 provides a global platform to advocate for energy diplomacy frameworks that benefit the African continent, including more equitable access to transitional fuels and infrastructure finance. Gas infrastructure is capital intensive, often with long payback periods and high counterparty risk. That is why the public sector has a vital role in de-risking private investment. Blended finance mechanisms, such as those supported by the DBSA, AFDB, and multilateral climate finance, will be essential. Government is also exploring models such as take-or-pay contracts, volume guarantees, and strategic reserves to underpin market confidence. We must build on the successes of the Renewable Energy IPP program to design a gas IPP procurement program with clear rules, environmental compliance, and community benefit obligations. While LNG is a short to medium-term solution, our long-term ambition is to unlock South Africa's indigenous gas resources, onshore prospects in the Free State and Mpumalanga, and the offshore finds such as Brupalda and Rupert, located in Block 11B, 12B of South Africa's Outeniqua Basin, holds immense potential. It is estimated that Brupalda fills approximately 1.3 trillion cubic feet of natural gas, whilst Rupert, the field estimate is estimated around 1.2 TCF of natural gas. But we must act now. Exploration timelines, environmental approvals, and production ramp-up periods are long. The time between discovery and first gas can easily exceed 8 to 10 years. A clear upstream fiscal regime, streamlined licensing, and predictable royalty structures are essential. Looking ahead, gas will evolve. Emerging technologies such as blue hydrogen, synthetic methane, and carbon capture and storage will shape the future value chain. South Africa must position itself not only as a consumer, but as a technology participant, investing in R&D, skills development, and academic collaboration. We must prepare our institutions and engineers for the energy economy of tomorrow, one that is decarbonized, digital, and decentralized. Colleagues, we face a stark reality. Inaction will result in economic regression. The gas cliff is not a distant event, it is imminent. But it is not inevitable. We have the analytical tools, institutional memory, and public-private platforms to act. What we now require is resolve, coordination, and energy. Let us use this seminar as a moment of clarity and a call to courage, to place gas not at the periphery, realization and energy resilience agenda, to advance a model of gas development that is sovereign, inclusive, and environmentally responsible. Let this be the start of a new chapter, one in which we harness gas not only to keep the lights on, but to ignite shared prosperity. I want to take the opportunity to thank you once more and wish you a productive engagement, and hopefully we'll have an opportunity to get to know the outcomes of these conversations that can help us in shaping the gas industry in our country. Thank you very much, Program Director.
Thank you very much. Thank you very much, Minister. I think we're going to allow you to proceed with the other businesses of the day while we continue unpacking what you've just asked us to do and discuss this. And discuss the matters that has to do with the gas cliff, and we'll surely make sure that you get the outcomes of this session. Thank you very much. We're going to allow you to leave.
Mozambique only has 31%, approximately 31% of their population with access to energy, and Tanzania, 40% have access to electricity. Prioritizing export infrastructure risks leaving millions without reliable energy and could create stranded assets if global demands shift amid the energy transition. South Africa in particular faces an urgent gas cliff, which Prof has already mentioned, and the Minister has already mentioned, as its primary gas imports from Mozambique decline, threatening industries and jobs. At the same time, the country is exploring offshore fields and LNG import options, navigating regulatory uncertainty, infrastructure deficits, and investment risk. This underscores the critical importance of regional integration, cross-border cooperation, and harmonized policies, as envisioned by frameworks like the African Union's Agenda 2063 and the Programme for Infrastructure Development in Africa, PIDA. Moreover, the global energy landscape is evolving rapidly. Post-Russia-Ukraine conflict dynamics have increased gas market volatility, while international climate policies, such as the EU's Carbon Border Adjustment Mechanism, impose new pressure on African gas producers to reduce emissions and demonstrate sustainability. Yet Africa's collective stance, exemplified by the Kigali Communique, affirms natural gas as truly a pragmatic transition fuel. And as the Minister has said, we see it beyond being a transition fuel through to the 2040s, essential for closing the continent's energy access gap and supporting industrial growth and socio-economic development. Our goal today is to catalyze actionable insights and foster collaboration among government, industry, finance, and academia to ensure that natural gas truly becomes a cornerstone of Africa's clean, secure, and prosperous energy future. I liked what the Minister said. He said to ignite shared prosperity. I have a fantastic panel today. I am joined by Dr. Bongani Saidini, who is from the Petroleum Agency of South Africa, PASA, Ms. Annalyn Enslin from SP Global, Mr. Werner Ayukegba, Africa Chamber, Energy Chamber, Mr. Nick Michel, Onshore Petroleum Association of South Africa, OPASA, and Mr. Abi Han, Global Oil and Energy Consultant. Each panelist will have 5 minutes opening remarks on the theme Challenges, Opportunities, Solutions for Oil and Gas from an upstream perspective, offering truly their unique vantage points. I encourage the audience to truly note key insights because that will be the basis for our robust engagement after their remarks. For efficiency, each one of the panelists has already been briefed. The sequence of their delivery will be Dr. Bongani, followed by Ms. Annalyn, followed by Mr. Werner, Mr. Nick, and Mr. Abi. And they will seamlessly flow with their opening remarks for 5 minutes, and I am going to signal as their time expires. After that, we will truly go into a very robust discussion, and I encourage you and invite you to participate. Now I'm going to join them on the panel. Dr. Bongani, over to you.
Thank you, session moderator. I've asked for one slide to be flighted when I speak. Can I please have that slide? The Minister of Electricity and Energy, Dr. Ramokgopa, who addressed us here this morning virtually. EDG, Tshediso Maqhubela, Ngoke, leadership of the Wits Business School, academia, energy professionals, distinguished guests, ladies and gentlemen. My name is Bongani Saidini. I'm the COO and acting CEO of the Petroleum Agency, SA. Can I get the slide, please?
It's there.
We regulate the upstream petroleum sector in South Africa. Designated as such by the Minister in terms of Section 70 of the Mineral and Petroleum Resources Development Act. We have now a new law in the form of the Upstream Petroleum Resources Development Act. One of our key functions, besides processing licenses for rights, is to assess the petroleum prospectivity of the country, that is both oil and gas, and promote such to the world. It would therefore be remiss of me not to share with you what we see as the prospectivity of the country in terms of gas. South Africa does have gas, both in terms of potential, but also in terms of discoveries of gas. What we are grappling with is how to connect or how to enable the development of that gas and connect it to markets. For example, we estimate, and our estimates are based on data, recently acquired data and historical data. Any data that is acquired in this country in terms of petroleum data, we are the custodian of that data and we have access to it. So if the latest significant exploration activity in this country was the drilling of wells, let's say last year, a seismic acquisition, all of that data we would have access to, and we have access to the data dating back to 1965 with the formation of SOAP, and then exploration company of state-owned exploration company. So in terms of the our assessment, we estimate that this country contains about 60 trillion cubic feet in prospective gas resources. If you want to be precise, I would say 59. Never here nor there, 1 TCM. So that is what we estimate offshore. I think along the coast, I think 22 TCF or trillion cubic feet sits off the west coast, 29 sits off the south coast, and some 8 TCF off the east coast. Onshore, we estimate in excess of 200 trillion or TCF in prospective or technically recoverable shale gas resources and biogenic gas, CBN, and so on. Just to give context, the Mosul gas to liquids refinery was the building of that refinery was decided upon by the then government in pursuit of their policy of self-sufficiency based on 1 TCF. We talk of 60 TCF versus a government that took a decision to build a refinery based on only 1 trillion cubic feet. That refinery ran for 28 years, from 1992 to 2020, when it ran out of gas. The Ramokgopa pipeline, that is 865-kilometer pipeline, moving gas from Pandi and Temane fields to Sasol Sekunda and Sasol Bay, was built, I think, on the back of a 3.5 TCF. We see as prospective resources at 60. So just to give you a measure of what that is, operators have begun to demonstrate and prove up this potential. Off the south coast in 2019-2020, Total Energies and partners discovered 3.4 TCF of gas. They applied for a production right, and while Total Energies and other partners have moved out, Main Street has remained and have applied for a production right to produce that gas. There is gas that is very closely linked to this area that has this gas potential now. In Mpumalanga, in the right held by Afro-Energy, Afro-Energy, there's a contingent resource of 6 TCF there. That's very close to Sekunda, that refinery, close to the Ramokgopa pipeline, Lily pipeline, and so on. We need to be deciding here, how do you enable the development of that gas, where significant number of exploration core wells has been drilled. I think 16, there's been 8 production or pilot production test wells drilled there. Recently, there was even a test of a gas to power concept there through a well. I think Mr. Don Mumbe called the beast, where a number of people witnessed the conversion of gas in terms of that well to power. I think I will stop here. I needed to give you a sense that we do have that resources.
Rob will be available for further engagement during the symposium and further expand on the potential we have.
Okay, so now it's my turn. Good morning, everybody. It's really fantastic to be here today. My name is Annalene Engstrom. I'm from S&P Global Commodity Insights, and I'm specifically focused on the upstream sector in Africa. So it's funny what Ronnie says, it's 59 TCF. Our estimates are 52 TCF, so we're a little bit more conservative on that one. But about early last year, we found that with the development of the gas master plan coming out, with the different integrated resource plans coming out, our clients had questions about, do we have enough gas in South Africa? And how much gas do we need in South Africa? So we were involved on this study to try and come up with an idea of what this mixture and what this picture looks like up to 2050, to be able to answer that question. So by looking at the resource mix and how we see this playing out, so with the retirement of some of the coal fleets and what we see as a reasonable build-out timeline for renewables, the different parts of that, we then assigned the difference in terms of what power demand is needed in the country to gas to power. So just to give you an idea of the numbers, the compounded annual growth rate for electricity demand up to 2050 was 1.93%, and our GDP compounded annual growth rate was 2.17. So you have to remember that. But the picture was very interesting. If we take all the discoveries that Kgosientso mentioned, and we bring them online in what we believe is a reasonable project timeline, what is physically possible, we get to a certain peak rate that gets us to about a third of what the country needs in terms of available gas versus the gas demand from the power and industrial users' point of view. So the numbers are a bit scary. By 2035, we'll be short about 500 million scf a day in South Africa. But by 2050, we'll be short about 1.2 BCF of gas per day, based on our current discoveries that have reserves allocated to them. So this is something that's maybe a bit technical, but the gasification from resources to reserves is where it becomes challenging for the industry as well, because you need to spend money to actually get from resources to reserves. This is the well testing that Kgosientso was mentioning. So taking this into account, the fact that we see continued exploration happening in South Africa is encouraging, but we need to understand the size of this gap. It's not just a gas cliff that we're talking about in terms of the supply from Mozambique. It's the fact that up to 2050, this country needs a substantial amount of gas. And then we get into gas prices, LNG prices, imported pipe gas versus that domestic supply. And Paul will probably fight me on this one, but the bottom line is that the cheapest gas that you're going to be able to feed your industrial users and your power sector in the country comes from domestic discoveries. So there needs to be a concise effort from government and industry to move exploration forward in this country. We need to get over the legislative hurdles and we need to look at how we can attract investors into South Africa for these projects. Because what we also need to remember is that these global IOCs are competing projects. It's not just us, it's not just Africa. They have a portfolio of projects where they look at the economics versus the risks, but also looking at the effect of these projects on their portfolio's emissions profiles. So all of a sudden, you need to have a super economic project. It needs to be in a country with low risks in terms of legislative hurdles and fiscal terms, etc. But on top of that, all these projects need to be developed in a way that lowers their carbon footprint. So that's some food for thought that we can unpack a bit more later. Thank you. Thank you.
Thank you, Delta. Before I start, let me introduce myself. My name is Brena Yukeka. I'm a Senior Vice President with the African Energy Chamber. We are an advocacy group that seeks to attract investment in the oil and gas and energy space in Africa. And we do that very unapologetically. Thank you so very much to previous speakers, Annalie, for setting the scene significantly around demand and where demand is. Dr. Bongani, I think you are very much used to this. I stand on the protocols that you established. I wouldn't know how to go about those, but so thank you very much for doing that. And even before I go in, thank you, Prof, and thank you, David, for inviting us to have a voice here. I think what I was asked to do was to look at the opportunities and some of the challenges that the upstream sector is facing. In terms of the opportunities, without repeating myself a lot, I think it's obvious. If at all you are in South Africa and you don't understand the opportunity of gas or power in that sense, then that's a problem. We all, one way or the other, whether you have generators or not, whether you have money or not, everybody here has faced it in that sense. So for me, the opportunity is clear. And that is, I'm going to even go further. I think you were picking up growth rates in terms of the demand. There is no way we can pretty much power South Africa and be fine without looking at what's happening in Zimbabwe, Zambia, the demand in that sense. The grid is already linked. So in terms of the demand gap, I think it's huge. And if at all, we're not looking to basically provide solutions around that, we're going to have the other effects around immigration and all the other stuff, the difficulties that we see, which are going to basically be compounded. So for us, power and gas to power as well is really essential for the growth of the economy and even social stability and all of that. Now, having said that, that opportunity is ultimately there. This is a country that pretty much was at the forefront of gas to liquids and all of that. So there is the technical knowledge and understanding of how to do about gas. But why are we not there? We're not there because of a lot of the issues that you spoke about. We're looking at the regulatory environment, the inability to be able to raise financing for some of those projects, ultimately because investors, like you say, are looking globally. Paul is here. I'm sure Paul has enough money at Back to be able to afford to some of those projects. But certainly, when they look at those projects, they're not just looking, I know Paul doesn't want me to pick him up, but I'm still going to do it. They're certainly not just looking at South Africa, not because it's a South African bank, but they're looking at projects across the board. I've seen very often in Angola, I've seen very often in Uganda. Certainly, I don't see it in some of the other countries which it goes abroad, but they do invest in those projects. So why are they not investing here? That's the question we need to ask ourselves. What's wrong with, the environment in South Africa? Dr. Bongani was saying we have the gas. If at all people are able to build a pipeline, 3.5 years from Mozambique, then what's the issue here? So something is fundamentally wrong. I was listening to the minister at the start, and he said all the right things. But the one thing ultimately that I think we didn't hear as I was texting to some of my team is, did he mention any timelines? When are we getting, a final investment decision, for example, on the importing terminal? We need to be concrete about some of those things. There is a demand for gas, so where are the final investment decisions? There are a bunch of companies here that are exploring for gas. When are those final investment decisions? So we're talking a lot about potential. We need to hold our own feet to the fire and say, what are we doing to be able to ensure that we have these final investment decisions? Now, this country is here because as well of the fact that coal was able to provide the power that it needed to be able to drive South Africa to where it was. Gas can do that with a lesser amount of carbon emissions. We need to basically ensure that we have investment. And if the government needs to put dollars on the table, then hell, that's what it needs to be. I'm not going to be the one telling you that the dollars put to a lot of other stuff where we can have arguments around. But this one is certainly not one that I think that we should leave out in terms of looking at the way gas can certainly be a solution. We're talking, not just gas because we're talking about power. I have one of my colleagues, NJ, was always saying, gas is like a Swiss knife. You're talking petrochemicals, you're talking gas to power, you're talking gas to liquids, you're talking gas to a whole bunch of stuff. And so if at all we're going to be able to look at, moving South Africa and taking South Africa to the next level, gas is really at the core. Just one last thing. In terms of power, and I know discussions around transition are part of all of this kind of stuff. Our issue is not transition in Africa, our issue is access. Our people need power. And so if at all those who have been polluting the world with all sorts of emissions in that, they should start first. We here, we need to be looking to have access to affordable and reliable power first. Yes, we should be looking at doing that in a cleaner way, but we need to be able to ensure access. And one last thing which I need to make, and it should give you food for thought. Very importantly, in March, I was in Houston, sitting and listening to the Japanese Minister of the Economy. And one thing he said really struck me. Japan has about 12 to 14 power plants, nuclear power plants. Between now and the next decade, they are looking to increase that to 28. That's an additional 16 power plants to get to a power mix of 20% produced by nuclear. This is the country which had the Fukushima disaster, and in a population which is decreasing. So you need to ask yourself, why? AI, the significantly for AI. So in all of this, where is Africa? Where is South Africa? Where is our place? So gas. Thank you.
Great. Good morning, everyone. My name is Nick Mitchell. I'm here in official capacity as the chairman of the Onshore Petroleum Association. But I wear a second hat as well. I'm the chief operating officer and founder of Ramokgopa Limited. And Ramokgopa is the holder of the only onshore production rights in the country. So for setting the scene, I'm going to use a lot of that context because I think it's relevant. I think everyone here has touched on key elements that I'd like to elaborate on. Before I do that, all protocol observed. Thank you, sir. Appreciate it. Prof, thank you very much for the invitation. As an entrepreneur in this space, I think we've probably faced the challenges head on, and we've encountered it. Everything that everyone talks about as potential challenges, we've got the T-shirt and all of the stripes, and we continue to bear those stripes and form new ones day in, day out. It's not a quick one and it's not an easy one, and I think that's the key. So if we contextualize the problems and call it the constraints and the challenges we have, it's certainly time. Time impacted by numerous things. Probably the second one I would talk about is investment. And then I'd say the political will. And it's not to diminish the role that our political elements are playing. From a regulatory space, we've got an amazing regulator in the form of the Petroleum Agency. They're a huge advocate for the industry and they're a massive supporter. The DMRE, DMPR, is who's providing their requisite support as well, and they're a massive supporter as well of this industry. And I go as far as to say that our Minister, Natasha, who represents the upstream side, goes out of his way to really advocate for gas expansion, oil and gas development, and even coal, to the dismay of some of the lobby groups that we have. If we talk about financial investment, I think from an investment community side, we've got really well-established investment fund managers, but they don't necessarily understand the upstream oil and gas. It's been such a long time since Sasol established itself as a new entrant into the market. It's now an established player. It's moved beyond oil and gas. It's largely a chemicals business. And if we look at it just from a fund management perspective, we don't have enough skill sets in the analytical side of that business for them to understand what upstream risk is about, for them to actually make available those capital allocations to ensure that upstream explorers get what they need in order to move forward. So if we then take a look at the call it onshore development side, where we are, we've got 22 exploration right holders right now and 1 production right holder. That's a lot of activity for an industry that not many people in this room probably knows exists. And that's a lot of licenses to be held by individual companies that are actually putting risk capital into these scenarios. But as Annalie mentioned, in order to move from exploration into production, you need real capital. And that's where we need the access to that capital. And through various institutions, policies, etc., we could unlock that capital to enable the risk appetite to come through, and maybe through appropriate tax incentives or structures that can get certain rebates that would enable those earlier risk investments to come through. And it also touches upon how do we transform this industry, because in order for transformation to take place in this sort of scenario, you need the ability for those participants to be able to finance early stage participation. The problem is it's not bankable, therefore it's audit risk. And there's very limited risk profile or investors that are prepared to take that type of risk. Going back to time, and time is the crucial one. We were fortunate enough to buy into our project back in 2013, and it came with the production rights already in there. But between 2013 and where we are today, we've invested just north of 2 billion rand so far. We've got the project into a producing status, but it's taken us the better part of 12 years to reach this scenario. Have we overcome all of our obstacles, all of our challenges? No, absolutely not. We're in the process of moving through those, but systematically we close them out. It's a complex environment. We straddle the upstream, the midstream, and the downstream, because the customers are also not prepared to fully take that risk of a new entrant, new producer. So they don't want to invest in that capital that's required for the infrastructure for them to consume. So these explorers, producers, as they transition, have to figure out that value chain, have to support that value chain so that they can take their molecules from their resource locations and distribute it into the customers' facilities. These are significant decisions, significant investments, but certainly there. And I think my closing out point is this: as the onshore has the ability to solve a large portion of the industrial gas needs of this country. Just our phase 2 project will produce 12 petajoules out of the 45 that's needed in Gauteng alone. That's one project, and it's only one phase. Our phase 1 and 2 touches about 5% of our proven resource. So we've got significant ability to scale up, but it does require support. It requires the government and political will, because any decision that's taken to support imported product, and I'm not here to play imported against onstream, onshore or offshore. I'm just here to highlight the awareness. You're locking yourselves into 10 to 15-year agreements, and if you allocate everything to the import, you'll inadvertently close the onshore industry. and they won't have any opportunity to deliver a product. So we do need to understand those decisions and those risks and constraints, and then make sure we plan appropriately to ensure that there's a complete mix of imported, offshore, and onshore. And one final point, if I can. We're only here talking about the gas crisis and the gas cliff and 28 as the issue. We think we have solutions for that as the collective industry, but we're not even touching on the coal crisis, which is due to hit us more or less the same time. And that's the availability of suitable coal to fire our existing power stations. And then you combine that with the gas cliff, we've got an enormous energy deficit that probably surpasses some of our estimations at this stage.
Thank you. Thank you so much.
Yeah, thank you. I worked 40 years in the international oil and gas world in about 30 countries in the world. I worked for Shell, Sasol, and Maersk, and I retired about 8 years ago. Of the 40 years, I spent 30 years in the long grass in the blue African seas. I think I've worked the continent north, south, east, west. And it's not to boast, but I'm deeply endowed with African oil and gas and energy issues. And now I've retired and I'm trying to give back to society and whoever wants to listen to my experiences. So it's an honor and a privilege to be here. And thank you, Maurice and David, for inviting me. Last in this role of established speakers, I always feel very mixed about giving a message at a conference like this because we will talk about hope. But one thing I do know, we all need to have hope. But hope is not a strategy. Hope is not a strategy. A strategy needs tangible action plans and a commitment of all parties involved. And I think we all recognize what's going on in South Africa and the world. And many people need to come to the party. There's always somebody else who needs to fix it, not us. Win-win we talk about. But win-win, everybody has win-wins, but it's never in capital bold, it's always in small letters. So who's willing to sacrifice what at what? All investors want to make money. All governments want to make money via taxes. All consumers want to save money by having reliable energy. And it creates a power vacuum in which nobody moves forward. We talk about the gas bill. I joined Sasol in 2008 as a strange duck from Holland landing in South Africa. And they looked at me, what is he talking about? The gas cliff was there already. We were just still ramping up production. We were climbing the mountain, but I can probably still find slides the conference talks have given. I told them, then it's coming down. Gas takes a long, long time. And and I like the hope about finding stuff. But if you haven't found it yet, you're too late. You're too late. And we haven't found it yet in this wonderful country. Not in economic quantities. But that doesn't mean you should stop looking for it. But if you focus your hope on finding gas and meeting the gas cliff, you're too late. The only way you can address the gas issue is through LNG imports. Buy it from somebody who has found it and is producing it, and pay the price for being too late. Yeah? And that's a harsh assessment, because I know when the Mozambique gas was discovered, we had an opportunity to Sasol to buy into that project. But you say, can I give you $1 for 50% of your 40 TCF discovery in the Mozambique? It says, no way. You need to pay me the real money. And you need to stay the course with me. And none of that gas they discovered 10 years ago is producing. Kgosientso, which is mentioned about today many times. Do you know when it was discovered? In the 50s. It took 40 years. And a pipeline to be built and Sasol to take the investment decision to produce that gas. So this isn't a quick fix. The only quick fix is LNG. Yeah. Now zooming out again in the global landscape, that we talk about the gas cliff. There's an energy cliff. There's a population cliff or mountain that's growing. There's a poverty cliff and mountain. So it's a multi-dimensional problem of issues. And I think we need to stay calm because these things are long term. Governments, they look to the next elections. Investors, they look to the next annual results. You know, consumers look at the monthly energy bills. You all have different timelines, but these things we talk about, they span generations and they transcend national borders. So we need to think regional, and as an African nation, you need to collaborate with your neighbors, even if it comes at the cost of giving up something to win something. South Africa has been well endowed with coal, diamonds, platinum, and all those things. And when you have that, you say, we can also have gas. It's almost like, you know, when you have a beautiful garden full of roses, say, can I have tulips? You know, it's like, yeah, you have roses, so focus on the roses. So, we need to say, use your economic wealth and address the energy issue. And gas is just one solution. Renewable power is another. It is maximizing whatever you have as coal and do it cleanly is another solution. Biofuels. This country is endowed with arable land and big crops. You know, but don't think, oh yeah, let's throw in biofuels. Can you do it tomorrow? Well, that also takes time. Everything has a timeline. So address the issue and start sharing honestly, not via hope, but through data and knowledge, and bring a think tank together. That's why I really welcome this initiative to really let's almost proverbially strip ourselves of our clothes and buck naked in front of the mirror and look at ourselves. And don't dress up and think you're something that you're not. So it is perhaps I want to be the damn squib, and I hope I don't spoil the appetite here, but that's what I would like to give as an introduction.
Thank you so much. And with that comment, we are encouraged to be honest with ourselves and be honest with the circumstances and be pragmatic in our solutions. I just want to reflect on the contributions of the panel as we move to an open discussion. Some of the challenges that were highlighted: time, investment, and political will. Transition is not our challenge as a continent, access is a challenge. And how do we address that? Competition for investment capital. Demand is beyond our domestic borders. It is within the power pool, and we should quantify the energy deficit in that context in order to have the appropriate solutions. Transformation imperative is key. In everything that we do in establishing the value chains, we must anchor this in our socio-economic development imperative, as our chairperson mentioned earlier. Multiple value chain facets that compound the energy deficits, not only for SA, but for the region. And we must be conscious of that. Then we must pay the price of being late, being too late, right? And understand that our solutions transcend borders. Those are some of the fundamental contributions from our panel. And just to kickstart the conversation, I'm going to go back to Dr. Bongani and ask the following question. How is PASA addressing the current regulatory and administrative bottlenecks to accelerate upstream exploration and production in South Africa?
Maybe before I deal with that question, hopefully they will save the time. I would like to address this view, my good self, a view that says we have not found gas in this country, not in commercial quantity. I have just demonstrated and articulated the fact that gas was found in 2019, 2020 through the Breadwater and Layback wells by Total Energies and Partners. Gas that is a right that is now held by Main Street with technical partners, Africa Energy. We've got their representatives here. Those are discoveries. Those are discoveries sitting some 175 kilometers from a gas to liquids refinery. That's actually run out of gas in late 2020. So that gas is sitting close to a potential end market in the form of that refinery. That refinery sits adjacent to the Kgosientso power plant, which is a power plant that's currently run on diesel that could easily be converted to gas. So I do not understand when we say we have not found gas in this country. I've also shared the fact that not far from where you are anticipating a gas cliff, there are discoveries that have been made by Afro Energy. We've got Pradon here who can attest to that. I have within this forum said there's been testing, pilot testing of that production there. There's been a proof of concept in terms of gas to power. That is not based on air. It's real production of gas that has been found. So I do not understand there is no gas in this country. Next door to me, he has just told us he commissioned the gas plant producing LNG and helium in 2022, late 2022. He is, we've seen the plant that was there, I'm sure Andy will take you there. He is producing gas as we speak, and we have not found gas in this country. LNG. LNG is the most expensive form of gas this country could go for. Your indigenous gas, much as, for example, the gas that's been found off the south coast, could be deemed to be a little bit pricey by virtue of the environment, the harsh mid-ocean conditions and so on. Deep waters, 1,400 meters to what, 1.8. LNG, that gas is very cheap relative to the LNG that you want to import. LNG whose cost, firstly, you produce the gas in terms of the natural gas, which is the gas that you can produce directly into a refinery. LNG, you will take that gas, liquefy it, putting in a lot of energy to get it into a liquid phase. You transport it over distances to South Africa, which is a cost in terms of the vessels carrying that. You bring it here, you must have infrastructure to re-vaporize, gasify it, adding costs along the way. And you are saying that must be our source of gas that we should be relying on, ignoring indigenous gas in this country. Maybe even if I stop there, maybe let me just get to what are we doing. I will tell the story of there is a seismic acquisition that was interdicted in the High Court in the Eastern Cape in late 2021, while underway. Two seismic acquisitions, another off the West Coast by Searcher. That undertaking is about R1 billion in terms of the two seismic acquisitions back then. Minister Mantrashe led a delegation comprising of his own team in terms of the DMPR and including us as the petroleum agency, as led by our capable CEO, Dr. Pindile Masanga. We visited all 7 kingdoms of the Eastern Cape, educating the kings and the chieftaincies in terms of what oil and gas is. How does it occur? How is it explored, produced? What are the technologies involved? What are the risks involved? What are the mitigation measures? What is the potential socio-economic impact in terms of that? As a way of trying to gain that social license to operate, I think what Prof. Powell is now advocating as social compare. We have been at it since then. We spoke to the kings in a manner that we were speaking in Isiswati there. There is a Isiswati. We won the heart of kings in terms of that engagement. That is what we are doing on the ground. Minister led us again to the West Coast, where a well was drilled in late 2022 on a club by. Even there, that well was allowed to be drilled, and it was a successful drill. We've learned a lot about the Orange Basin in terms of the practical work on the ground that we have done.
Thank you. It is very clear that you possess a wealth of information on what is happening within the ecosystem. The symposium encourages open and robust discussions. It is a platform that we explore different perspectives across the value chains. We need to also acknowledge as we go into this open discussion, I want to encourage the audience to participate, that some of our speakers are bound by fiduciary responsibilities and may not be able to answer questions fully. In the case where a question is asked and one of our participants is not able to answer, we will defer that question to a different session where it can be addressed in a better context. So please do not be dismayed should your question not be answered at this junction. I'm going to open this floor for discussions. Please be precise and brief with your question. You do not need to introduce yourself. We will take 2 questions at a time, and the panelists will jointly answer the question. Are we ready with our roving mics? Right. So I've got a question there, and a question here, and then I've got questions there. Dr. C, can you help me with identifying the questions from the audience? Let's start with the question to this side. Is this open mic?
Thank you very much. Mine is on collaborations. I think one of the panelists mentioned something on collaboration. My question is, I think Namibia and South Africa are sharing gas field or next to each other. How is the collaboration between these 2 countries?
If you've got a strong voice, then you can be on board.
I don't know.
Thank you. Awesome panel and great discussion. Mr. Nick, over there, you've got an interesting business. Almost 12 years later, 2 billion rand investment. So awesome. But my question would be around natural gas and the amount of time it's taken you to get here. So as it stands, you are the only player that I've heard of who's playing here. And basically, it would be to say that as time goes by, you would need to recoup those costs. Somebody would have to pay that, and my logic just tells me to go to pricing or all of that, and there aren't many players within the industry. But as well, Mr. Van alluded to that the main challenge is access, right? So what I'm getting is that as it is now, it's leaning towards more of being a niche product, to say that as it is, those who can afford will be able to afford it. And I don't know to what extent does that impact accessibility. And as Ms. Annalise alluded, that all the economics of it, shareholders are balancing as to where can they invest, where can they not invest. And that would be my view as I've seen it. But yeah.
We are working on collaboration with Namibia. In fact, there is, I think he mentions there is gas that was found in Namibia in 1974, gas field that remains stranded to date. On the South African side, there is gas in terms of the basic gas field found in early 2000s. That also remains stranded. Then discovered gas remains stranded largely because there was no market to enable the development of that gas. Namibia has just made significant oil discoveries, but it is light oil. So it comes with a lot of high gas oil ratios or a lot of associated gas. which complicates slightly the development, adds a bit of cost curves. Those reservoirs are also slightly poorer than diagnosed in terms of permeabilities, making that undertaking in terms of development complex. We have experience in terms of dealing with complex reservoirs in South Africa. We have a reservoir called the FO field of the South Coast. High temperature, high pressure, very tight reservoir, highly compartmentalized, which has been developed by Petro SA, by Petro SA in the somewhere 2007, 6, 7. So with that experience and also our experience in terms of oil and gas production offshore, we have been producing as this country offshore since 1992, feeding that gas to liquids refinery. We have been talking to Namibians to say, do not be deterred with what you are now discovering in terms of poorer reservoir quality. So we know how best to go about doing that. There are technologies now, and those players that are the Shell, Total Energies, Gulf, have massive experience in terms of how to deal with complexity, in terms of reservoir complexity. So collaboration, we've been talking in terms of collaboration, and we are committed to a collaboration.
Do you mind if I say something? And please stop. And I see it a little bit differently. Because when I stood on stage and I looked at all the discoveries, you're talking Total Energies with a lot of players. There was Woodside there. You had Chevron, this Exxon. They all own acreage. They're part of something. Luckily and happily, we had Rhino there, which is based out of Cape Town. But for me, really, what I was looking and hoping for when we talk about collaboration was to say Petro SA is part of something. The South African National, the new entity, is part of something. They're talking to NAMCO there. And again, I want to stress that this is not new because we all know that there's been significant changes going on in terms of that. But for me, collaboration actually means putting skin in the game and being part of owning and taking the risk to be able to do it. So he was talking here ultimately around saying we pay the price for being late. And it's trying to avoid the price for being late by collaborating in terms of putting skin in the game. There's no reason why Namibia and South Africa would not have sat, or NAMCO together with Petronas or whoever would not have sat and understood that even though you have 9, 10, 11 global companies thronging into Namibia, taking advantage of that it must ring a bell that we need to see, South African companies, those companies that are in the sector, being part of that. Luckily, we had a recent discovery, which Rhino together with Azul, that's BP and ANI, were part of. So at least we cheered for Rhino in that sense. But ultimately, I think we're not doing a good job at collaborating. That's just what I want to say.
Dr. Bongani is talking about collaboration in terms of bilateral relations. Is that correct? From country to country. We're talking collaboration in terms of inclusive participation by local companies and organizations in the market that is being established by the bilateral agreement.
What's the point of our politicians talking and the stuff not happening on the ground? We need to be able to unlock value. We need to be able to unlock value. It's all about the gas, right? So if at all others are going to cross the ocean and come and be part of those gates, those deals, we need to see South African companies be there.
Really, yeah, it's there's no shortage of talk and opinions always, by everybody, including me, by the way. I'll be happy to have a discussion with you offside about what you just said. But looking back, for instance, at Sasol's project in Mozambique, when they took the approach to see if they could develop those gas fields, and context is always very important. And people say that was a success story. It was, but the success story wasn't born overnight. If you look at the context of time, at that stage, Mozambique came out of a rather cruel civil war. This nation had just made a big step forward. And they were struggling also with an energy crisis. And it took collaboration across the border from the government of Mozambique and the government of South Africa to create a business environment and a will and a trust to build an 865-kilometer pipeline, to have a gas sales agreement. Because with gas, you need to have a sales agreement. You can't simply put gas in a pipe and expect somebody else to catch it on the side. You must commit to buying your gas so that the upstream folks can commit to the capital expenditure to develop the fields. And it was sensitive. The first time I went to Mozambique to visit the minister, I was put on the grill. I can still show you the scars, but I won't. And she only asked one thing, because Sasol negotiated a very tough deal at that time for minimum gas prices to the government of Mozambique. And without that, the project wouldn't have flown. So it needed that ignition on the low gas price to start the project going. But then as you start growing, it is collaboration. It's also about sharing and sharing equitably. And I think if you want to create win-win, you must give and take. You must listen and you must collaborate. And we talk about North Mozambique gas finds, you talk about Namibian gas finds, you talk about domestic, and it's all important, and I know there's some domestic gas. But nobody has really come forward, except your company, even on Global Power, we hear about it, Total walked up. You know, so talk about commitment. So what can we do, collaborate together to push these projects over the hump so that people can go forward with the investment side?
I really would like this question to be answered, but very briefly. Right? He's talking about the market requiring intensive capital and the timeline to recoup the investment, and almost the daunting challenge to participate in the market, considering it to be niche.
Great question. Probably answered with a little bit of, well, maybe best described as some stupidity in terms of the initial approach, but I think that's what all entrepreneurs are about, especially in a sector like this, largely run and operated by very large international oil companies. To become a privateer in this business takes a lot of guts and a lot of risk. But it takes collaboration and a different type of collaboration. In this room, I've got some of my customers here as well. And it takes that collaboration for them to see what we were committing to in terms of the initial investment. We had taken the investment already, had started to build the project, but didn't necessarily have all of the offtake that we needed. And through us taking the initial steps, those customers came to the party and undertook their steps and their commitments to allow us to actually move forward and start delivering product to them. But it is collaboration, and talking to your point on pricing and how do we recover that type of investment. Again, our customers are faced with challenges. They've got existing businesses that are running on a mix of energy. Those energy mixes are varied, and they are also coming to an end of life on certain components of them. There's other pressures like climate change requirements and commitments that do force transitions to other fuels. From our perspective, we produce LNG. We're simply looking to transition more expensive fuels where possible onto our product, so it becomes an economic incentive for our customers. But there is a thing. In time, LNG, in my opinion, will become a premium fuel just because of the climate benefits. But the South African market is not ready to accept that yet. And so for now, in order to manage that, we've got to be pragmatic and manage our requirements and ensure that we have returns for our shareholders.
Thank you for that. During networking, I think you must connect. Let's take two questions.
Yeah, a quick one, thanks. On these debates that I had between Bongani and Eddie,
Are we not dealing with a paradox here? That actually you need to be able to do both because they may not all happen at the same time. You may need to deal with the LNG in certain, because your geography and where the gas is found requires you in certain instances to do that, but you then need to advance the development of those domestic gas projects, which over time will then feed into that. I mean, I'm not dealing with that, so I'm not having a false debate here on that. Then the second one related. So I'm sorry, Bongani, I'm gonna sit on you on this one. You are the closest to a policymaker in this instance. Maybe take us to a confidence about. You mentioned the fashion that Rupada discovered, the 3.4 TCF, whatever you said. But the critical issue is we know that that negotiation process failed, where some of us sit. All of the policy levers to unlock it were sitting in the state, whether it's on the licensing for the production itself or enabling a route to market through the offtake. I'm not excusing the private party where we're trying to get more money. That's not where I am. So as government sat down and said, this is where we think we did not do this right. And if we have to do it again, this is how we'll do it differently to make sure it succeeds. So that it shortens the timelines that Eddie was talking about. And gives you a best case example of how you can do it.
Two questions there, but let's have another set here.
Thanks. You said, question, are we not our own worst enemies? In that foreign companies do not invest in South Africa because, yeah, they see too much risk or something's not right. Because there was the World Public Discovery, Total pulled out. There's a lot of drilling in Namibia. Total and a whole lot of people are drilling in Namibia, but then on the South African side of the border, there's very little drilling. But I understand the geology is actually better, there's potentially better reserves on the South African side. So why are international companies being chased away?
So we've got 3 minutes to answer 3 questions. I want to take another question from anyone. Just another question. There's a hand. Okay.
Thank you. My question is around being pragmatic around this. We're seeing that in 2026, clients of ours in the industrial base don't know what they're going to do about their gas supply. And that means that projects we're taking to funders now are getting a red flag on what's the price point, can margins take the increase, what's happening, and how our business is going to continue from 2026. And there's a gap. There's a gap we need to fill. My question would be, how do we fill that gap, understanding that we do want to localize? How does this gap get filled in a short-term basis, imports? How do we create import contracts that allow us to lever opportunities for imports turned into localization? Thank you.
Because you called me by name, you will not give it to you later. Please ask your question and then the candidates will answer.
Thank you very much. My name is Kgosientso Mabotsa from NEFCO. But I think there's 2 narratives here. One blue-eyed and one black-eyed. And one is the liberal one. One addresses the issue of transformation. I think the first thing that we want to talk about is how do we enter the market. There's a particular reason why you find French companies having an interest in the country and having our people left out. And I think that the agenda that Bongani is trying to address is the one of redress. And that is the most important point. We are talking about technicalities at a stage where we are fighting about the interests and access to global economies. I think if we can address that from the onset, we can then start moving and speaking on the same level. Thank you very much.
Right, we're going to use the last 3 minutes to give very concise answers to the 4 questions that we have. Let's start with the question that challenges if this is a linear process or if it is a multifaceted process.
So I would like to just kind of bring that together, because I think both of you are saying exactly the same thing, speaking past each other in one or two elements. We do have the discoveries. We have them here, it's certain, it's proven, we know they exist. The time frame to develop them is extensive. And that's not going to meet our gas cliff challenge. It's not going to be done in 3 years' time. If we take the decisions today, it's still not going to be done in 3 years' time. And guess what? We're not going to take the decisions today. There's a lot of it's fact. There's a lot of things that have to come together, and government plays a major role in underpinning that, and we know it takes time. But decisions deferred will determine the extent of when these opportunities come on stream for us, and that's going to be linear for the length of time that it takes to make that decision. So if we can put that back to the Honourable Minister, and I would urge to have a joint discussion with both ministers, because we converge on both of their territories. We need an underpinning from the gas to power program that's going to drive everything that we need to meet import. It's going to unlock offshore on 12A and 12B, 11B, and it's going, and then we need a framework that can ensure that onshore has the ability to supply. And as time goes, all three of these mixes will come into play, but we just have to be cognizant now of it from a planning perspective and make sure we don't lock one of those streams out.
I invite you to answer the question around investments.
Fine. Can we just clarify the question again? Sorry.
So the question has to do with the timeline of determining investments in new projects.
Okay. So I guess it's also a matter of looking at the type of project, because that will drive the timelines. But on an upstream development project, we're looking at 5 to 6 years from discovery to, from FID to first production, to give you an idea. So in that way, yes, we all get too late on that. But I think in terms of what we're talking about now, we have very little time, as you say, to make a decision. And it's not my place to talk about the interim solutions that's currently being discussed in the media. I'm sure all of that will be discussed later. So I'm not at liberty to talk about that. But I want to say I agree with Nick that we can't just focus on one side of this. It's not either or. We need to look at the long-term plan to come up with the best economic mix to address our country's energy needs. And whether it's pipe gas, whether it's LNG, whether it's regional pipe gas or domestic gas from different sources, we cannot focus on just one. There's challenges in terms of long-term contracts that needs to be signed, and if this one is signed, then that one has got less of a chance to move forward. But we need to look at the bigger picture as an industry as a whole to see what is going to be the best thing in the end for South Africans.
Dr. Bokani, can I invite you to address the inclusive sector participation that was raised by the gentleman from Ramokgopa? How do we embed inclusivity and equity right at the beginning of formulating policies that develop markets for these projects?
Okay, I would actually like to address Mr. Kgosientso's question.
Yeah.
It's fine. Yeah. And I'm at pains not to address again. The timelines, if everything is done right, you can actually move from a discovery to production within 3 to 5 years. I think Paul of Standard Bank will tell you in Guyana, they took 3 years to 5 years to produce, and Guyana is producing. In Ghana, they took 3 years to produce. So yes, maybe the South African realities may be different, but in terms of the international upstream petroleum sector, you can move from discovery to production within a 3-year to a 5-year timeline. In terms of inclusivity, we President enacted a new law, Upstream Petroleum Resources Development Act, October last year. Related regulations have been gazetted 14 April, so last month, which will give effect, or at least will enable the president to proclaim that law in effect. That law affirms the need for black participation, or at least opening up the sector to a diverse participation path. It specifically provides for the participation by blacks and entrance in terms of that in the petroleum sector. So it has a clear focus in terms of transforming the sector. So that's the inclusivity we're talking about.
Thank you. Ladies and gentlemen, let's give my panel a round of applause. Thank you, Program Director, for indulging us with an additional 5 minutes between an excellent panel and an excellent audience. Thank you so much.
Thank you. Thank you very much. Can you use the sorry, Dr. Mongani, can we exchange numbers during tea and lunch? You must also get my number. Eh? All right. I'm gonna allow 15 minutes short break. Yes, 15 minutes short break. You can go outside and grab tea and come back at 11:10. Please do it. Sure. Yeah, please just try to sort it out. I'm going to now. All right, sure.
Please remove Tembeka's PC.
Wait.
Stop sharing.
This is
1612 to be a little bit less serious and imagine you are hiking in your favorite mountain range. And maybe it is in the Drakensberg. Some of our panel members are keen hikers. And you are walking with your eyes totally open. It's a beautiful, clear day, and you're walking straight to the cliff. Well, this is not a metaphor. We've heard already today that South Africa is facing a natural gas cliff. In less than 3 years, our natural gas supply from Mozambique will dry up dramatically or drop dramatically. And our conversation in this session is very much circled then, what are the challenges and opportunities when it comes to the midstream? My name is Marissa Fai. I am a lecturer at the Africa Energy Leadership Center. Delighted to be here with you today. And my career prior to joining Wits Business School was spent in industry, working on strategy, innovation, planning and optimization, and have had in that capacity exposure to the natural gas environment as well. So just to give a little bit more background. So as our legacy fields in Mozambique go into decline, the only imminent viable option is LNG imports. But the question is, will they happen at all, given that we know the price is likely to be double what we pay in South Africa today? Yet, despite multiple master plans, strategies, and policy statements, as well as deliberations in the business community, we have yet to see any tangible investment decisions. So midstream infrastructure is the artery of any gas economy. It connects supply to demand, and it includes two fundamental elements: import terminals and pipelines. Without them, gas is stranded, and so is industrial activity, energy security, and grid resilience. In today's session, we look at the challenges, opportunities, and solutions through this critical midstream lens. Okay, so the real question that we're tackling today is, how can this be done in time? We are not really debating whether we need natural gas as a stopgap or an LNG import. So to frame our conversation, I have two questions for our panel members. The first is, why are we struggling to reach financial close on strategic midstream projects like Mothala or Richards Bay? And what will it take to shift from plans to pipelines? And secondly, given the regulatory offtake and infrastructure gaps, and imagine here, again, you have your magic wand. What is one critical thing that must change in the next 12 months to make these projects bankable and real? So colleagues, let's move beyond position papers and into the realm of practical possibility. So it's now my pleasure to introduce the distinguished panelists who bring deep insight, lived experience, and a healthy dose of pragmatism to today's conversation. Okay. On my left, Mr. Yuri Swart, CEO of Gigajoule Group. So Yuri leads Gigajoule, an energy infrastructure company focused on clean energy investments across the region. Gigajoule, together with Total Energies and Mothala Gas Company, is a key shareholder in Belulane Gas Company, BGC, the entity holding the concession to develop and operate the LNG import terminal at the port of Mothala, near Maputo. So Yuri began his career as a civil engineer before transitioning into infrastructure finance, including time at Africa Infrastructure Investment Managers, and his career spans both the technical and the financial dimensions of energy delivery. I asked Yuri for a fun fact, and he shared with me that he's the CEO of Gigajoule, but he is the deputy CEO of his household. Then I'll move to Kgosientso. Okay, so Mr. Kgosientso is the head of business development at Transnet Pipelines. Kgosientso has more than 25 years of experience in freight logistics. He's a seasoned executive specializing in strategic business development projects, project sector partnerships, leading stakeholder management, both locally and within Africa in various commodity sectors, most relevant oil and gas today. Kgosientso holds a BCom in accounting science from UNISA, a business management diploma from RAL, and has completed several other executive leadership programs. Kgosientso is passionate about inclusive growth in the energy sector, and he's dedicated to building and mentoring high-performance teams. He enjoyed outdoor pursuits, including cycling and hiking. Moving on to Oliver Naidu, President of Vopak South Africa. Oliver is a project owner for the Zululand Energy Terminal at Richards Bay. He brings over 2 decades of experience from Sasol, where he held several senior leadership and director level positions. He started his career at Eskom, Tutuka Power Station, and is a qualified chemical engineer with business degrees to match, a BCom and an MBA. Outside of his corporate work, Oliver volunteers as a lecturer at the Marketplace Institute and is also a certified John Maxwell speaker and mentor. And in his leisure, he loves to cook and play the piano. So, and lastly, I'd like to welcome Mr. Craig Morkel, Chairperson, South African Oil and Gas Alliance, or SAOGA. So I loved looking Craig up on LinkedIn because he describes himself as an energy enthusiast, and his track record proves it. He is a rare combination of public service, business leadership, and regulatory expertise to the table. A former member of parliament and now the CEO of Ikapa Energy, Craig chairs SAGOA's Gas Economy Leadership Team, co-chairs the Energy and Digital Economy Focus Group of the Eastern Cape Premier's Investment Council, and continues to advocate for a competitive, inclusive, and future-ready gas sector in South Africa. So on that note, I'm going to hand over to our speakers. They will each have 5 minutes, 7 minutes to tell us the critical points that they like to convey today with regards to the challenges and opportunities. And our questions are asked them around what's the problem with bankability, and the magic 1 question, if you can change 1 thing in the next year. After that, we will transition into taking questions from the floor. And I encourage you to ask difficult questions. After all, you all heard this fantastic titles, CEOs, presidents, and directors. So I'm sure they can deal with difficult questions. So on that note, I hand over to you.
Thank you. I want to start by, good morning, everybody. Good morning, Prof. Thanks to Bongani, everyone else has been welcomed and thanked. I want to start by rebasing and just restocking on the key point here. And the key point to me is Africa and South Africa has this marvelous demographic dividend relative to all other economies in the world, where most of our large economies are suffering from population decline, and we're looking seriously on the up. However, that comes with a huge catch, and that is that we've got this massive unemployed youth base. And what are we really talking about here? We're talking about getting an economy going, that there's access to energy in a greater sense than lighting and cooking, etc., that there's access to energy to enable our economy to grow so that we can get our youth to have meaning in their life. That's really the key point of what we're boxing here today. So we need to get a vibrant SA gas industry going. What do we need to get that going? We need a liquid market. We need a portfolio of supply points, and we need to grow the network. We need to grow an integrated network. And that network is going to be applicable whether we're standing in the LNG corner, as I am, no doubt, or whether we're standing in the domestic gas corner. We need that integrated network to grow, and we need to start somewhere. So to that point, I want to make two key points. Ebi spoke of seeing the gas cliff in 2008. In our case, 2012, it became a stark reality looking at reserve reports, knowing that it's coming. So in terms of being a gas supplier in Mozambique, we said we need to solve a problem for our customers. It's coming. And that was the inception of Matola. And Matola has grown in time then to be, a logical and key contributor to saving the gas cliff to South Africa. But that doesn't mean Matola is the only terminal and the only terminal that can make a plan. And this is the key thing, that there's these LNG import terminals and domestic gas supply points are not mutually exclusive. We need all of them ultimately to get this gas industry going. The gas cliff per se has been the catalyst. It's suddenly woken everyone up to the fact that, guys, there's limited life left here. And it's only been the kickstarter to get this gas industry going. But and I think this is something we've got to get out of the corner of. We need to support that project first, because that project needs to get, everybody's got their own sort of incentive to back certain projects. And we need to broaden that thinking. And because as Paul, you've been quoted a couple of times this morning, and he's pointed out, if everything comes on stream, it's still not going to be enough. The second point I want to make is that, we talk about the long-term view that needs to be taken. In our instance, we're saying you need to take a medium-term view at best here. 10 to 15 years is the view that needs to be taken to get something off the ground to save the gas cliff. A 10 to 15-year view gets LNG off the ground. 10 to 15 years is absolutely nothing in the life of an economy. And we may say that domestic gas can be developed in the next 3 to 5 years, but unfortunately the track record is that it hasn't been developed in the next 3 to 5 years. But if something gets going, that there's a network there, then if domestic gas does have the imperative and get off the ground, just plug in. It will be used. It will come. So in terms of developing this liquid market, there's a couple of challenges. I know we want to be solution-driven, but there's a couple of challenges that we need to be cognizant of. The first thing is that everyone is chasing programs that are just not getting off the ground. We need a key bankable offtake, and that can come from two places today. There's an existing third-party gas user market, and there's gas to power. We are chasing a program that's just not happening, and we need some action in that, with regards to the program. Secondly, for the third-party gas market, and I'm now talking about just that initial offtake that we require to get projects across the line. We're all chasing the same group, and there's a whole lot of double counting in the system. We, for example, are well placed to service the Gauteng and Mpumalanga market. Richards Bay is well placed to service KZN market. But we get lost in the debate. Ultimately, we all need a large enough offtake to get this across the line, and gas to power has to play its role there. Unfortunately, to kickstart this, gas to power has to play the role. We are completely confident that the pent-up market will come along. We've been a completely gas-starved market, so there's been no access to gas for industrial users. Once it starts flowing, that market will come out of the woodwork. But for that initial offtake, gas to power has to play its role. Now, with regards to gas to power, I think to date, the renewables, and everybody in this room is a renewables supporter. I mean, there's no one here who will say to you that we should not be doing renewables. But the renewables debate has very much dominated discourse. And it's only recently, and it's very encouraging signs now. We saw the ministers, honorable ministers, present address this morning. There's encouraging signs now that the role of gas to power and the importance thereof is well appreciated. If we take the recent Spain-Portugal blackout, it's interesting there that the role of nuclear was shut down because of the danger when the grid got knocked down. The black start came from hydro and gas to power. So, was that finished or one more minute?
30 seconds now.
So I think just further, the small challenges that we have faced is that Pandit Amani precedent has in many ways made it very difficult because it's just been so easy for people to turn a tap on an extremely cheap gas. LNG, and I would venture to say, you know, that should not be the benchmark for other domestic gas. It will be more expensive as well than the existing Pandit Amani gas. LNG is not well understood. There's a need for guarantees, which has never been before in the third-party market. And what we do require is we need just a little bit of government support. We're not saying that government needs to underwrite these projects completely. We're not in that box at all. But we need some government support. And that, to me, comes back again to the gas to power thing. If government can get the gas to power across the line, the gas industry will start flourishing and grow. Thank you.
Thank you, Yuri. And you touched on a number of vital points. Key that I think we take note of is the need for gas to power to undermine supply and to give that offtake certainty.
For day one.
For day one. And I think the second point that you raised is it is also about taking a shorter to medium term view. Given that we have to be action focused, that also makes a lot of sense. Our order was to hand over to Oliver now. So, Creason, I'll skip you.
Nope.
And Oliver, please tell us more.
Thank you, Marista, and thanks to the Wits Business School, Maurice, Priscilla, David, and the team for allowing us the opportunity, and thank you for the invite. I think from what I want to touch on is probably just give context where we are of what's happening at Richards Bay and be practical on timelines. And because I think it's important that we understand the rhythm and the sequence of how we get to the pegs in the ground. The first thing to touch upon that makes a project like this successful is firstly, you need an anchor customer. We launched the expression of interest. We had more than 20 plus potential customers that started off on the expression. We then launched the RFP, and that also was a large number of customers that put their hands up and said, we are interested, we want to be a customer at the Richards Bay Zululand Energy Terminal. And then as we go into the process now, we're down to a few. And we right now in the process to finalize what we call the heads of agreement. Let me just explain just a quick recap on how the commercials will work. You will have a heads of agreement that you will sign in terms of the customers coming and say, this is the term, this is the volume, and this is the condition precedents that we're going to put. You will then use that heads of agreement, which us as shareholders will then to make a feed decision. We now probably in the next 2 to 3 months, we plan to complete the heads of agreement. And by the end of the year, we plan to launch feed. And that is a statement that we must be strong on. We are shareholders, and that's Vopak South Africa with TPL as the Zululand Energy Terminal shareholder structure. If you don't announce a signal into the market, I think we're all going to be sitting around here and waiting for something to happen. So we're very committed to announce very soon, if all goes well. Some of our key customers are in the room here, and we're finalizing that decision. So that's the first one to get the heads of agreement, launch your feed. From feed to the FID, we plan to take around 12 months. okay? So now I'm being tangible. What does it mean? So at the back end of next year, we should be announcing an FID. The previous speakers here, spoke about, hey, when's the FID? Who's making calls? What's tangible? I'm from the Zululand Energy Terminal side, making a statement. Our projection is to launch the FID. We would then, the project is designed so that it's in 2 phases. The first phase, which will be an FSU, will be at least about 2 years before we have commercial operation, okay? So that takes us somewhere around 2028. It's more or less in the timeline where the gas cliff discussion was taking place. It's more or less in the timeline for the Eskom discussion in terms of what's happening with the megawatts. And very critical for us, the decision we're going to make is, are we launching a phase 1 and a phase 2 decision simultaneously? Phase 2 is an onshore tank. It's a 220,000 cubic meter tank. And then you'll have an onshore facility. So let me give you some numbers. The phase 1, we want to have a regas capacity of 3 million tons per annum, which is about 150 petajoules. We then will move on to phase 2 with onshore, which is about 4.5. It's about 225 petajoules per annum. And we also have plans to move right up to phase 3 on the second tank, which will then be about 9 million tons per annum, which is about just over 450 petajoules per annum. Now that's the numbers. We have to know the numbers. We have to understand the capacity that what we can design. And that goes into the FEED decision of how we then get to the engineering side of that. So that's quickly on how the terminal look, what are the numbers, how do we make this? What are the other things that you need to focus on? The most important thing here is an integrated project schedule. We have TNPA on the port side. We have Zululand Energy Terminal, which is Vopak South Africa, and TPL on the terminal. Christian will talk about the Lily pipeline that has to come on the other side. There's a schedule there. Gas to power, Eskom is in the room, the 3 gigawatts. There's a schedule that's coming there. The IPP office, I'm assuming someone's there from the IPP office. The announcements of the bid that has to take place of 2 gigawatts in Richards Bay, there's a schedule that has to come in. We have to work with NERSA in terms of our tariffs and the policy and the regulation. That's a schedule that has to come in. Richards Bay, IDZ, there's a schedule that has to come in, and I can go on. There's a lot of schedules coming here. So if you're asking, are we schedule driven? Yes, we are schedule driven. Now, I'm trying to make it practical because there's a rhythm, there's a timing here that has to be fully acknowledged. And that schedule is right now, we are busy integrating it. Apart from the integrated project schedule that brings all the challenges, because all of these needs to have an aligned FID. I cannot take from us as Zululand Energy Terminal, and Eskom doesn't take the FID at the same time, together what's happening with other stakeholders, okay? So you got to align this FID. In the midst of all of this, you got governance. We got all boards to report to. I have a board which has a rhythm. State-owned organization, which is Creason on the TPL side. Eskom is in the room. They have a board that they have to go through. Now you're going to get all of these meetings, diaries, governance, all of this. So that's a challenge, but I think it's an opportunity. And I'll touch on the last point, Minister. I just want to touch on the leadership part. Because the governance of this has to align, the mandates has to align, and obviously government plays a critical role here in terms of how the ministries will have to support. Because what we do know, there's a peg in the ground. Now, that is not going to move. So actually, we're working from a peg in the ground, working backwards. And it gets to a point that if you don't make decisions at a certain point in time, you're at a point of no return. So, I mean, this is, from an engineering mindset, it's a simple maths problem. The last thing I want to touch upon, which 2 things. One is on leadership.
One.
Can I touch on one? So let me leave the leadership part. Let me touch on the community. Because in the midst of all of this, we have an opportunity for socio-economic development. Richards Bay is not going to be the same, right? Eskom project is a huge project on the gas to power. Terminal side, yes, we have a project. We're talking how we're going to set up the procurement structures. We're talking about localization. We're talking about skills development. We're talking about setting up maintenance strategies to enable industries that's going to be in Richards Bay. When you look at it just not from a technical project of bringing gas into the country, you would have to couple up with the socioeconomic impact that this is going to have. And I'll stop there because I think I'll probably get a few questions on this.
Thank you, Oliver. And I love the way that you also bring us back to the socio-economic realities and the pragmatism around. It's not just one project that needs to go through all these gates and schedules, but it is combined projects over multiple role players. So a big challenge, but that's why we have this conversation today. Handing over to you, Kgosientso.
Thank you, Marista. Good morning, distinguished guests, colleagues, partners, customers, and potential customers. I think in one way or another, just about every company in the room is a customer of Transnet. And thank you, Prof. Maurice, for inviting us as Transnet. I think from an LNG perspective, we have two key strategic projects. The Lily Pipeline Repurposing Project that we've been asked to share some insight on, and Zululand Energy Terminal, of which we a minority shareholder, a 25% shareholder. So the order was correct to get the president vote back, 75% majority to go first. So all of the difficult questions pertaining to Oliver will handle. And to Mr. Werner's point, as state-owned company Transnet in the LNG space, we definitely have a lot of skin in the game with these two key projects that we've embarked on. I think what's important to maybe just touch on is Transnet has developed what we call a R4G strategy, which was just shared internally yesterday. In terms of responding to the dynamic environment, Transnet has developed the Reinvent for Growth strategy, which aims to recover and transform for future sustainability. In essence, focusing on three key pillars. One, fix and optimize the business. Operations tactical focus on recovery volume plans, improving execution rates, etc., across the business. Transforming the business predominantly on the rail side. The split that we saw with ports 25 years ago, split PortNet into Port Authority and port terminals, is happening on the rail side. It started late last year with Transnet Rail Infrastructure Manager, the infrastructure company, and the operating company. So that split will gain momentum and more traction as we go forward. And grow the business, expansionary. Growth through enhanced delivery in key segments, and it exactly talks to the gas in the energy space in terms of leveraging on private sector partnerships, in terms of capital, technical expertise, operational expertise in various aspects of the supply chain. So hence, as state, we really, across all sectors, we leveraging on the private sector in that regard. In terms of the Lily Pipeline, it's important to note that it's a 1969 line. It's a crude oil line that runs from Secunda down to Empangeni to Durban. It's 16-inch at the top, Secunda to Ngogo, which is near Newcastle, and 18-inch throughout. So what are we doing? Remember, this line was converted to methane-rich gas in the late 90s. So phase one of the project, we've got engineering consultants appointed that's working with our teams, is largely fit for purpose integrity study to extend the life of the line. It's serving existing customers, IGOA, all of the Sasol customers, etc., all of the industrial gas users with existing sustainable businesses. And of course, I think you've heard on various platforms the concerns linked to the gas cliff from all of the industrial gas users in terms of sustainability. You're talking Toyota, Mondi, Sappi, breweries, glass manufacturing, mining houses, thousands of people employed with contributions to GDP, etc. Phase two phase one also would look at the reversal when Richards Bay has commercial operation date. Empangeni would be the intake station. The 20-kilometer line would be constructed, which is part of the terminal project from the port to Empangeni, and reversal of the flow. Right. And phase 2 is capacity upgrade in the sense of the Lily does have just 23 petajoule capacity as we sit today. So it's not sufficient to supply zone 1, zone 2 on the inland side. So we would need compressor stations. At least 3 compressor stations we envisage at this stage on the northern leg, which really is the challenge on that regard is the lead time on those compressor stations. They all, at this stage, all of our inquiries, etc., they all will have to be built abroad, and it's long lead times, up to 12 to 18 months for each one. Okay, so what we have done is we concluded an expression of interest process late last year. We had a RFP process for capacity reservation in the Lily, which closed on the 14th of April, and we're currently busy evaluating. There's significant interest from both local gas users, global players, industrial gas users, gas to power plants, brownfields as well as greenfields. And so these heads of agreements that we will conclude with successful parties would really inform what we need to capacitate for. And of course, gas transportation agreements would follow with the successful parties. In terms of risks and challenges, gas to power development largely dependent on the terminals taking FID. I think on the positive, engagement platforms have been established with the relevant parties, within states, within IPP, within ESCOM, etc. And I think positive media reports of recent in terms of load factors being increased, I think that's a step in the right direction. In terms of the dependencies, I think we heard it in the previous panel, concluding the gas sales agreements between buyer and seller of the molecule of the gas. And the bridging plan, I think, announced by Sasol, 2028 and 2030. I see Sasol's on one of the panels. Hopefully we'll get some further insight in terms of that. Of course, in terms of the way forward, to the extent that there's an energy crisis, midstream collaboration is imperative. We're not competitors, we agreed to collaborate, especially in areas where market overlaps. Okay, thanks, Melissa.
Thank you, Kgosientso. So a couple of unique thoughts that you shared with us, and really interesting to hear about the progress on the Lily pipeline and this point around the need for collaboration and again, underpinning the recurring theme that we need market certainty and offtake agreements. On that note, over to Craig.
Thank you, Marista. Thank you so far for the panel, for sharing your insights with us. And certainly for me, there's a lot of new information, and I need to say thank you to you for that. Colleagues, thank you to the Wits Business School, the African Energy Leadership Center for hosting this once again. It's not the first time we are in this room for many of us. And so it may sound like a bit of a repeat from previous conversations, but I think it's necessary to just reflect for a moment where we've been in terms of the context, so that we can define some challenges, opportunities, and solutions as requested. Behind me, you will see an infographic. It's not clear. We'll distribute it. The first time one of our colleagues saw it, they asked me, "Do you play Candy Crush?" I said, "No, I don't. It's a gateway to gambling, right? And I don't like gambling." So this doesn't represent a gamble. This represents some scenarios that includes the various scale and timing of gas, in particular LNG, starting on the far left with small-scale LNG that assumes that the LNG has been put into containers at an LNG export terminal, which is just crazy, right? Everybody knows that. But let's put it in there as an option, that there might be several LNG export terminals where containers could be filled and delivered to any port as if it is container freight of any other type. Right? It can then go onto road or rail from there. The second column represents something similar to what we call a virtual LNG pipeline, where like our friends in the terminal business, they would have some storage facility, you decant it from there into a container, and the container is then delivered like any other freight to any destination, where it would then also be regasified and consumed. The medium LNG import scenario there in the middle is what we understand to be Zululand energy terminals configuration options. One is a FSRU and pipeline, but also space for reloading LNG into containers for delivery beyond the reach of the pipeline. And then the rest is fairly the same. I'm not going to go into large scale because it is already described FSRU and pipeline, but I want to jump very quickly to regional gas and indigenous gas, where there are opportunities to certainly liquefy at the wellhead in the region or domestic gas at some point in the future, right? Depending on upstream and what they do in terms of timing and scale. There is already examples, Religion is an example where there is small-scale liquefaction capabilities designed into the project, and other wellheads can go through that similar process, liquefaction at wellhead, off to market, and then regas and utilization there. Why is this important? We need to get to the level of collaboration in an appropriate forum where we go through this exercise. So what is feasible for corridor A, corridor B, corridor C? What might work in Richards Bay might not work at Kruger or Mossel Bay, might not work at Cape Town, might not work at Saldanha Bay. And so we need, I propose that we need to have a national forum, and we need to look at corridor fora for each one, where we can define and negotiate and coordinate and sync up ultimately financial close, FID financial close. Right? Because if we don't do that, we will have the situation that we presently have, where Eskom releases an RFP for gas supply to Unkellig and Gorikwa, but Transnet at Saldanha and Mossel Bay have not put out any RFP for any terminal. I mean, it's putting the cart before the horse, right? Right? Yet we need it. And believe me, there's a forum in which Eskom and Transnet sit. So what have they been talking about? Sorry, you know, it baffles. It really baffles. Now, we've heard feedback that some of the colleagues from both parties, there's no single party to blame. Some of the colleagues are too junior. Some of the colleagues don't bring the feedback from their principals at the next meeting. Some very basic things that drag these processes out unnecessarily. Unnecessarily. Right? PNPA released a request for information for small and mid-scale LNG at the end of 2022, with responses due at the end of February 2023-24. What did that imply? It encouraged people to think maybe they're going to release an RFP. Where is the RFP? Right?
Break.
There are some of us who've been waiting. 1 minute. Thank you. I want to tell you now that that was drafted in 2012. Wow. I'm not an engineer, but that was drafted in 2012. And the questions that we asked back then have not been answered yet. There were heads of agreements, term sheet for LNG supply, vessels procured in anticipation of an RFP in 2015, 2014 by the IPP office. It's all gone. It has to all be rebuilt. Right? So colleagues, you share my frustration. We can talk about this later, but I believe that there needs to be an appropriate forum for each corridor where LNG imports is an issue. And then we need to look at our domestic gas, regional gas, and say, how do we coordinate our activities and look at the focus groups that are required in there, technical, financial, legal and regulatory, socioeconomic development, etc., are very important. Fiscal impacts from LNG is negative. Fiscal impact of indigenous gas is significantly positive. And that's the lesson from Guyana. That's the lesson coming from Namibia. You're going to see them driving Bentleys there very soon. Very soon. Right? Paul and I have a joke with a colleague in Namibia. We call it the Bentley Index. Right? It's a, thank you. Thank you for indulging me. Thank you.
Thank you, Craig. So I think all of us are very curious what the Bentley Index is, but I'm sure Craig will help us understand that in the break. Craig, I think you brought a fresh perspective and really a few interesting points. You're the first person who maybe puts the elephant in the room, the fiscus, and what can the fiscus really underwrite, and what is the net impact of the various solutions. You also remind us that we often make plans and they kind of go nowhere. And it linked for me to a topic that I didn't allow Oliver to really go into, but it was around leadership. What is the leadership that we, and let's not look at other people, but what is the leadership that we embody and that we bring to this conversation to move from plans to pipelines and projects? So on that note, a thank you to our panel members for planting a few seeds. I'd now like to invite 3 questions from the floor. We have 10 minutes, so let's get a few batches of questions, 3 questions at a time, and we'll endeavor to answer that.
In Parliament, they would call it sweetheart questions.
And we'll first take the 3 questions, and then we'll, as I say, do it in batches.
Thank you. Eva Fabris from Natural Gas. And I think this is for Oliver and our colleague from Transnet. The reversal of the Lily line, as well as the upgrade of the Lily line from a capacity perspective, has been somewhat of a sore point from various parties who have various ideas as to which way the gas should be flowing. So I'm just wondering if you're able to get feedback as to what the idea is. Is the idea still to reverse the Lily line from Richards Bay to Secunda, or whether that idea has been canned for other reasons, where there's other parties that want the direction to remain the same? Thank you.
Okay.
Good morning, colleagues. Mine is not a question per se. Just referring to what our first speaker mentioned when he, in his one of his lines, he'll correct me if maybe I was wrong. Okay, I put it. So he mentioned, one of his lines mentioned that in the room we are all pro renewables. And I don't know, it's fortunate or unfortunate, I may be the only nuclear physicist here. But for me, I think for us to be able to solve the current energy crises that we are facing as a country, we don't have to look at who is pro what. However, we must look at what is feasible for our country or our region. And maybe later the WBS can have a setting like this in a bigger room where we can discuss such like take into account the resources we have, the infrastructure, skills, etc. And I also thought maybe there's other reason that our government is unable to make decision on the just energy transition, because everyone, if I'm pro-nuclear, I'll say this is the answer, and then someone who is renewable will say this is. I think we need to come to one room, all of us, where we discuss what is feasible for the country and then how all of us can move forward. Thank you.
Alison, we have a question in the front here.
Shall I try without a microphone?
I think you can.
Okay, yeah. Question to the panel. I think this is also about exchanging knowledge and data in this forum. Thank you. I think it would be good if collectively you could give the audience an indication of what type of capital requirements you all talk about these projects, because we heard, and it's all in rand, so you can multiply it by 20 if you go to dollars, or divide by 20, somewhere around. But it is the scale of the investment needed compared to, for instance, the GDP. It would be good if you get some insights just from the midstream.
Fabulous. So we have a challenging question from Ebby, who makes sure that we all are on our toes. The nuclear physicist lady, I think you made more of a statement that we can all agree that it is not a one-dimensional conversation. And I want to bring it back to the leadership topic. At the end of the day, we also need to trust and create the leadership backbone that we can move forward and make decisions. For today's conversation, let's focus the conversation more on the imminent resolve that is required to move natural gas forward, to really drive our economy. We all know energy is the backbone of the economy. So then I'll hand over to you, Kgosientso, first, if you'll comment on the Lily pipeline.
Okay. Okay, thanks for the question. I think it's important to note that the reversal of the Lily pipeline is part of the pre-feasibility study of phase 1, right? In terms of what's required. That's the engineering study. And another fact is, as we said today, there's 23 petajoule capacity on the northern leg between Empangeni and Secunda. So what does this mean in terms of additional capacity? At least as a minimum, right? So that will entail at least 3 compressor stations along that northern leg. So the other option that the market in Gauteng and those inland areas will consider is, of course, Ramokgopa, that has sufficient capacity in terms of the line already being capacitated. I think it's up to 8 to 10 times more capacity. So this is where collaboration becomes key. If we need to build those compressor stations and create the capacity, it'll be more a security of supply imperative. If for whatever reason something happens on the Mozambique side or cross-border risks, et cetera, et cetera. So it'll be largely predicated on that unless we get firm commitment from the customer base for that. Okay, so collaboration becomes key, especially in markets where we overlap, the northern markets. Okay, thank you.
If I just paraphrase it, the jury is still out on whether the Lily pipeline will be reversed, and it's pending at the end of the day how the demand patterns and offtake.
Correct. It'll be dependent on once Richards Bay has commercial operation date, the Lily pipeline will be reversed. Okay.
Good. Thank you. We need to answer Ebby's question, and then Alison, we will start moving to the front and take the next batch of questions in a moment. So everybody has access to the internet, so I'm not going to endeavor remembering from my MBA days what South Africa's GDP is. I think I have a fair idea, but maybe somebody in the audience wants to give us the latest up-to-date number. So 7 trillion rands. Okay. So can we divide that by 20 and we make it $350 million? $billion. Gosh, that would have been a big mistake. $350 billion. So On that note, I'm going to first invite you, Yuri, to comment on what size of capital we're looking at. And Oliver, I think you can also weigh in. And of course, orders of magnitude is fine.
Would you mind if I answer the nuclear physics lady? So, because I think the statement or rhetorical statement you were making, and the point I was making with regards to renewables dominating the room, is that the effect thereof was to say all this other stuff is way too expensive, right? Because renewables is so dirt cheap, and actually a balanced view has not been taken. And in that process, for some reason, it became the dialogue that, in my instance, and I've got my corner, you know, which is gas to power, you've got your corner, which is nuclear. But in our instance, the cost, and we've got, you know, we've been through feed studies on our terminal, and we've been through feed on our power station. And the gas to power, if you look at high mid-merit and base load, is going to be below megaflex at commercial operation date. So it's in the economic ballpark, if I can call it that. And that's really the point I was trying to make, that, you know, it gets lost in this everything is more expensive than renewables, but we need all of them to play their role, whether it be in a base load or high mid-merit, which we need to get these projects across the line, is our view, or whether it be in a peaking capacity, where, of course, there will be a higher tariff, but it has its own benefits to coexist with renewables, etc. So your question, Abby, I think we must just be a little bit careful in how we answer it, because everyone has its own unique quirks. Because, of course, if you've got an FSRU and it's a rented FSRU, the capex number I'm going to give you is lower than if you're building, you know, onshore capacity. But in our instance, and I'm also going to talk ballpark here, but these are ballparks from detailed feed studies where you've got class 3 engineering inputs, is in the region of $700 to $750 million from terminal all the way through to Romco. So I'm including both terminal and pipeline. So times by 20, so 15 billion rand. Ballpark.
You want me to?
Yes, I just, sorry, I might have missed it, but you're not including anything on the gas to power side there?
No, that's
that
just
is for your
an import terminal with the ability to plug into the existing network. In our instance, that's Romco. And as I say, in our instance, that's an FSRU solution.
Thank you, Yuri. Please,
Yeah, Minister, we'll be in a similar ballpark. You know, it's $700 million USD plus. I think I just want to contextualize, maybe just to add something, Abby, to what you asked, but maybe put it in context. The capital spend is directly linked into the tariff that you would give the customer, right? The tariff is directly linked to how you're then going to assess your bankability and get to your lenders and to understand. I think to contextualize, Abby, and maybe for the entire forum, as a terminal developer, we normally take the execution risk, but the customer takes the market risk. And the market risk linked to the capital that we spend, which is a pass on, obviously NERSA assesses that, and that's a tariff that will be passed on. And I think it's an important thing to understand that we're not dealing with small amounts of money. You know, you're spending in rand terms in excess of 12 billion, 15 billion. If I take gas to power, it'll be probably 4 to 5 times the amount of what the terminal is going to spend. So that's a huge amount of money. So Melissa, when you look at this, and Paul is probably going to talk about it later. I mean, Paul is directly with us as the advisor to Zululand Energy Terminal. The challenge that you then ultimately face with the huge amount of capital, the tariff that you're going to then pass on, and the bottom line is the customer at the back end is going to get a full pass through that is going to end. So you got the affordability of this. So we're talking huge amounts of money. We're talking big investment decisions, and we're talking risk exposure that is balanced between performance risk and market risk.
Thank you, Oliver.
But the equally relevant question to what Debbie's asked is the CapEx and then the volume. Because of course you can bank anything if there's someone out there willing to pay yay amount for their gas. But you know, as you increase volume, you're able to offer a far more competitive tariff. So it's really that level that becomes important.
I'm under pressure here, but are we going to take two more questions? Priscilla has a question. Can we just get the mic here, please? Then.
Thanks for those insights. Oliver, this is directly to you. Thanks for sharing the specific timelines, because I think this is what we're hoping to get out of today. What I missed out of the many schedules you spoke about is the aggregator role. It's one thing, I don't see Eskom being an aggregator. Who is that aggregator, and what right, the molecules and the risk associated with that? So Marissa, to the two partners here, we're quiet about the South African power pool's role in gas to power. Why are we all targeting the South African market and not necessarily thinking about the role of the Southern Africa power pool to anchor another gas to power in Mozambique, which then ensure that we diversify our risk of supply?
Thank you, Priscilla. And we'll take a last, it's very, very good question. And I actually want to ask all the panel members in the next round, we'll close out. So in your closing remarks, to consider the last two questions and a closing statement, please.
Thank you, and great discussion. Just a key question around the integration and the various projects attached to it. So you're on your key project, you're aiming for a feed to be completed by the end of next year. If we then look at the integration components and those projects that are related to it to underpin, call it the bankability of the entire group being feasible, do we need all of those projects to be completed at the same time before those molecules can flow? And if so, then what is the expected timelines on some of those associated scopes of work that we're talking about? And I'm just trying to figure out whether the 2 years to achieve 28 is actually going to be feasible if we're talking about a large-scale gas-to-power program that underpins it, and what those components are in terms of construction.
I can answer.
Thank you. I'm going to ask you all to consider these last two questions and what your closing remark. Remember, I gave you a magic wand at the beginning of the conversation, and then so 30 seconds per person to close out. Thank you. We'll start with you.
Okay.
We'll reverse the
Let me
order.
sweep a few issues across the three questions. I think the one on the nuclear physicist, absolutely, we're part of an energy mix. The prioritization of what's in the mix is a balancing act between energy security, affordability, environmental sustainability. But I think the two issues that are under assessed, including by our energy planners, and this is no direct attack on anyone in the room here, we need to really consider the socioeconomic impact as part of our modeling, not just afterthoughts, and the fiscal impact. So that is key. When we talk about a model, it cannot just be the techno-economics, as if we're only talking about gas to power, with 68% of our final energy consumption in the country is non-electrical energy. Missing the point.
Thank you, Craig.
I think let me just answer Priscilla. So we had an open bid process on the customers, right? Those that responded as the customers, I mean, obviously Eskom is a key player in there, but not all of them can meet the financial requirements of your customer credit support for the 20-25 years. So where we are at present, the FSU, if you go with the FSU, we'll have preferably one customer, at most two, because it's challenging to run an FSU with more than 2 customers. And in the mix, we're in the final stages now to get those responses from the customers. And, you know, I cannot force that from a governance perspective or what happens to which customer, but I think just like it will naturally come to the table of who will meet the requirements and who will not. So it is going to be a challenge. If it's one customer, the one customer will be the aggregator. If it's 2 customers, you're going to have an interloan agreement on the FSU between customer A and customer B, and it depends which one of them is going to play the aggregator, one for the gas to power and one for the industrial. But we can talk about that later. The other one on your comment on that, yes, you're right. So a critical decision that we have, Nick, is that should you skip the FSU and go straight onto onshore? Because then you can synchronize the large gas to power FID and the long lead times on the combined cycle turbine and the transformer that will match the schedule. So that means I can stretch it out. Or I take the risk together with the shareholders to say, we will go with the FSU and look at Eskom on a phased 1 unit first, take the demand on the industrial, switch across some of the other customers on the Lily. So that is a critical point for us, and it's a tough decision that we've got to make in taking that risk of do phase 1 alone or jump to phase 2 directly. That answers you.
Sorry, Marista, Dr. Naidu, you've got 1 minute to go to SABC and attend to some of the questions.
I leave there.
We'll excuse Oliver. Preet, will you take the baton, please?
Yes, thanks, Minister. I think from an aggregator role, from a pipeline perspective, as I indicated, we're busy evaluating the RFP submissions. And I think similar to the expression of interest process, capacity has been significantly oversubscribed. And it'll come out in the wash through the process of heads of agreements in terms of reservation securities and so forth. But of course, all of that is on the back of conclusion of gas sales agreements. That really informs concluding these infrastructure agreements on our end. And from a timeline perspective, yes, our timelines are aligned to that of Zululand Energy Terminal. Of course, we've got skin in the game on that side. And yeah, at least phase 1, given that bulk of the volume from Zululand Energy Terminal would feed into the Richards Bay IDZ for the gas to power requirements. Okay. But there again, collaboration is key for anything additional in the Northern market. Okay.
Thank you. Yuri.
Nick, I'm going to start with yours. I mean, with regards to feed studies, environmentals, concessioning, etc., everything's there, everything's complete. For us, it's a commercial synchronization at the end of the day. And it shouldn't be that tricky, because actually one can take a view that once you know that the offtake's there, it doesn't need to be there on day 1 of commercial operation date, as long as you know that it is contracted. Brazil is an interesting question, because we've really looked at, because to be frank, the SA market was sort of up and down in its response over time. And I think you've experienced that in your former guys as well. The SADC market will definitely come. Where we're standing, Mozambique is kind of energy secure and has got a little bit of extra life beyond the gas cliff as we know it in South Africa. So it's a South African problem in the first instance that we're trying to solve. Now, to get the necessary offtake, you look at the SADC market. The maximum that you can get at the moment up to from our terminal up to Zambia and onwards into the DRC, where there's a huge energy requirement, is 400 megawatts via Botswana. So there's a transmission issue in getting energy to the greater SADC region. Of course, there are other bits and pieces that one can pick up. Eswatini looking to be more independent, 200 odd megawatts there, but it's just not enough to solve the total offtake requirement. If you look at what we need to get across the line to get South Africa out of this gas cliff issue.
On that note, I think we might not have answered all the questions 100% to satisfaction. I do look forward to later conversations where we'll we do plan to talk more about the gas aggregator role, but that is a critical element, and it's again not about having the dreams and plans, but about that balance sheet and the bankability. So in that, I'd like to thank our panelists, give them a round of applause.
Thank you. Thank you, Marista and her panel. We are running behind in terms of time, so we're quickly going to try and move to the next session with the theme Challenges, Opportunities and Solutions for the Oil and Gas in the Downstream View. We're going to request Prof. Jones, Ode Mensa, Wayne, Eva, Yaku, Sarushan.
How about Aubrey? Aubrey?
And Aubrey. Aubrey Mzobe.
Aubrey here. There he is. I'll keep it very short and sweet and fast. Now I'm cutting some out. All right. Good afternoon, ladies and gentlemen, distinguished guests, and industry leaders.
Just remain
here.
Silent, please.
Your lawyers are. All right, good afternoon once again. My name is Jones Ode Mensa. I'm a professor of economics and finance at the Wits Business School, and your moderator for today's downstream focused session on the challenges and opportunities, as well as the solutions for South Africa's oil and gas sector, the downstream view. So our discussion is going to cover everything from the refinery gate right through to the pump and factory burner tape. So far, we've had robust discussions on the upstream view and the downstream view, and hopefully we are going to do the same for the downstream view. And let me just remind us of why we are here. The gas cliff warning. As we are all aware, natural gas underpins critical industries, from petrochemicals, steel, glass, ceramics, automotive, food, processing, and pulp and paper. Yet we rely almost entirely on Mozambique's Pande Temane fields. As we've heard so far, those reserves are dwindling and likely to be exhausted by 2026, creating a looming gas cliff that, if unaddressed, could imperil over 50,000, and I repeat, 50,000 downstream jobs and undermine industrial continuity. And we all know that, well, burning gas emits roughly half the CO2 per unit of electricity compared to coal. And this fast ramping capability makes it an essential complement to wind and solar. However, experts also caution that the prolonged reliance risks locking in fossil infrastructure and delaying the shift to renewables. Why this symposium? So today's gathering is a timely call for us to move the debate to tangible strategies. We will tackle a number of things: policy uncertainty, financing models, regulatory bottlenecks, and so on. And these are large, long lead projects without immediate commitment. So against this backdrop, I'm joined by 5 experts here who patrol every corner of the downstream value chain. We have here Wayne Kgosientso, who is the CEO of Flexible Energy Development. We have Eva Fabrice, Stakeholder Engagement and Regulatory Affairs Manager, Igoli Gas. We have Yako Human, who is the CEO of Industrial Gas Users Association, SA. We also have Aubrey Mzobe, who is the ESCOM GM for gas portfolio. And finally, Dr. Sharushen Pillay, who is Sasol's Executive Vice President, Business Building, Strategy, and Tech. So to begin, I'd like to give each of them the opportunity to share their opening comments on the topic at hand, the challenges, opportunities, and solutions for South Africa's oil and gas downstream. We will capture their headline answers, then dig deep into convergences and tensions, and finally we'll open up to the audience to also make some inputs. So maybe I will start with Wayne. Wayne Glossop, let's start where your expertise leads us.
Thank you very much, and pleasure to be here. Solo, thank you very much for the opportunity. Wayne Glossop, I am the CEO of Flexed, or Flexible Energy Developments, and we are basically a power developer of flexible technologies that enable the sustained development of renewable energy on the power system. Is this okay? Yeah. The world is changing. The power world is changing. The notion and the traditional energy security formula of baseload plus mid-merit plus peaking is dying. And the world is changing to a simpler equation, but more complex equation of renewables plus flexibility equals energy security. And within that energy security bubble, there are many technologies in there that can fill that role. We focus on 3 technologies, batteries, gas, and pump storage. We see those 3 being the most competitive, viable, commercially proven, large-scale technologies today. Our flagship project is known as KFP, or Kgosientso Flex Power. This is a 1,000 megawatt gas IPP, a phased development located just outside Malelane in Mpumalanga. And it's conveniently located 100 meters away from the Ronco pipeline and 100 meters away from the main Eskom grid. We've been working tirelessly for the last year and very proud to say that today the project enjoys secured land, gas access, grid access, environmental authorization approval, and strategic infrastructure project classification. And you know how long it took us to get to that point? 1 year. Mm-hmm. So it's possible to get these projects off the ground. I'll talk about the concern shortly. But as part of our investigations, we've gone deep into how to make this project work under the gas IPP program. Now, I don't know how familiar you are with that program, but basically it's a program that calls for 2 gigawatts of flexible gas power generation across the country, of projects between 300 megawatts and 1,000 megawatts. So the first phase of our project is targeted for that program, and we've developed it in line with those program requirements. And we've studied in depth how to achieve flexible gas to flexible power. We've got the right flexible technology. We've studied the gas flow dynamics. We've understood the contracting mechanisms between the gas supply, the gas transportation, and the power plant technology and the PPA requirements. And I can tell you unequivocally today, it is possible to do flexible gas to power projects. It's commercially, technically possible to do that if you have a will to do that. Now, we were told to bring concerns to this discussion. So I've got 2 concerns. They both stem from the statements that were made by the minister on Monday. And there was a sweeping policy statement to say all gas must be above 50% capacity factor. And we can appreciate where that's coming from. But the first issue we take with that is, I'm a power system engineer, ex-WBS power system engineer. And I've worked on hundreds of power system models. And in none of those models do you see a sustained use of gas power at more than 50% capacity factor ever. Renewables is too cheap. When you run gas at those kind of load factors, you're displacing renewable energy, and that costs the power system dearly. And that impacts all of us and the end tariff ultimately. So was there an analysis behind that 50%? Did we understand what the tariff impact would be? And also keep in mind that that statement flies completely in the face of what the ILP says. The ILP 2019, the official ILP today, talks about a 12% capacity factor. 12% for the ILP, the program calls for 25 to 65, and now suddenly you've got this out of nowhere statement, policy statement saying 50% plus. Issue number one. Issue number two, as an investor, I mean, we've pumped millions into this project. And we're having serious deja vu because those of you who have been in previous gas power procurement or the risk mitigation procurement process, you'll have PTSD like I do, where, you know, even after the rules have been laid out, the rules keep changing along the way. And we've seen that again with the current gas program. It's been delayed, and there's all these changes that are expected to happen, and we're concerned about the nature of those changes. And in our view, if there is a change to 50% in this tender, that's a material change. That changes the design, it changes the characteristics of the project and the original intent of that program. So those are our two concerns. I'm going to suggest a solution as well. And the solution is quite simple. We fully appreciate that there's a need to aggregate volumes to anchor infrastructure, LNG terminals and things like that. Not all the gas projects need to be anchors. Ring-fence those anchors, identify them, develop them, but let the rest of the power plants provide the much-needed flexibility that Eskom needs to keep the lights going sustainably and effectively, cost-effectively, so that we can all benefit from the cheap cost of renewable energy at the end of the day. So that's my position. Thank you. I don't know if there was 6 minutes.
Thank you very much. Thank you very much, Wayne. Jaco, would you share your views with us?
Thank you very much for this opportunity. I want to just make one opening remark before I get stuck. And I want to go back to a phone conversation that Prof. Radebe and I had earlier in the year. And I said to Prof, you know what, we are battling like hell, all right? We cannot continue on the basis that we do, all right? We are running into an economic catastrophe. He said, leave it with me, I'll call you back, all right? And Truesbop, a week later, he called me back and he said, listen, let's organize this day. And we are delighted to be here. And this is not just a talk shop, we hope. Prof. Radebe and I have got a beer waiver in terms of actions. So we will see where we end up, hopefully. Let me make some opening remarks from a downstream perspective. These are the people that pay or transfer or do the EFTs at the end of the day for the gas, right? And we are now in a world where we're transitioning as a country to more gas energy. It is clear. The debate seems to have been settled. Every year we look at demand numbers from an industrial perspective for the country, and the number just keeps going up. Right now, we're using about 180 petajoules of gas in this country, mainly between industrial users and, of course, Sasol as the two-thirds user in that context. Now, if you take the recent policy statements around the IRP, the ambitions of government in terms of gas to power, the private parties coming on, we're looking at 1,000 petajoules of gas before 2030. That's from 180 to 1,000 petajoules of gas. Power likely to take up 600 of that, industry about 400. If you include Petro SA, there's about 75 petajoules. It is a significant energy shift in the landscape in South Africa. Just to quote the Minister of Energy in Qatar, and also recently echoed by our Minister of Energy, is gas is not the transition fuel. Today, it is our destination. So industry resonates with this increased gas purely because it provides stability. It provides us with the load that we need to fire our plants, our furnaces, our chemical operations. But we're also aligned with less coal and more renewables. Let's not forget that. But, here's the big but. We're not prepared for the shift. Not today. We have material domestic gas resources. We have none of that at the moment. There's small players, but not if you look at the 1,000 petajoules of gas coming into the system in the next 15 years or so. We don't have midstream infrastructure to meet this demand. And of course, we've got this gas cliff hanging like a sword over our heads at this point in time. Eskom is planning to reduce power from coal. Something needs to fill those boots together with renewable energy. So we're behind on transactional frameworks, we're behind on investment decisions, and of course, emergency supply options. But it is also true that there is a rare opportunity here. This is a national economic risk. Of course it is. We've communicated that, and we're all aware of that. But we also see a once-in-a-lifetime generational opportunity here. Imagine coal in the 1950s, how it industrialized South Africa. I think we can do the exact same this century with gas, without a doubt. So the failure to act right now, number one, if we don't, first and foremost, we've got to avoid the gas cliff. Otherwise, we can all pack up and go home. Right? It's as simple as that. That means a 600 billion rand GDP. It's roughly about almost 10% of our GDP, right, is at risk today. If we don't exploit domestic resources and rely on imported LNG going forward, assume we cover the gas cliff, we're looking at an additional cost of 100 billion rand a year to the economy by relying. That is the importance of domestic gas in our economy today. It's 100 billion rand a year. And that's just the price differential on gas, let alone the access to gas energy and the economic growth and industrialization that will bring. Now, 4 immediate opportunities right now that we see from an industrial perspective. We have to sort out the marketplace. I think there were references to aggregation and these kind of things. Industry is moving fast ahead in terms of the establishment of a company called Gas Hub, where industrial players are coming together to say, we're pooling our volumes and we're bringing, to the extent that we can, our muscle to the table in order to facilitate these investments. We have to address the market. There are only 3 large consumers: industry, Sasol, and of course Eskom. Those are the only 3 large, and of course independent power. I'm talking Eskom electricity space. But that's the market. We need to sort out the marketplace. The aggregation question is extremely, extremely important. Lastly, the next one, the second point, very, very important. We have to bring in this LNG bridge. It is absolutely critical. It was mentioned here by our upstream colleagues earlier today that we're too late. I think you made the point. We're way too late, right? So we're reliant on LNG at least for the next 20, 25 years. Now, coupled to that, and this is where Mozambique and the Richards Bay is key in whatever plans we've got for the East Coast, the West Coast, and so on. But we have to start urgently with a domestic play right now. And this is where West Coast gas, in our opinion, from an industrial perspective, is going to fire the economy long term. If we get that right, remember the economic numbers I quoted just now, that's the opportunity for us. So for us right now, and this is my beer waiver with Prof. Radebe here, is we got to create this particular think tank across these gas disciplines that you see here today. Upstream, midstream, downstream, regulatory and legal, environmental, politically and social, and absolutely important, financial. It is the disciplines within that context which is going to solve this problem for us. And we hope that our honorable minister is listening to us today as an outcome of this particular think tank that we have in mind. We've got to work these problems across these disciplines. I do believe right now, today, our problem is midstream. We've covered upstream. We know the gas is there. We heard it. The gas is there. Right? The demand is there. We see it in the numbers, 1,000 petajoules by the end of 2030s. The midstream portion, that is the missing link. And I believe the key to unlocking that is simply the financial instruments. Because at the moment, we're looking at each other and say, but who's going to take the risk in this? We've got to collectively, between the state and the private sector, look at this in order to unlock these developments. Do you know what it costs in terms of guarantees, to put guarantees on the table, to enter into a 15-year LNG contract with the LNG terminal, performance guarantees, the banks requires, the lenders, everyone, $600 million. That's the guarantee. Never mind the cost of the LNG and that sits in the price. That's easy. But for you to get out of the station, we've got to write a check, or we've got to put our balance sheets on the table for $600 million. Now, if you look at midstream developments, we anticipate an investment of about $7.5 billion to meet all these plans that we've got. So how do we move forward? If you can just give me 1 minute. I think the policy task ahead is simply in the next couple of months, we've got to first and foremost avoid the gas cliff. We've got to focus on the financial instruments around that, the risk, the midstream problem that I've just spoken about. So, and of course, we've got to work these problems longer term, the medium term problems and challenges and opportunities. We've got to bring this think tank together. So where do we start? I think this symposium will trigger the ministry to take the leadership and the government to take the leadership to say, listen, let's bring these gas disciplines together and around the table. We don't need it. South Africa's gas future is not anymore about if, right? It is about how on gas. It reminds me of ex-President Mbeki recently that said, we certainly don't need more plans in this country, right? We need to execute. So hopefully we can get there. Thank you very much.
Thank you very much, Jaco. And so that reminder that gas is no longer the transition, but the destination. On that note, I will hand over to Eva. We've got your presentation ready as well.
Yes, thank you. I'm seen to be the only presenter that has a presentation. But what I wanted to say today, I think requires a little bit of illustration. And so from an Egoli gas perspective, my company started in 1892, so we're over 100 years old. We've been supplying gas in the streets of Johannesburg to domestic customers. We have 6,500 of those, to industrial customers, to restaurants, to just about anybody needing energy. We've been supplying them. So as gas suppliers go, you can imagine that I'm stakeholder relations. I have 8,500 people that I need to look into their eyes and tell them we're doing our best and I think we're okay. That's what I need to be able to say to them. And I'm going to tell you now today why I think we're okay. So, Egoli Gas started producing its own, was producing its own gas in Kgosientso. We stopped that and became a Sasol customer in 1992. So that's how long the relationship has been. In 92, we were purchasing what's called hydrogen-rich gas from them, which is coal-based gas manufactured in Sasolburg. In 2004, we converted to natural gas with them. So now I understand the gas cliff, but from a small supplier like ourselves, not that small in numbers, because I don't think any other supplier has 8,500 customers. But there you go, Jaco. I've mentioned you in my presentation. The gas cliff is this impending gas shortage, right? And as far as I can remember, and anybody here is welcome to correct me, but I remember the engineering news article, and it was Jaco. And I'll tell you exactly when that was too, because I have a little timeline coming up, that Jaco mentioned gas cliff, and thank goodness he did. because it's resulted in sessions like this, but it's resulted in a whole lot of other stuff, because that was quite some time back, if you remember. So it highlighted the urgency. So here's my timeline. I know it's very small, but I'll talk you through it very quickly. Okay, so in March 2004, now this is from Igoli, right? Igoli's perspective. This is the journey we've taken, me, myself, and I, 25 years. And some of you might be looking at me and going, you've been around for 25 years. Why is there a gas cliff, right? Here's why. So in March 2004, like I said, we switched from hydrogen-rich gas. We switched to natural gas at a pricing mechanism that was called the market value pricing. Now, that is on NERSA's website. The basis of that pricing was whatever the customer's alternative was at 8%. Roundabout, okay? Don't quote me on that. But that was the theory. It was based on the customer's alternative. Then, April 2014, now 10 years have gone by. Sasol's been supplying for 10 years. It's allowed them to recoup their infrastructure, their investment. So NERSA's pricing kicks in. We call it methodology 1 now. At the time, it was the methodology. So methodology 1 kicks in. And methodology 1, thank you, Yaku, is a methodology based on a basket of indicators. So there's a little bit of coal in there, there's some electricity, there's LPG, there's diesel, there's all the sort of alternatives that if there wasn't gas, what would people be using, right? So, and then that went on for quite some time until Iguasa went to court about it. And so NERSA had to change because it was an irrational pricing mechanism, if you think about it. Why are we pricing gas according to the diesel price? And so Sasol implements methodology 2. Then it was also the methodology, thinking we'd stop there. Their methodology took on an international hub approach. So we were looking at gas hubs in the Netherlands, the UK, and the US. And literally, as Sasol implemented, September 2021, you see, as they implemented it, the gas prices started to shoot up in Europe. Why? Not enough wind, not enough sun. So the renewables let them down. And then the very next year, Russia invaded Ukraine. So that pricing mechanism literally priced itself out of the market entirely. Then in November 2021, we get a meeting with Sasol. Sorry. This is our history. Lots has changed at Sasol since this happened, let me just say. But in 2021, we had a visit. And in that visit, something we'd already known and suspected and we were worried about was confirmed. And these guys showed us a diagram. In that diagram, there was the drop-off of the PPA gas, which is the Pandetimani gas we're currently getting. And that drop-off starts into 2024, which is exactly right, which is exactly what has happened. We even got notice last year from Sasol to say they had to beg, borrow, steal some PSA gas from the Mozambicans, which raised our gas price slightly because they're short of about 13 petajoules already due to this PPA gas running out. So then we had our first meeting. It was a scary meeting, but it wasn't scary to the point of like, you know, the end is nigh, abandon all hope kind of meeting. It was, but Sasol's on board, we're here, and we're gonna help you, and we're gonna look at this together. We're gonna collaborate, right? And then I have a nice red dot. September 2023, there's a big write-up there too. We had a visit from another team at Sasol. That team came to us to say, Sasol's done its calculations. It cannot afford to use LNG in its own production facilities. So Sasol being the largest user of gas in South Africa, and we're talking about 110 petajoules of the 180, that they cannot take that 110 and afford LNG prices because it will price them out of the market. They cannot make liquid fuels. They cannot use that price. So the plan was this. They needed to transition external users off of Pandentamani gas, and they will keep producing at Sasolburg and Secunda with the Pandentamani gas.
Eva, 1 minute.
Sorry. So we fondly call this meeting the every man for himself meeting. And also the originator of Yaku's gas cliff. That's why it's a nice red dot. After that, we had a year. In that year, we didn't sit around. We're South Africans. We don't sit around. In that year, we made plans. We made a lot of plans, right? August 2024, Sasol comes back to us and they say, okay, no, actually, they're now re-looking at being an LNG aggregator. December 2024, they then have, they explained to us a lot of plans that they have of expediting FID on some of their plateau extension projects. They're acknowledging the fact that there are a lot of customers that are interested in LNG and they want to be the aggregator. In 2024, we call it the aggregator year because Yaku and Iguasa put forward their intention to be an aggregator as well as Springlights Gas. So that was 2024. We now have them wanting to be the aggregator, but then also saying to us, there is no way, there is just zero way that LNG is going to come to South Africa by mid-2028, and that is their deadline. So from mid-2028, what they're proposing is to manufacture synthetic gas, what we call methane-rich gas, that goes to KZN, it goes to Witbank Middelburg, and that's going to be our bridging fuel, right? So the bridging fuel will be up till July 2030, at which point we should have regasified LNG from the most common ports we currently have, which is Richards Bay and Matola. If we can go to the next slide, please.
Keep it very short for us.
This is my slide. There isn't a gas cliff. The end users and the resellers, we were there in 2023. We're not there now. We have a bridging fuel, but also 2024 was the year of aggregation announcements. 2025 is going to be the year where, in that year where we sat thinking we're all on our own, every man for himself, we made plans. 2025 is the time when those plans will be announced. So along with the MRG from Sasol, there's a lot more, and I promise you this. So that'll all be coming out soon. And that was the end of my presentation. Thank you.
Thank you very much. An interesting historical account of the interaction with Sasol. Maybe it's a time for Sasol to come in here.
Yeah. No, and thanks, Eva, for telling our story so well. Right?
Can I just say, Sarushan was not there at all. It was an entirely different crowd.
And it's so nice to be here and see so many. I mean, Eva was also a Sasol person at one point. So many in the audience are Sasol people, and they say once your blood turns blue, it stays blue, right? So yeah. But thanks, Prof, for arranging this. I think one of the important points that all of you are making is the importance of the dialogue, the collaboration, and understanding the needs of the market, right? A couple of points that I just want to land. One thing is clear, you've said it, the gas from southern Mozambique is in decline, right? It started in 2024. We've undertaken numerous projects to try and extend that life of the supply, extra compressors in the well, re-injecting into the well, but you're really trying to squeeze the last few drops of a finite natural resource and extend that life, right? And we've done that in the attempt to buy us some time so that we can develop alternate solutions. We certainly see the potential for South Africa's. Can you hear me? Okay. All right. Yeah, so we certainly see the potential for a big gas market in South Africa. I mean, there's no mature power market where gas to power doesn't play a significant role. The industrial users and certainly us. I mean, we've got serious investments, Sasolburg and Secunda, that could use gas, right? So we see the role for gas in the economy. And we would love to see the domestic gas come to market, right? I mean, we would be one of the first people to put up our hands. But we can't see that coming to a reality in the timelines that we're talking about. So it will happen, it must happen, but not in the timelines. So that leaves us with a timing problem, right? And you heard the complex solutions that Oliver and Yuri and Kgosientso described, right? This is not going to be something that is a very easy solution to implement. But the only solution to the problem in the short to the medium term is LNG that comes into the country. There's no way that we're going to get through this bridge without LNG. And we've seen markets that have an over-reliance on one or two sources. I mean, South Africa has had only Mozambique as a source. We've seen Europe with just a reliance on Russia. And you need a diversified market. So you need a mix of imported gas, domestic gas, and that will help balance the mix, right? So LNG is the only feasible solution in the short to medium term. But now, you know, when Oliver has said that we schedule driven, right? When you hear a project manager saying you schedule driven, because a project is either cost driven or schedule driven, that means you're going to pay for it, right? And that's why we've come up with this alternative, right? Because if you look at it, I mean, the terminal is a complex operation, the FSRU, the gas to power, the reversal of the Lily line, all these moving parts to get that all lined up and to hit June 2028 or August is going to be a mammoth ask. So that's where we came up with this solution to work with the customers in collaboration to say, okay, we'll sacrifice some of the, like we used to do in Sasolburg, the coal-based gas that we produce in Secunda and make that available to the market. Now, this is not an indefinite solution, right? This just buys us some time so that we're not boxed into unrealistic, where we have to pay exorbitant costs to secure a gas turbine, or we have to really get into a bad deal because we are faced with a timing crunch, right? So this gives us quite an important lever that allows us to get the best deal for the country. Because what we're doing here is certainly in the country's best interest, right? And this is where I'm about to hand over to my colleague here, working with Eskom, because when we brought the gas in from southern Mozambique, Sasol provided that anchor demand. We used it ourselves. And to bring in gas is a scale game. You will need an anchor demand. And that's why we're working so closely now with Eskom, because the timing of that gas to power is super critical. And I understand gas will have to be flexible, right? But you will need a base anchor demand of 2 to 3 million tons. Oliver will know what's the minimum volume that makes a terminal viable, that makes a gas supply agreement viable. I mean, Yuri, we're all talking in the same ballpark range. And that's where, you need an anchor with a high capacity factor that can bring that gas in, right? And then on the back of that, you use that to then also supply the market, right? And it creates that security. It creates that impetus then where the customers like the Egoli gases can now commit to, we've got security for 15 years. We know there's at least this amount of gas. We can keep our network alive, and customers can plan for that kind of horizon, right? But the last thing that this also provides is flexibility, right? I spoke about us getting the best deal. We're working with a number of LNG suppliers, and we believe that this optionality now will allow us to get the best deal. So let me hand over to Aubrey, because I think, as I said, the gas to power is the critical anchor that then unlocks this market going forward.
Thank you, Dr. Pillay. Aubrey, take us through.
Yeah, thanks, Sarashan, and thanks to to you, sir, and greetings to everyone. From the position of ESCOM, we basically concur with the minister's assertion this morning and a few times that we've engaged with the minister, that the time is now for us to solve, in fact, to prevent a gas crisis from happening. When we met with the minister in October of last year in an urgent session that he arranged, he said that he was called by the president to say, you have solved for the load shedding crisis, but crisis number 2 must not happen. So the gas crisis must be prevented at all costs, but obviously doing things right to make sure that we're not exposed from the risks that are associated with gas, as we all know. So I thought I will start with that. So ESCOM is basically serious about developing and executing the gas to power projects at speed and without cutting corners or without compromising on risk from a funding point of view and from an investment point of view. So we're going to apply, and we are applying the lessons learned from the ESCOM new build program, which included the building of the OCGT plants, the Ankerleg and Kgosientso, those diesel plants, the building of Ingula, the building of Medupi and Kutsile. So we've got tough lessons that we've learned across that new build program. And this is what we're bringing into the party. So the gas to power technology is a new technology in ESCOM. ESCOM has never, in the more than 100 years of ESCOM, we have never been involved in the building of gas to power plants. So this is new to ESCOM, but we are committed to working with gas experts in the market, and I will talk about the issue of Sasol as well, and so that we successfully deliver on these massive gas to power projects, which I'll list just now. But the expertise that we have in abundance in ESCOM is the ability to operate and maintain a gas power plant, because the operation and maintenance of Ankerleg and Kgosientso is no different to the maintenance of a gas to power plant. So the O&M side of managing gas to power plants, we are not in short supply of that expertise. So what will success look like for us in terms of the gas to power plant is basically smart front-end loading. We've learned with the new build, as I've articulated earlier, we need to make sure that we make smart strategic decisions up front before we put the first peg on the ground. Those decisions include commercial decisions, all the front-end enabling agreements. And I'll just talk now about how we're working with VOPEC in terms of that HOA that Oliver spoke about, so that we deliver these gas to power projects at a scale and at a pace that the country can afford, so that the landed price, the biggest success of the gas to power portfolio, the definition of it is the landed price of electricity and of gas to the end user and to the end consumer has to be competitive and has to be affordable. So all those decisions that we're going to make in the upstream, midstream, and downstream are critical, because in the end, we need to be able to come up with an electricity price and a landed gas price that will be affordable and will make business sense to the like of Egoli Gas and many other players and people in this room. So that at the same time, it doesn't exacerbate or worsen what we're currently seeing, where 25% of the economy, the poorest of the poor, are not able to access electricity because of unaffordability. So in short, the gas opportunities that we are busy developing are to solve a number of things. One, the electricity deficit of 6 to 8 gigawatts, by 2030 because we're going to be decommissioning that amount of gas power plants because of our emissions control. Gas supply security deficit of 60 to 75 petajoules by 2030. Drive the energy mix of net zero emissions by 2050. And also the gas is not replacing coal. And that's the message that gas is basically providing us and the country the grid stability that we need, that will support the introduction of renewable energy projects. Because renewable energy projects in their nature, because of their intermittentness, we need that stability. And also it supports the growth in terms of the gas economy. But in short, the list of projects that, that we are developing is, in the short to medium term, it's 5 to 6 gigawatt of gas to power projects, which will be on the other side, on the upside of 100 billion. The first one, front and center, is Richards Bay, 3 gigawatts. That will basically consume 2 million tons of gas, the equivalent of 95 petajoules per annum, at a load factor of 48%. And that plant will be built, the life cycle of that plant will be 25 years. Okay. The second one in the pipeline is basically the diesel to gas conversion of the Ankerleg and Kgorikwa. That will add an additional 884 megawatts to the grid. And the last one, but not least, there's about 7 of them, but because of time.
Make it the last one for us.
It's fine. And then we are working with Sasol. Currently, we are co-developing with Sasol a 1 gigawatt power plant, gas to power plant in Secunda. So in short, it's basically a total that I've just articulated. It's in the region of 5 gigawatts of gas to power plants. And I think I will stop there, but the Richards Bay project has been developed. This is a long game in terms of developing these projects. Richards Bay the development started in 2016. We've now identified the site. It's a 124 hectare site in Richards Bay. We are busy now negotiating the land lease agreement with the IDZ in Richards. It's a good site. It's close to port. It's 10 kilometers from port. And we are busy negotiating the land lease agreement. The pre-feasibility is complete. The concept designs are complete. Somebody asked about schedule. We've got a Section 34 determination that has been approved in 2023 by DMRE. We've got the EIA approvals for the plant as well as the transmission line. And now we have a fully integrated schedule that talks to us delivering first COD, commercial operation of the first unit, by September of 2028. So what the bridging announcement by Sasol just gives us that breathing space to be able to do things right without too much pressure, but it doesn't take away the urgency of delivering the gas to power plant prior to 2030, because if we deliver it close to 2030, we start introducing this gas cliff crisis.
Right.
I'll stop there.
Thank you very much, Aubrey. So interesting perspective so far. In the interest of time, we are going to go straight to the audience and take your comments, questions. We'll have one round of about 4 to 5. And then after that, we'll allow the panelists to share their views on the questions. One hand up there. Anyone else with a question? Second in front. Third. Yeah. First one. So we have 4 so far. 1, 2, 3, 4. And then the final one will be you.
I've got a question for Sasol. Is the intention of Sasol to have equal misery? So when the gas reserves go down, Sasol takes less and the industrial customers get less. My understanding in previous discussions was that Sasol is still looking at it and seeing what should happen. Now, in my mind, it's a conceptual issue of, is there going to be equal misery or not? There's no studies that are needed to do that decision, if there's not going to be equal misery, is Sasol not abusing its monopoly power? And is it consistent with the Gas Act, and is it consistent with the Competition Act? And is it moral? Thanks.
Okay, take the second question. For my chairperson.
Thank you. That's really good progress. But the elephant in the room remains. What is the affordability of the LNG? Because what I worry about is that we have all of these grand plans, then investment decisions have to be made, and they're not made. If there is a gap, what is the request of government? And who's the aggregator? I had three comments. I'm still not so sure if it's Sasol, Eskom, or Igua.
Third question.
Thanks. Mine's more of a statement, not to the panel, but to the policymakers. And Prof. Radebe, we need you to drive it so that we see the actions from this. The bridge must be considered a bridge only, because what we will see and what I'm worried about is that it will become a failure to make a decision and a reason to not make a decision. And that sees us in the same discussions next year and the year after. That's the risk I see with it, but the bridge is welcome.
Yeah. Morning. Good morning. Maybe a question to Sasol. Earlier, as Eva was explaining about every man from himself, but also linking to the comment about affordability and pricing. Early in January, PSA versus PPA pricing. Why should we have fighting in the public domain if we cannot get it straight through the regulator, through NERSA, and just keep the customers that's in the room, just to keep them going, keep them running without any administrative nightmares? Just a question. Thank you.
Final one from the middle.
Thank you. Just one question to the Eskom gentleman, and it's regarding other ports that are regarded as small to medium ports, where there are initiatives that have been looked at by the likes of TNP and other players, with a view to use those ports for LNG projects like imports. And my question is, what is Eskom's role and view on those projects? For example, is Eskom in line or aligned with those initiatives undertaken by the TNPNA? And what gas to power initiatives or projects are then linked to those initiatives? Thank you.
Thank you very much. So we've got 5 questions. 2 are directly to Sasol, 1 to Eskom, and I'll throw the last one to the main panel, which is the affordability of the LNG, who is the aggregator and what follows. So maybe we start with you.
Yeah, I think this is working. Yeah. So I think, I'll touch on a few questions that were raised, because ultimately it talks to how do we solve this in the long term, right? And you've heard engaging in a transparent process, right? The processes that NERSA put in place, we try to be as fair and transparent as possible. But I think what we must understand is that we take substantial risk when we try and extend the life of the fields in Mozambique. We're also doing exploration in Mozambique. We've got acreage in the southern Mozambique. We spend more than R1 billion on just confirming the volumes and developing those fields, right? So with that risk has to come some reward, right? This is a commercial a game that we're playing here, right? But we also understand that it must be done in a way that is equitable and fair to everyone. So that's the engagement that's currently ongoing with NERSA, right? So like you mentioned about the PSA swapping out the molecules, bringing in gas earlier from there. But then, I mean, that gas has been committed. So someone has to now make the power project good later on, right? Now, Priscilla, to your question on the aggregator role and affordability, the simple answer is not everyone can afford this more expensive gas. That is the reality. I mean, we did our assessments, as you pointed out, in 2023, and we can't afford LNG for our own facilities. Some of the products that we make, some players will be able to pass through the costs, right? So if you can pass it through, then you can afford it. But if you can't, then that is not the feedstock for you. So the last question on the aggregator model, we are positioning to play that role, but they're different commercial models. And this timing has allowed us some space to say, do you bring in a partner? Do you, and bringing in a partner, then you share the risk, right? So with the gas to power, you de-risk some of the offtake, but you then will have to give up some of the upside as well. So there are different models that we're considering here, but you certainly need somebody to play that aggregator role. We are positioning for that. I know Igor are also looking at playing that role, but depending on how the commercial model works, either you're going to have to write a $600 million guarantee check, or you're going to have to give some of that upside up.
Okay. Yeah. I'll just touch on the one of the affordability of gas, because 80 to 90% of the business case for the building of a gas to power plant is driven by the price of gas. 80 to 90% is the price of gas. Actually, the building of the power plant, if you like, it's a teacup in the sea compared to the cost of, because you're building a power plant of 25 years. So the CAPEX component, for an example, on Richards Bay, the current estimate, we're talking about 70 to 80 billion, the actual cost of building the power plant. But when you do the maths based on the Lazard studies, simulations, and EPRI studies that we've got as part of our pre-feasibility, we're working on a range of between 10 to 12 USD per gigajoule. You do the maths, that figure comes to a big number, which I don't want to mention to scare people. But in short, the numbers are huge. So we are working with the ministry, with the minister, and we have contributed to an MOU that is currently in place, where there's going to be a country-to-country, if you like, procurement of gas, because it's a volumes game, so that we get the economies of scale, so that when we buy gas from whoever is able to come with terms and conditions that are affordable, we are able to procure gas for the long haul, because we're talking about Richards Bay, we're talking about the gas conversions, we're talking about the repurposing of some of the fleet, the coal fleet that we have, so that when we sign a long-term contract like that, we are able to get those economies of scale. And so those discussions are still underway with the different countries. And I think because it's commercial, I don't think I'm in a position to mention them. But there is a plan, and that plan is driven and is led by the government. Maybe, so I hope I've answered that question. The one on the ports, remember I stopped as I was listing the other projects. So the ones you're interested in, I was still gonna mention them.
Keep it brief for
us. Yeah, very brief. So so we are working with TNPA and ESCO from our side. So there's basically Saldanha, if you like. So there is a gas to power project that is being developed for there. And also there's several coastal projects, gas to power projects in the east and the west coasts, without going into the weeds. So in short, it's going to be the Richards Bay Port, which will be an interim solution to a long-term solution. And the other ports, it will also depend on the different business cases. But there is plans for the other ports, it's not only Richards Bay.
Thank you very much, Aubrey. Unfortunately, that's all time will allow us for, but I believe during the lunch session, the tea session, we'll be able to chit chat more. Oh, very final one from.
So you want to weigh in?
Thank you. So, post my dramatic drawing of there being no gas cliff, I'd just like to add, the reason we're saying that is because we have a whole other problem, and that is gas pricing. As Sarushan has said, the gas landscape, the people that are using gas at the moment are going to not be the same people that are using gas in future because of the price. Those guys that are using gas that cannot afford it in future, what are they going to do? What does everybody think? What fuel are they going to use? High sulfur, mucky, dirty fuel oils and coal. So we are going to take a dramatic step backwards environmentally.
Which is quite scary.
I just want to make comment on the price elasticity of gas, because we understand Sasol's economics, etc. And it's true. I mean, Sasol cannot produce on LNG. It's a completely different ballgame, and it's not sustainable. However, industry is different. What we see in terms of LNG pricing in South Africa is that there are international oil companies that are looking at this market as a strategic move, and they come in with lower prices. There are international oil companies coming into this market saying, I will price LNG at what I can achieve elsewhere in the world, which are generally higher prices, right? Industry has moved furiously over the last 12 months at a commercial level to assess what this market looks like. Ultimately, what we see as a market-related price is anything between $11 and $12 per gigajoule for LNG delivered, all right? This is what the market is telling us today. Now, juxtapose that with domestic gas, because that's the longer-term play, and that's the true focus. Upstream domestic gas, we're looking at $6 to $7, right? That is the reality and the importance. We need LNG, and the East Coast will be an LNG play in future. But we see the West Coast ultimately long-term feeding our gas needs in bulk. So that is important. I just want to conclude then on the very important question that Priscilla asked around why is things not happening? Where are the announcements on this LNG terminal? Industry has not received one comprehensive offer for LNG from anyone, right? So what did industry do? They simply went out and found their own. So right now we've built a wagon. The wagon is called Gas Hub, Pty Limited. It's got a board, and we're now concluding the shareholders' agreements that we fought over the last 9 months. So everyone is on board. Point is that the wagon is built, but we haven't got the safety pin in the axis of that wheel, right? And that is where the financial and the $600 million check needs to come in. And that's why we say that will be the key focus to avoid the gas cliff in the coming months, is how do we structure that guarantee? Thanks.
Thank you very much. A round of applause for our panel members.
Thank you, Prof. Jones. Without further waste much of the time,
Thank you.
I'm gonna call upon Mr. Henry Gilfillan, who's here with his panel to discuss the issues that has to do with the fiscal framework and market mechanism for infrastructure delivery.
That's you.
Oh, yeah. Absolutely.
Yeah, thank you.
Yes, I used to be very much involved with the coal gas.
I know.
You know,
So I
I was
came
a
to that.
shareholder. Yeah, I know the coal gas very well.
Well, you should visit us. You really should. Oh, now.
Take the mic. You speaking. Everybody.
Oh. Yes, please.
Much like you these days, but better than Ross. Johnny Ross. Yeah. Looking at the professionalism. Tastes good. Better than Ross. One like that. Yeah. When you sit, switch it on.
Hi, am I audible? Great. I think we just need to wire up.
Mary had a little lamb.
Okay, I have the unenviable task of moderating a session in a seminar that's already running over time, and we are between you and lunch. So I do promise I will try and get us to lunch by 2. But I would
How's it below you?
some assistance both from our panelists and from all of you. So just to introduce myself, I'm Henry Gilfillan. I'm from a consultancy called Africa International Advisors. We've been doing a lot of the gas consulting over the years. And when I saw Eva's slide, I had many fond memories across that entire timeline. Just to introduce the topic, and what I'll do is, just in the interest of time, I'll just give a very short synopsis of how at least we see the topic, and then I'll just move to the panelists and they can introduce themselves as we move through. There's been a lot of numbers thrown around this morning, and I've sort of been sitting at the back, sort of totting it up. And I've sort of come to a number of anywhere between $15 to $30 billion that we'd be having to invest in associated power infrastructure, pipelines, etc., as a country over the next 10 odd years. So Ebi, I sort of tried to equate that to our GDP. The problem a little bit with that, obviously, GDP is an annual number. We're not going to spend all of this money in one go, but maybe just to contextualize it this way, to this number for gas, for LNG and the associated pipeline, etc., infrastructure, there's all the upstream development that we need to do. Then there's the power lines we need to build. There's all the renewables we want to build. Probably as a country, very rough number, I would think it's not infeasible for us to have to spend 2 to 3% of our GDP every year for the next 20 years on energy infrastructure. And I don't think we've done that as a country, definitely not since we finished with the coal build in the 1980s and 1990s. So the question then is, we've heard about the fact that at least at a sort of a prospective basis, where there's enough gas in the country, there's enough LNG in the world, so supply shouldn't be a problem. We know there's a huge market. The issue is, how do we finance all of this over the next 20, 30 years? So I thought a good place to start in answering that question from a South African perspective is probably to start in India, right? And it's not as counterintuitive as you would think, because I think India is really an interesting case study for South Africa. It's traditionally a very coal-dominated country, a developing country, but also importantly, a country that has become, over the last 20 years, a very significant player in the LNG space, while at the same time maintaining a fairly sizable upstream industry. And so I thought I could start with you, Mr. Kumar, and if you could just firstly introduce yourself, but also just give some background around the Indian experience of what we as South Africa can learn from that. Thank you.
Thank you very much, Henry. My name is Harish Kumar. I'm Deputy Consul General of India. I also happen to be an engineer by education, but a diplomat by profession. So thank you for the introduction. The question of how India built its LNG infrastructure is timely and deeply relevant to South Africa's current energy crossroads. 2 decades ago, India stood exactly where South Africa stands today, faced with rising demand, insufficient domestic gas supply, and industrial anxiety. We too were staring into what you call now a gas cliff. Our industries were nervous, our infrastructure underprepared, and our transition strategy was uncertain. And yet today, India is on a dramatically different trajectory. We are the world's 4th largest LNG importer in the world. We have built 6 LNG terminals with more under construction. We have connected our towns and cities through one nation, one gas grid. We have converted millions of homes to piped natural gas. We have pioneered initiatives to produce bio-CNG from waste. I will also, delve into the gas landscape of India. India, which is currently world's fastest growing economy, has set an ambitious target to increase the share of natural gas in its energy mix to 15% by 2030, up from the currently 6.4%. India's natural gas demand is expected to grow by nearly 60% by 2030, reaching around 103 billion cubic meters annually, driven by city gas distribution, industrial needs, and a recovering power generation sector. This is being pursued through rapid infrastructure expansion, favorable policies, and domestic production increase. So this will be like a recap of what I would like to say.
Thank you very much. I think what is really critical, I think, that I've taken from that is firstly, the integrated gas infrastructure that you've built, which obviously South Africa has got to start in building, but I think there's quite a way to go. So I think the key other point is that this is not an either or, LNG together with the domestic gas sector. If I can move to you, Paul, if I can sort of come from India down to a Southern African view as opposed to a South African view. We'll get to the South African part now, but I think, and we've touched on that already this morning. When I started in this game a number of years ago, Southern Africa outside of Angola was not considered a hydrocarbons hub, and that's completely changed over the last decade with the developments in Mozambique and Namibia. And maybe if you can just sort of bring us up to date in terms of what those developments are, but also really how we as South Africa can learn from our neighbors in the successful development of
Thank you very much, Henry. I'll try and put it in the frame of reference. You mentioned about the money earlier. So I'll try and put it in the frame of reference of the late, great ODB and his song, Got Your Money, from the late 90s. So really the question Henry's asked at the start is where some of the cash flows need to be allocated, LNG in the near term, and then where are the cash flows going to come from in the medium to long term, which is really the upstream. How can the country be self-funding? So three quick examples on Got Your Money. The first one is Mozambique. So next door, I'm flying there later on today. I had to choose to be here today instead of MEC. Mozambique is still underappreciated by South African audiences, just how important it is from a gas lens. First point is by next year, the country should have 38 million tons of LNG under FID or operation, mainly FID. To put it in perspective, that's 1 million barrels of oil equivalent a day. And Mozambique is extremely close to South Africa. So from an LNG point of view, yes, LNG is more expensive than domestic gas, but through portfolio suppliers, if it comes from Mozambique, it's likely to be cheaper than otherwise would be the case. Because the guy who owns LNG in Mozambique has the choice of selling to Asia, which is a lot of shipping costs, or he can sell it down here next door. And down here, which everybody forgets, no matter how many times you say it, is reverse seasonality. When it's cold in South Africa, it's warm in the rest of the world. The rest of the world doesn't need LNG. So Mozambique is extremely important for South Africa and is likely to be one of the main suppliers for Jury's project and Oliver's project as well. But where's the cash going to come from? We all know that LNG costs more than DOM gas. And the answer here is starting to emerge on the West Coast in the case of Namibia. So just to give a few data points, because it's not always well covered in South Africa, Namibia has found 17 successful exploration wells out of 21. 10 production tests have been completed by 4 different operators. Our guess is that the country will be producing oil by 2030, maybe about 300,000 barrels a day from late 2030, and maybe about 700,000 or so from mid-2030s. In many ways, that is the example that South Africa should follow in unlocking its own Orange Basin. And just to put it in perspective, just by the end of 2030, the headline cash flow from Namibia could be about $7.7 billion at $70 oil. In the same year, Mozambique is likely to be $18 billion. So this is the sum of money that's at stake as to how this can be paid for. And then just to finish off the Got Your Money point, and I'm looking at Nick as I say this, is a good example of, it's been mentioned already by the panel, Guyana. And this is really about speed. So Guyana, for those of you who don't know, is the world's fastest growing economy. They made their first discovery 2015, produced 2019. They produced about 650 a day. By the end of this year, it's going to be 900,000 a day. It's going to be 1.7 million barrels a day by the end of the decade. To put it in perspective, South Africa and Guyana had the same GDP in 2019 per capita, about $6,000. Guyana is now $22,000 and climbing. Yes, it's a small economy, but what is the central lesson of Guyana that South Africa can really take on board? It's fast project development. So we've been through a situation where things have not been developed quickly. Ebi gave some great anecdotes, Jaco has as well. But there's a chance now to look at unlocking permitting, unlocking the import projects, such that through the assistance of upstream, the country can be in good economic shape in the 2030s and can establish the got your money dream of ODB. Thanks.
Great, thanks. And I think, Paul, that's, I think the idea of this industry actually being self-financed as opposed to a drain on our capital resources, I think is really important. Keith, if I can come to you and just ask, as a financial institution playing within the South African space, looking to finance this infrastructure, and in your mind, what is missing or what will be required to begin to unlock some of the downstream infrastructure that we need to unlock the import and upstream?
Yeah, and just to position very clearly, so I'm not a resource expert at all. I'm not a gas expert. I'm an infrastructure expert. So we're the guys that are funding the pipelines and what we consider the users of this gas, that would be the gas IPP type programs. So, I mean, to answer your question directly, and there's been a lot of discussion around who are the anchor customers going to be for this gas. We see it very much as a power play initially to anchor the system. For my sins, I've been involved in this industry for the last, I think it's been 15 years when we had the first gas IPP program. Now, what we need is a program. We need a program to run and to be completed. We've now had a second gas IPP program, which to my view, I mean, I'm an expert in the sector, I have not seen any further development on. Where is the procurement of that program? It seems like we develop these programs, but then we do them without doing all the ancillary thinking. It's a gas program. It might be a power program, but it is a primarily gas program. To give you some numbers, the capital, let's say 1,000 megawatt plant, let's call that $1 billion. I think one of the previous speakers mentioned that the actual cost of the gas to supply that $1 billion IPP project is substantially more than that. I'm not convinced that the gas IPP program that we've seen in South Africa has considered the liabilities that sit in the gas chain. We all think about, okay, what's the liability on the capital of the actual power station? But the bigger liability, and what we're not talking about, is in the take or pay volumes, the termination payments, et cetera, that all need to be underpinned by the gas IPP program. So that, I mean, in a nutshell, is what I'm waiting to see to unlock this anchor tenant, which will then unlock the rest of the value chain, in my view.
Thank you. Maybe then just to come to you, Wilson, just on the IDC's role and the role that the IDC has played really as a funder and assisting the development of the domestic sector in South Africa. And really, Paul's touched on that, the issue of permitting in South Africa, some of the challenges with that. In your view, what needs to be done to begin to unlock that permitting and move these projects forward so that you as the IDC can start seeing some return on the investments you've made, but also be able to deploy further capital?
Okay, thanks, Henry, and good day to the audience as well. So I head up the chemicals, medical and industrial mineral products SBU at the IDC, and part of that is oil and gas. And our sort of involvement in gas has not only been in natural gas, but LPG as well. So the terminal in Saldanha, we funded a small terminal in Matola as well, Mozambique. We invested into the syndicated facilities for Mos LNG 1 and also for Rovuma as well as part of IDC. But in terms of domestically, we also got investment in Renogen, and then we're also looking at a project in Amersfoort for natural gas as well. Then some coal-to-bed methane projects as well. But the biggest thing in terms of if you look at the location of, say, if you're talking domestic and onshore gas, you're looking at something like a Renogen or something in Amersfoort, it's very far from markets. So what you need to do is, and this is how we see the market developing, especially for local and onshore gas that we've got currently, is that you need to look at it virtually, build virtual pipelines, and that means moving it on either rail or truck. And then when it's critical mass, and then you can build the infrastructure that Ken is talking to. So it's a very integrated approach as well that needs to be looked at. In terms of permitting and policy, I think that plays a bigger role in terms of, because if you bring in LNG, which will supplement your domestic gas as well, is you have to look at your industrial customers, and maybe Jaco will spoke to that already, is that the industrial customer then has to store the gas, LNG, and they have to regasify. That requires investment on that side. So the government can play a role in terms of how do they incentivize industrial customers to take on gas as well, to move it forward, because it's a volume game. You need to scale up. That's why in terms of just the onshore gas for now, if you look at the quantities, it's very small. It's not big sort of gas. You're talking about between 0.3, 0.5 TCF, which is small in relation to what the country actually needs. The other thing I just want to mention is that, which I didn't hear, maybe it was mentioned earlier, I wasn't here earlier, but if you look at Brillpada offshore gas as well. So that for me is something that has been there. It's been said that there's a lot of TCF that's there that can be used. We've got a Moss gas that is almost defunct for now. You've got Gerikwa that's on the back of that. Why is that not being monetized and helping the country just to get gas off the ground as well? So I just want to leave it there. Thanks.
Yeah, and I think that speaks to certainty of offtake and the program that I think we're touching on, Keith. Maybe if I can, before I open up for the audience, I mean, the elephant in the room here around, the pressure from a decarbonization perspective, and as many of you, the bankers on this panel, sit with the pressure around investing in hydrocarbons and the hydrocarbon value chain. And maybe if you can just give a view in terms of the degree to which you see gas and imported LNG within a South African context detracting or adding to that decarbonization play that you finance.
Maybe
to the extent you.
Let me take this one. I think we are still open as financial institutions in South Africa and on the continent for funding gas businesses. I'm very wary. I mean, I spent 2 years of my life looking to fund a coal-fired power station, and that was fine, and then it wasn't fine. There was just suddenly massive pressure on certainly our institution, and then we just couldn't do it from a policy perspective. So I'm very mindful that we have a window that we've got to actually make hay. There's probably a worse expression, but we got to make this thing happen within the time frame that we've got. We're okay, as I say, for now, but I think we need to tell the story in a positive way. So this is gas investment as a means to decarbonize. And it's a subtle positioning, right? Because we have a just energy transition. We've got a lot of coal infrastructure invested. So we're going to have to actually come to the realization that we need the gas for decarbonization, but it's part of a big story.
Paul, you wanted, and then.
Yeah, just a couple of comments from our side. We have a climate change policy. It's been firmly approved by shareholders. We believe gas is a transition fuel, and as time goes by, most likely a destination fuel till 2070 and beyond. One comment I would make on the analytics is they're moving really quick, and they're also exposing some of the challenges of carbon accounting. So to give one example, at Sarah Week in March, IHS S&P published a big study on American LNG that also included Mozambique as well. And that confirmed that instead of on a 50% cleaner than coal, it's as much as 70% going forward. And then also on the carbon accounting side, the challenge out there, which is you don't measure the emissions that are never made. So let me give you a good example of this. So let's say Mozambique LNG. Mozambique LNG sells LNG to Asia Pacific, which means that Asia Pacific doesn't burn the coal. So you don't actually count the coal that doesn't get burnt, but that benefit is effectively just sitting out there. So as time goes by and the transition, which everybody is working and evolving, the considerations are starting to get a bit more sophisticated, but from a gas perspective, we are extremely comfortable.
Yeah, RDC side, I mean, we also got a sort of in terms of a just transition fuel policy. But if you look at gas in itself, it's a long play game. It's not a short play. It's because of the massive capital investment. If you talk infrastructure, if you're talking about LNG terminals, if you're talking about a gas to power facility on the back of that as an anchor tenant, it's a very long play. So how long is that play? As to how long is it going to be a transition fuel? So I think that's also when you make the capital investments and the decisions to invest in LNG, it's not a 10-year, 20-year horizon. It's more 50, 70-year horizon.
I don't know if you want to come in maybe from an Indian perspective, the role that gas and LNG has played, or is playing in your decarbonization.
Hello. Yeah. So in fact, so we moved on various perspectives when we were transitioning from that deprived gas economy. The first thing which we did is the policy formulation. So we came up with an innovative policies which are basically incentivizing hydrocarbon exploration. So it was called HELP, basically. It is acronymed as HELP, which is Hydrocarbon Exploration and Licensing Policy. It's very simple. It's a revenue sharing model. And the other one was open acreage policy. So in open acreage policy, you can, if you are doing some research, and then you can give your expression to the government. So this was the first thing which we did. And then our private and public sector, they played a big role. So now, as we see that there is a problem with gas availability, so but how would you make it available? Either you import it or you explore. So and the last thing was of using biogas. So now currently we are doing at around 6,000 biogas plants located in each and every village in India. So this is how we are trying to increase the domestic gas availability.
Great, thank you. So I think is the part of our transition, and there is no real, we don't see, at least in the medium term, that conflict between a gas agenda and decarbonization. We've got about 15 minutes, so I thought let me open up for the panel, open up for the audience to ask 3 questions. So let me start with 3 questions. I see there's a hand at the back, and I'll come down over here and here, I'll come to you. So right at the back.
Thank you for your excellent inputs, really appreciated. Question more to the finance people on the panel. Do they see an opportunity or the need to establish a market code for gas? Similar to what we have as a market code for electricity, distinguishing between wholesale and retail market codes under development. I'll leave it there. Thanks.
There was a hand, I think, somewhere here. Yeah, and then over there. Just put your hand up. Yeah.
I think my question is probably not just directed to this panel, but what is strongly coming out for me throughout all the discussions that we've had so far is that there's a need for a fundamental change to make sure that we implement a sustainable and successful gas economy. So my question to this panel will really be in the spirit of being action orientated. So what role do commercial banks and DFIs envision themselves playing in enabling a large scale gas infrastructure economy or enabling the project?
Thanks. My question is to Paul. Paul, you highlighted the case of Guyana. And I think in 2022, 2022, they had a GDP growth of a mouth-watering 63%. So they seem to have sort of maybe dodged the resource curse. I mean, are there lessons learned for Mozambique, Namibia, and South Africa in terms of what they have done since the discoveries and up to now?
Great. I think we'll take the answers first, and then I think we should have time for another round of questions from the audience. Just on the market code, if I can maybe just add, take some liberty with that, just add the question about an aggregator. How important, is the role of the aggregator in enabling this? I don't know. Any one of you wish to take that? Either Paul or Paul? Yeah.
I'll kick off because I think one was directed at me. Market code, from our perspective on day one, in view of what's needed in South Africa today, that's the caveat, not really. So essentially, without getting too colloquial, so long as there's a punter for Matola and a punter for Zululand and punters in the power stations, that's it. When the country moves down the road of small-scale LNG trucks going all over the place, then you're probably going to need some form of market code. To the lady, commercial bankrolls. In Africa, banks, essentially to be effective, have to be a lot more engaged and involved in a society than they would have to be in, say, Sweden. So if we are to, in the South African case, to alleviate unemployment for the 8 million and then improve the lives of the 62 million, we have to get quite heavily involved. So to pick a case in Mozambique, we've been hugely involved in the LNG since 2010. It's public domain. We lent $485 million, 10 billion rand to Mozambique LNG. And those sorts of quantums will help drive our involvement in South Africa, obviously with the necessary changes of imports and power stations. And then just the last question, David. It's maybe a little bit premature to be thinking about what South Africa does with the money for the Orange Basin. But the lesson of Guyana is really quite an interesting one, because what they did was taking account of the transition and also the move towards sustainability. Their overall objective wasn't just a sovereign wealth fund, it was a wider natural resources fund that aimed to make sure that the country had access to hydropower, to renewable energy, plus also to make sure Guyana's case as a network was maintained. There's a huge emphasis on transparency. There's no need for a Zondo commission in Guyana. You literally can look at the credit balance of the sovereign wealth fund on the internet at the Bank of New York. Any citizen can do this. They report to Parliament quarterly on what the country does with the balance of the sovereign wealth fund. And we would hope that going forward, Guyana is going to be a good example from a sovereign wealth perspective for Mozambique and Namibia as well. Thanks.
Okay, go for it. I just wanted to make the point, I totally agree, the need for a market code, not necessary just yet. Let's just get some runs on the board. Enablement and the commercial bank's role or banks' roles in enabling. In all of these projects, they're project finance transactions. So 80% of this is bank debt funded. So, there's less need for whatever pure equity to flow in from, major multinationals, et cetera. It enables a lot more of the local players to contribute their 20% equity and actually get going. So it's a huge role that we play, certainly in the renewable energy space, et cetera, et cetera. What comes with that? I mean, banks are not in the role of playing, sort of taking equity risk and taking your deposits and sort of placing a bet on some company. It needs to be well structured. So we can fund up to 80% on a very well structured program. So for us, the risk allocation and the programs, going back to my first point, the programs and those being well structured allow us to fund a lot on a cheap cost of capital basis. And that allows new equity players, new sponsors to come in. And I think some of them would be sitting in the room here as well.
Just in terms of experience with looking at Mozambique and LNG, first of all, and how that was put together in terms of funding. So there are tranches for commercial banks, DFIs, and all that. So we look at South Africa, and only because of the scale and the quantum of funding that's needed, it's probably and I'm looking at a DFI, that you have to be proactive because you have to go into the markets, you have to go raise the capital, you have to probably bring a group of banks together. If I look at that project on its own, at 52 banks globally. So because of the quantum and scale of these type of projects, you need to then start syndicating with whoever you want to, that's really interested in wanting to fund this. So you have to be proactive if you want to get gas in South Africa going. For DFI and other commercial banks, we have to start talking to each other in terms of how to fund these type of projects.
Great, thank you. There was a question last round here, which I'll go to, and then there was one up there, and I can take one more. Somebody's, I know lunch is, okay, great. So, sorry, there was here, Alison, over here.
Thank you. We spoke a bit about the Indian example and how India really navigated through its own gas cliff. From the private sector in South Africa, banks and other actors, what are lessons that you can take away from that? We've also spoken about the Guyana example. What are lessons that we can take away from the policy, private sector, and other spaces on what we can learn, what doesn't apply, and how we can apply these to our South African context to make this issue something we can survive or navigate more effectively, and have gas at a reasonable price for consumption?
Right. We'll just, for efficiency, we'll first go and then up.
Great. Maybe it's not a question for the panel, just a response to the earlier question in terms of driving a position paper or policy statement. My caution to that would be that government is already regulating a significant portion of the industry. It's a very difficult burden to overcome from an entrepreneurial or IOC perspective. In this framework, the legislation, the regulations, et cetera, and the number of regulators that play a role. My overarching caution here would be, let's not complicate it further. We need to get the runs on the board, like Keith said, and I think that's got to be the focus. When it's mature, when it's fully developed in time, that's maybe a 10 to 15-year program, and we can look at these things, but let's not complicate it now. Let's not stifle the investment. We need the investment today.
Thank you, Chair. I think the House would excuse me, but my agenda is strictly on transformation. And I think I speak as obviously the country being a partner of the BRICS, and particularly to India, to the India representative. So obviously you'd know that the mandate of the consulates and the embassies are for promotion. But in terms of our engagements with Indian companies, they'd always want to push a view that South African investments should go there in India. Now, looking at the gas industry with all its bottlenecks and looking at India with all its experiences from a technical perspective and investment perspective, could there probably be a mandate to say, look, let's have about 10 Indian companies that would then invest from there? And I think maybe we can take the dialogue, and obviously with Professor Radebe, including NEFCOG. Thank you very much.
Thank you. I saw there was one more hand. I think we've got a bit of time, so one more question, and then I'll, yeah. You wanted to?
Awesome panelists. And then my question would be to the team there, but overall, even to the previous panelists from Sasol and Igoli. So we have seen that there has been an increase in demand, whereas also the supply hasn't kept up to it. So when I look at it, it comes down to a money thing. And then my question would be also, quick glance, you'd just see maybe Sasol profits maybe not doing all that great, or turnover and all of that decreased. Also just maybe other players, Eskoms, I don't know how much profit they turn. So also other players, I don't know about Igoli Gas, how the books are doing, all of those. But to sum it up, you could see it's a money thing, and not one person has all the money to cover it. And perhaps it was stated, or maybe I missed it, I don't know. Is there like a natural gas infrastructure fund set up type of thing where we can put money into the kitty or something like that? So that was just it.
So I'm quite happy to take your money and sit. Seriously, I think maybe if I can ask you, Mr. Kumar, to answer the. I mean, there were two questions really, and I think it does speak to the opportunity for collaboration between India and South Africa, and then we'll move to the other questions.
Oh, yes. In fact, as we all know, the South African gas sector is an inflection point. You have to balance your limited reserves, rising demand, and the need for just energy transition. What India offers is, we can help design regulatory framework for gas pricing, trading, and city gas distribution. We can, Indian companies can help you in, city gas distribution and pipeline, LNG terminals, and everything the infrastructure needs. We can also partner in helping South Africa to, generate clean energy, clean gas systems. And on the investment side, in fact, we had an energy conference last year in November, and I'm happy to report that Indian company NTPC has offered an investment plan to ESCOM, but we have not heard back. So it's a substantial investment, and it's coming. And Indian companies are willing to come and invest in South Africa, and we are looking for partners. That's why I'm pitching here. I mean, please come to us, and we can help South Africa.
Thank you.
I'll have a go at answering questions 1 and 3 and tying it together. So question 3, we're back to ODB again, got your money. South Africa has got plenty of money for funding this. And I'm serious. An LNG import terminal is not a 18 million ton LNG export terminal. An LNG import terminal of $700 million, whether it's 1 phase or 2 phase, that can on paper be funded by the banks in South Africa. Roughly the liquidity of the commercial banks, leaving aside the DFIs, is probably about $1 billion equivalent in rand. So if the deal makes sense, it can be done. And yes, there's a couple of terminals. Yes, there's 2-3 power plants, but they can be done over the next couple of years. The funds are in country. And then just the gentleman about the learning experiences. Somebody who's speaking later on in the day, I won't name, what I said to them at a conference in Cape Town last month was if I had to set 3 objectives in this energy space for the country next year, number 1 is drill a well in the Orange Basin next year. 2 LNG import terminal FIDs that have been referred to gas to power. And number 3 is please, pretty please, sort out the permitting of environmental legislation, exploration, and FIDs as an absolute priority. And I'll stop.
Great. Prof. Kgosientso, I think you wanted to come in.
Just want to comment on the India-South Africa relationship. Harish Kumar has already mentioned it. My chairman here has already planted an idea on me. So I'm an action man. And that we were at a very successful conference last year with an Indian delegation. And my chairperson here, Priscilla, suggested that maybe we need a business educational tour to India so that we can see what they tell us. Because there was a last conference when we ended up, the last statement was, South Africa is planning, India has done it. That was the energy conference. Now I guess same thing. South Africa is planning, is talking about it, India has done it. So are you interested? I just get an indication of you. Are you interested in that? Wow, there you are. Chair, you've already delivered.
Great. On that note, thanks, Prof. So maybe if I can sum up, I picked up 3 messages here today. The one is very much action-orientated, drill, baby, drill, build, baby, build. And then maybe the last one, let's keep it simple. Thank you very much. Enjoy lunch. Thank you.
Thank you, Henry and his panel.
Good to see you as well.
So we're going to break for lunch now for the next 45 minutes, or I'll give you guys 50 minutes for lunch. To all the speakers and the moderators, your lunch should be when you get out of the door on your left where you met in the morning. And everyone, if you just go down the passage on your right, that's where you'll have your lunch. 50 minutes, we should be back here at 10 to 3. We are going to discuss the reimagining the policy and regulatory framework. It's going to be moderated by Prof. Rod Crompton. And I see the panelists are ready. Prof, I'm going to hand over to you.
Thank you very much, Stephen, and good afternoon, everybody. I hope you managed to get some lunch, and I hope it wasn't too good, because if it was, you might doze off in this session. I know how exciting regulation is for most of you. So we've got, my name's Rod Crompton. I'm a visiting adjunct professor with the African Energy Leadership Center here at the Wits Business School, and I'm moderating the session with all of these famous and well-informed people in front of me. So on your right is Mr. Tsidiso Makubela. He's the Deputy Director General of the Department of Mineral and Petroleum Resources. I have to practice that now because, you know, there's so many different names. You're not sure if it's energy and electricity or electricity and energy, but I'm learning. So, yeah, he's been in the department for a very long time. But he hasn't reached retirement age, so it shows he was promoted at a very young age. A very capable man. And he has all the answers to all your questions. On your extreme left is Mr. Yershin Pillay. He's the CEO of the Cheetah. That's not the fast-running animal. That's the Chemical Industries Education and Training Authority. And he has an MBA from the University of Pretoria. I guess we have to forgive him for that. And then next to him is Dr. Pindili Masangani, who's recently joined the Africa Energy Corporation. It's an South African upstream oil and gas company, which has interests in Block 11B and 12B, also known as Brulpadda and Luiperd. So I think they are the residual operators, or whatever you call it, in that block. Pindili spent quite a lot of her career with the CEF group of companies. And then last but not least is from our national energy regulator is Theodora Khoza. She's an advisor to the full-time member primarily responsible for piped gas, who unfortunately can't be with us today. So we've got all the kind of panelists we need to answer all the difficult policy and regulatory questions. I know as South Africans, we are all, I think, genetically programmed to have short memories. So let me just jog your memories on a few things. South Africa used to be an oil producer. Did you know that? We used to be an oil producer. So some people have forgotten that. We also used to have all the oil majors operating in our offshore waters. That was until 2002, when we changed the regulatory dispensation for our country, and they all left, and they've never come back. So we've asked this panel to focus on the manufacturing catastrophe which is approaching us, like a train coming down a tunnel. We talked about the gas cliff. It might be of interest to note that South Africa has never had a gas policy. And you might be thinking that's a bad thing. And my cautionary comment to you will be careful what you wish for. If we look at the current gas which is coming from Mozambique down the Ramokgopa pipeline, that was done 25 years ago, a bit more maybe, when the negotiations got going, without any legislation, without any policy. And we put together a public-private partnership involving also the governments of two countries. And it worked and has worked rather well, even if I think all of the participants were flying by the seat of their pants, because there was no precedent for it. Here we are now. We've come with Sasol gas from the 1960s, which was for many years marketing coal gas. Then they brought in natural gas, and now they're telling us we're going back to coal gas. in a few years' time. So we are sort of back to where we were at the end of the 1990s in terms of bringing in natural gas. Only this time it's a different delivery mechanism. Probably it's going to be LNG. So, and it seems we're still sort of flying by the seat of our pants, except we do have the Gas Act. But NERSA's administration of that Gas Act has encountered some legal setbacks. There's also the question of the overlapping jurisdiction with the competition authorities, which is a problem. That's being challenged in the courts at the moment. And all this legal activity challenging NERSA's decisions and jurisdiction has created some sentiment of investor uncertainty. I mean, what is the regulatory dispensation if you want to invest in South Africa in gas issues? There are proposed amendments to the Gas Act, which will make it more of a sort of heavy-handed kind of regulation. There's also a gas master plan, which has been a work in progress for 10 years. That might happen in the next couple of years, we'll see. So all in all, it's not a great picture, not a great policy and regulatory landscape for gas. And it's in that context that I'm going to ask each of the panelists to give us their initial remarks for 5 minutes or so on, you know, where do they see the policy and regulatory system in regard to this approaching gas cliff. So let's start with my old friend and colleague, Sidiso, the DDG. Over to you, sir.
I hope this is working. Thank you very much, Professor Crompton. I want to recognize Professor Ubaba Khatebe, who one Christmas gave me a call and said, "You've got to inform the president about this." At the time, there was some challenge in the liquid fuel sector. And I said, I'm not spoiling the president's Christmas. But ladies and gentlemen, good afternoon to all of you, all dignitaries and protocol observed. Thanks for inviting us. So I'm not Jacob Mbele, because I think in your programs you saw Jacob. So by now, I think everything that needs to be said has been said. So when we accepted this invitation, we're still DMRE. And now we're split, there's energy and electricity. So we've moved to petroleum and mineral resources. But nevertheless, we will try and use the knowledge that we've gained to respond to some of the questions. I need to just declare that the chair used to be my boss. The session chair used to be my boss.
Still am for this afternoon.
Oh, okay. And one of the things that I thought I should raise here is that at the time, he was the boss to myself, the late Nelima Kubane, the former DG, and Ompia Pan. And we had routine meetings every Friday, 8 a.m. And boy, you were drilled in those meetings on, you know, what you had committed the previous week. But the reason I'm raising that is that, one, there was a routine to how we did our work, okay? There was commitment on the part of the public servants that were there. There was rigor in execution. And I think at the time, we also benefited from the wisdom of the collective. That's very important. And that's why we're here, I believe. So why is it important? You know, the role of a regulator and a policymaker, particularly regulation, is not to enforce, just to enforce the rules that are there. we are there in regulation and policy making to make sure that we enable economic growth. We enable the gas sector to flourish, and the safety regulators are the ones that have to look into enforcement all the time. My view is that to deal with the gas cliff, we need to make this cycle bigger. I thought I would be asking a question, but I think in the interest of time, I won't. We need everyone in the room. Now, all the gas experts are in the room. The regulators are in the room. But I believe that we also may be missing a few other players that need to be in the room. The success of the Mozambique South Africa gas project came about because there was also the involvement of diplomats. So diplomacy, if you look at Japan, if you look at India, diplomacy plays a very big role in enabling a gas market, and particularly in the sourcing of the molecules. I think it was raised earlier here. What happened those days? One is that President Chisano and President Mbeki were in constant contact with the leadership of Sasol in making sure that everything was running smoothly. And I think we should be asking ourselves as to whether we shouldn't be learning from basically that experience. Secondly, you had in the public service a group of public servants who were not competing with each other. So Dr. Crompton would pick up a phone and call a DG of DTI, who I believe was sitting at the back there, Zev Rastomji, and basically call Maria Ramos, the treasury, if something needed to be sorted. And they were able to get things moving. And I think we need to be looking as to why we cannot replicate what was done successfully in the past. So I think for me, what I wanted to say is that the diplomacy is very key to oil and gas as a sector. And then the other issue is that there are other regulators that should be in the room. I think Dr. Crompton mentioned the Competition Commission. There shouldn't be a gap between NERSA and the Competition Commission, because that's going to confuse the market. So we need to try by all means to make sure that all the state actors basically are at the same level, so that when they engage, the same message goes out to the market. So I think I would want to leave it there for now, and then I will come back later. Thank you.
Thanks very much, Sidiso. I think we'll just progress down the line. So over to you, Theodora.
Okay, thank you, Dr. Crompton, and good afternoon, everyone. I think Mr. Makobela has taken so many of the things that I wanted to say, but I'm standing in for Ms. Nofundo Masedi anyway. I'm not a regulator. So our view as NERSA, in fact, I don't have much to say because we've already published a gas strategy report which outlines NERSA's views of how the industry should develop going forward and how we should address the core sectoral challenges that have been discussed throughout the morning. What I just want to emphasize are just key messages around the policy and regulatory landscape. As NERSA, we actually believe that if we really want to resolve this issue of the gas supply cliff, the industry needs policy and regulatory certainty And we're not just saying this, we have engaged with the industry since 2010, if I'm not mistaken, because that report that we've published, it's not the first one. The issues that have been ventilated here today are not new. They are relevant, but they are not new. The problem that we have as a country is the issue of implementation. And it's also the issue of the problem of indecisions around the role of gas in the energy mix. And then the industry, today we've had ESCOM and also Transnet talking about the projects that they are working on to contribute to this development. But the problem, if the policy and the regulatory landscape, it's not clear and there's no certainty around it, then it becomes a problem. Because for gas and LNG investments to thrive, they need that certainty, and it's only can only get it from the policy and regulatory side. And then because they need that legal regime or the regulatory regime to be clear, so that they can reduce some sort of there should be like reduction of investments in the risks, and also the investors are expecting a reasonable returns on their investment. So if you look at that strategy report that NASA has published, we emphasize the following key policy interventions. We talk about the finalization and implementation of the key sectoral policies and legislative instruments, such as the Gas Amendment Bill. Dr. Crompton has touched on that. That piece of draft bill, I mean, it's very important. We are currently sitting with the Gas Act, which has regulatory gaps. And then even some of the industry players have complained about it. And from the NASA side as well, we complained about it. We made proposals to the department. The process started back in 2010, 11 to amend that bill. We are in 2024 now. Still, there's no movement around it. But when you look at how fast the department has moved with the current, I think it's the Upstream Petroleum Resources Development Bill. 2019, it was in Parliament. They started the process in 2019, 2020, 2021. That process, the parliamentary process started 2024. We had the act enacted into law by the president. Why is stopping the department from doing the same thing with the Gas Amendment Bill? Because if you really want people to invest or investors to come in, to play in this market, you have a legislation that people are saying it's problematic. You start a process to develop another one, but you want people to come and invest for the long term, knowing very well that the regulatory landscape is actually going to change in future. I mean, by the time they start the operations of their projects, so it's not fair to them. It's also not fair to the gas customers who now have to deal with the issue of the gas supply cliff, and there's no certainty around that as well. And then on the issues of regulatory and I'm just emphasizing on the Gas Amendment Bill, but there are also other policy instruments like the Gas Master Plan that we believe are also crucial for that. I'm not going to labor on those ones. And then when you look at the issue of the regulatory interventions, from what we have gathered throughout our interactions with our stakeholders, is that there is the industry is it's excessively regulated. And when you look across the value chain, it's like every segment has got its own regulator, and there are some gaps there. Also, you also find the issue of concurrent jurisdiction that Dr. Crompton touched on earlier on. So what we are emphasizing there is that we need to promote regulatory coordination, alignment, and collaboration amongst these sector regulators. And the aim there is to actually ensure that there is that holistic gas industry development. We should actually move away from actually creating this environment where our investors, they don't know where to go. If they go to this regulator, they are being told this, they go to the next, they're being told this, but there's no coordination. And we do have a space for as regulators to collaborate and ensure that we create an enabling environment for investment to strive in the sector. And then what we also think is very important is that we need to, as regulators, we also need to take stock of our regulatory processes, how they contribute to the delays in projects. Because these are the issues that are actually coming out from industry players when we interact with them, that you will find that when they actually tally all these the periods across the value chain for all the regulatory approvals that are required for them to actually implement their projects, to even like start with the construction of those projects. You will find that the regulatory process on the timing of it, it's even longer than the actual construction period of those projects. So what does that actually say to us as a country and as government? Do we really want to see investment in this industry? Then let's try to sort out that space to make sure that we streamline our regulatory processes. Some are even like coming up with solutions to say, why don't you just create like a one-stop shop regulatory platform where every investor or potential investor will go in there and actually check what needs to be done, and the process are streamlined in the timelines and whatsoever, and they will factor in all those things in their project planning. So it's very important that we also look at ourselves as regulators as well. I think I'll stop here, Dr. Crompton. Thanks.
Thanks very much, Theodora. You know, in regulatory parlance, there's a thing called voice regulation. It's voices out there which are meant to be heard by certain audiences. I think we just heard voice regulation. Over to you, Pindi.
You're so naughty, Dr. Crompton. Thank you very much. I had asked for a presentation to be flighted just to make my initial inputs. Bongani has really helped me. The country's prospectivity when it comes to oil and gas is not in doubt at all. You know, we know that we've got prospective basins. Paul likes to make the point that over the last 3 years, Namibia has drilled 21 wells, 17 of which actually have led to fines, to oil and gas fines. And to think that actually on our side, when the very capable geological geologists at PASA look at it, they tell you that in actual fact, on our side of the basin, we are actually more prospective. So what then is the problem? I liked what someone else said this morning, that actually gas is the Swiss knife of the energy carriers. You know, you have it, use it for electricity, you use it in your industrial processes. I thought that was just a perfect description of what gas can do. It's not just in terms of electricity generation where we normally like to confine it, but as a feedstock in terms of industrial purposes. So as we were asked to talk into the policy and regulatory framework, in this here, trust me, if Dr. Crompton looks behind, he'll think, what an oversimplification. I'm not even putting up the legislative framework that overarches this or that overlayers this. But at the top, you've got the National Development Plan. Underneath that, you should have the Integrated Energy Plan. The department has taken so long trying to develop one. We've never had one gazetted. We've got the IRP 2019, which we're working on. And NESA makes this very, very important point in their gas strategy. That IRP is being revised. It will talk about the use of gas in electricity generation. The gas master plan is being developed. The liquids master plan is also being developed. So all these are in a flux. All these are in a flux. Never mind that. That's not the complication, Professor Hatem. Here is the complication. Remember that there are other players who are working on the on areas that interlink with this. For example, you've got the Department of the Environment, which has got what is called the Marine Spatial Planning Act. Now, according to that act, they must plan for sustainable use of our oceans. Now, that Marine Spatial Planning Act was promulgated in 2018. So it's very recent, way after your MPRDA and so on. And under that act, they are formulating the marine biodiversity plans. Now, a marine biodiversity plan is being developed this side, a gas master plan is being developed this side. And the gas master plan says we must accelerate the development of our offshore resources. Do you know what the Marine Spatial Planning plan is saying? It's saying actually conserve 50% of it and make sure you don't build any pipelines. This is a true story. This is our lived reality. So you can make the discoveries in an area which is not biologically sensitive, but of what use is it to make those discoveries if you can't take them onshore? Those two are in the public domain, both of them. And that's what we face as the upstream industry. Of course, you've got the transport master plan at the same time. You've got the transition to a low carbon economy. And everyone wants that. Someone here made a decision for all of us and said we all like renewables, so I'll join that. But there are people we know who interpret this transition differently. And now if you've got those plans coming out and there is no clarity in terms of the gas master plan itself, you're in trouble. Of course, overlaying this are all the other factors that are affecting our economy, a constrained fiscus, no jobs. You've got other countries putting out their policies in terms of carbon trading. And then you've got deindustrialization hitting this country. So this is the policy framework under which the department is trying to work and under which you are trying to make investments to avoid the gas cliff. So it's complex. And therefore, what is, I hope I haven't depressed you. So what is our suggestion? I'll skip the next slide because I've made the point about what the issues are that come out, the development of the plans at the same time, and then you are in that flux of an environment. So here is what we are recommending. When it comes to the upstream oil and gas industry and developing our indigenous resources, one of the biggest hurdles right now is in terms of opposition, just to oil and gas use. Production and use. There is not a single gas project which has not been taken to court. Actually, today, the environmental authorization for drilling in our Orange Basin is in court. Today, it's ongoing, started on Monday. That court case is ongoing. And now, my suggestion, DDG Mathubela, is let's have our government ready with a statement to clarify what is our position in terms of the transition? What does it mean for our aspiration to continue to use our oil and gas resources? Industry was taken to court once, and it was the government that responded with a policy position on what oil and gas means to their economic prosperity, prosperity, what it means in terms of their decarbonization pathway, that by following this route, it does not mean that they will not decarbonize, and what it means in the global context. So the government had a clear position. There was not a second challenge to that. Every day, the oil and gas, upstream oil and gas industry in South Africa is in court. It's in court today. Our second suggestion is that there must be a closer early coordination of policy development. NASA in its gas strategy makes the point that fortunately, the IRP development and the gas master plan development are actually in the same department. So you would think that it's easy to co-develop this and make sure there is consistency. So the point we are adding as the industry is that also make sure there is early collaboration with the other departments. I think it's very unfortunate that you've got this biodiversity plan put out, and now people who are hell-bent on stopping the industry are commenting. The department is also commenting at the same time. And now this is the single instrument that's being used in court today to say, we know that the Department of the Environment wants to go this way. So why are you drilling? The fact that that's a draft, that's secondary. The matter is in court. So we are saying there must be an early coordination across the different departments. When you develop this, it would have been ideal, DDG Mathubela, for that biodiversity plan to come out after it has been consulted with the Department of Mineral Resources to make sure that there is consistency. The last one, of course, is that the upstream industry is designated as a strategic integrated project, the SIP, according to the Infrastructure Act, but we're not seeing the same benefits accruing. And I think for me here, Dr. Crompton, as I close, it's because maybe we're not seeing that Swiss knife benefit of gas. So we are happy to afford the benefits of SIP designation to other sectors. But because no one can see the potential benefits of our indigenous oil and gas resources, we're not accelerating how we can permit this process. Thank you, this project.
Thank you very much. Yashin, over to you.
Thank you, Prof. Crompton. And I don't know if you know, but and Prof. Maurice will be able to validate this, that it's quite proud, I think, at least from my perspective, as the Chemical CETA Energy Leadership Center, which was actually funded by CHETA, the strategic partnership between the Wits Business School some years ago, is where it is today, and having such initiatives. Because, you know, when we say, let's collaborate as public-private partnerships, there's a living example of that, where CHETA and the Wits Business School got together a few years ago, and these are the outcomes that we see today. So I thought I'd just mention that because it's quite important, I think, Prof, you know, to signal this as well, what can be done through public-private partnerships. But perhaps, you know, in going to this question that you mentioned, let me start with what I agree with. Certainly, I think we need to operationalize the gas master plan. As you mentioned, in waiting is too long for work in progress. Why? Because guide those decision-making points for whether it be market development, pricing, environmental compliance, infrastructure development. And just in terms of infrastructure development, I think certainly one of the things we really need to look at is how do we accelerate gas infrastructure development, simplify approvals for LNG terminals, storage facilities for that, gas to power plants, because the bureaucracy at times with the red tape needs to be streamlined. And I think from a policy perspective, we also then need to consider what are the incentives for public-private partnership frameworks that would incentivize investment into both midstream and downstream gas infrastructure. Thirdly, I think for me it's quite important around this the issue of, let me talk about coordination. Well, I think coordination is a big issue. You know, so when we talk about strengthening coordination across government departments, whether it be DMRE, NERSA, Transnet, SANEDI, including the private sector, that will certainly help us to accelerate the type of investment decisions, et cetera, that we need for more, I think, future-proofing the energy sector. But the one thing that you mentioned, so Prof. Crompton, you say you've heard the voice of regulation. Maybe let me add the voice of innovation and perhaps just leave some innovative ideas for discussion amongst the symposium today. I think we also need to consider what are the possibilities out there over and above the conventional policy and regulatory reforms. So the main point I really want to make is that we need more innovative, transformative, forward-looking policy and reforms. If we see globally what's happening, there's quite numerous, for example, perhaps we need a national green gas innovation fund as an example. You know, there's policy that needs to support green gas development, biomethane, methane, green hydrogen, something which we are busy with as the Chemical CETA. Policies that would enable, for example, through research and development subsidies, pilot zones, grid standardization standards as an example. But this could really position the country as a green gas leader. And given our commitments to being to decarbonization in terms of the Paris Climate Agreement, we really need to look at some of these tangible type of things. And what would this do? Well, the purpose would be to provide seed capital to green gas startups, funding new technologies, funding projects in biomethane, green hydrogen, etc. Why is that important for the looming gas cliff? Prof? Well, it would create local supply alternatives. It would build our green gas export potential. It would reduce our dependency on imported fossil gases, as an example. So this, I think, is quite important. The second thing is the impact of digitization. I mean, creating just a policy that enables digital gas trading platform, as an example, so that we make use of blockchain-based exchange where buyers, sellers, storage providers come together. This would increase transparency, enable competition, and allowing some of your small suppliers to also be included in the market. So, smart gas infrastructure is something that policy needs to enable as well. How do we use Internet of Things, artificial intelligence, introduce predictive analytics and AI for leak detection, the monitoring of our gas pipelines, as an example, or just pressure detection control. So the technology is out there, and we shouldn't shy away from it. And then just maybe my last 2 points is, and I think there's a huge opportunity for green gas cooperatives, community-owned biogas hubs, green hydrogen hubs. How would this work? Well, you would have municipalities licensing land, probably to green gas cooperatives, hence the importance of coordination that I mentioned. Your local enterprises would then run these digesters, small-scale refineries, and then sell the gas off to households, taxis, and even possibly, back to your sources, etc. So, and then I think finally, an initiative that I would want to mention that we're busy with as a chemical CETA is the establishment of a national gas apprenticeship program, because you equally need a policy to support the skills and have the skills infrastructure as well. So what would this look like? It would look like a collaboration between TVETs and CETAs funded by levies, where delivered through smart skill centers and partner colleges for a twofold purpose. One, to build our workforce, so ensure that we've got a capable workforce, and secondly, to ensure inclusive participation in the energy transition. So I thought I would leave with those 5 just some ideas to consider from innovation perspective. But really, I think my key point is harmonization as well of regional regulations for joint investment in infrastructure, even in the region, is something else that I would add from a regulatory perspective.
Thank you very much. I mean, listening to these inputs, I was reminded back in '94, I was advising the new government on policy issues, and I said to them, there's only 3 things you need: coordination, coordination, and more coordination. After listening to this, I think there's a 4th thing we need now: coordination. I've asked the panelists to respond to a hypothetical question relating to the downstream gas. Those of you who know the electricity system, well, I think we've all accepted today from all the presentations that gas to power could easily be an anchor customer for LNG. And if the target or the problem we're solving for is the gas cliff, then it seems almost unavoidable to solve the gas cliff for industrial customers without bringing in gas to power. So if that's the case, is the hypothetical question I'm putting to the panelists, then the economies of scale, as we've heard, will require that gas to power to be run at a higher capacity than 5% peaking plant. And we've heard different numbers. We've heard 20%, we've heard Eskom saying 48%, we've heard the minister saying 50%. Let's not argue about the percentage. Let's accept it's more than 5. Whatever that number is that's more than 5 means that potentially there's an element of cross-subsidy because of the dispatch order of the system operator. Dispatch order says cheapest first. Gas will not be cheapest. Gas will be somewhere near the end in the dispatch order of power stations. So if you're going to bump up gas to power's capacity factor, I'm just going to pick 50 as an easy number, 50% capacity utilization. It means that the difference between 5 and 50 is the extent of the cross-subsidy from electricity customers to gas customers. This is a hypothetical situation. It may confront us, but I think in terms of probing the regulatory and policy paradigm we live within, this might be a helpful question to sort of discuss. So the questions that follow from that hypothetical situation is, Is that a good idea for energy policy, to have one energy carrier cross-subsidizing another? Is that good policy for a country? Would the current policy and regulatory environment allow that to happen, if indeed it needed to happen? NERSA is required to make all its decisions in the, quote, public interest, unquote. Would such a decision be in the public interest? Would NERSA find it to be in the public interest, is the question. So those are the kinds of issues I'd like you to grapple with, panelists, before we move to questions from the audience. Let's, I think, follow the same order, since you've had a rest since you were first.
No,
Over
it's
to you,
fine.
Tshediso.
No, thank you very much. I think maybe before I respond, I think we shouldn't maybe leave here with a sense that there is no coordination. I think the coordination can definitely improve. And that's why I started with relating what happened before. There was coordination, worked very well in many sectors of the economy. But at some point, I think that was lost. And I think we need to rebuild that. And I don't believe it's only the responsibility of the politicians to do that. It's mainly the responsibility of public servants and officials of state organs. We can't expect them to do that. They think we're talking. We're not talking. And I think, and then they get the blame afterwards. So, I mean, I'm talking about myself when I say I need to be able to talk to NERSA, I need to be able to talk colleagues at other government departments. Definitely, we believe that the gas sector will need to be supported. There's no doubt subsidy is going to have to happen because we have an interest in making sure that this sector succeeds. So that cross-subsidization, I don't think we can run away from. I think what policy will have to do is to look at how do we then shield the end customer. And I believe that, when it comes to this, the state must take some pay from the customer in order to ensure that, the gas sector develops in the country. It's been done in the renewable energy sector. So we need to do the same. We need to replicate that. And the sooner we do it, the better. I think NERSA would then talk to whether, their processes would not be compromised. But I believe that it is actually in the public interest for South Africa to make sure that the gas sector is enhanced in this country. We are all worried about the gas cliff. Some of us are worried about 2045. You know what is, just look at the Eskom fleet and project to 2045. We are in 2025. How many power plants do we need to build between now and 2045? Do we have the time given, the history of all the other projects? So I think, we don't have time. I think it was mentioned earlier that we've run out of time effectively, but we can't give up. We've got to do something. And that something is to make sure that the state is fully behind the gas sector. And I think the Minister of Energy and Electricity, I think, has made it clear that he stands behind the sector. And I think on the upstream, Minister Mantashe is very clear about his stance on supporting the upstream oil and gas. Thank you.
Thanks, Lisa. Over to you, Theodora.
Okay, Dr. Crompton, you know that as the regulator, we take the cue from the department. So when you look based on what based on what Mr. Makubela has just said, that they support this gas to power development, whether you look at it as subsidy or what, they want it to happen. And as the regulator, when you look at the concurrences that NESA has done in the past, I think it's two of them. ESCOM spoke about one in the morning on the Section 34 ministerial determinations, one for the ESCOM 3,000 megawatts in Richards Bay, and then also for the 2,000 megawatts under the gas IPP program, bid window one. Those concurrences, they basically show that NESA is fully behind this whole concept of gas to power in the country and in the power generation mix. And also NESA has long decided that this is actually in the public interest. I'm answering that question. And then on the issue of how we actually handle the impact of the what do you call it? It's an imported LNG price into the electricity mix. We are of the view that there is a case. I mean, the concerns that are being raised by stakeholders around the dollarization of the economy, and also around the issues of that the imported LNG is heavily dependent on international commodity prices. Obviously, the dollar exchange dollar exchange rate fluctuations coming into play to sort of like add to the instability of the gas prices. Those concerns are valid, but NESA is actually working hard behind closed doors to actually make sure that there are reasonable cost recovery mechanisms that will be put in place to actually minimize the impact of imported LNG in the economy, particularly in the electricity prices. I'm not an expert on that, so I'm not going to delve into those details. Probably when we engage in future with the electricity colleagues working on those things, they will be able to elaborate. And then regarding the question of whether the Gas Act and the Electricity Regulation Amendment Act allow for such a cross-subsidy. In our view, when you actually look at cross-subsidization, it's not defined in both legislation. Okay, I have not looked at the Amendment Act for the electricity, but I don't think it's defined there as well. In the Gas Act, it's not defined. And then when you look at the one provision that talks about cross-subsidization in the Gas Act, it relates to, I think it's Section 21(1)(c), and then it relates to the separation of accounts and separate management of the different gas activities by a vertically integrated company. So cross-subsidization, it may be bad or illegal if looked at in the context of vertically integrated firms using it as a barrier to entry in the market, and also or to impede or harm competition in the space. That's when we look at that provision, it basically it sort of tries to prevent that from happening. But when you try to take this concept of cross-subsidization to the gas to power project, NESA doesn't really see that as cross-subsidization, because you also have to look at the potential benefits that are there for both industries. Electricity, the colleagues that spoke here in the morning in the 4 different sessions, they touched on the benefits of having gas in the electricity power generation mix. I'm not gonna repeat that. And also in the context of gas, we need electricity to anchor, to provide that anchor demand. So there is that a beneficial relationship between these two industries. And that's why in our gas strategy report, we are actually emphasizing that let's try to explore those synergies and make sure that they work for the benefit of the country. Obviously, there are issues that still needs to be ventilated around dealing with the issue of imported LNG being priced in dollars and all that. Let's explore those options, because our situation in South Africa, I'm sorry if I'm taking too long. Our situation in South Africa, it's actually not unique. There are so many countries out there in the world that have built their gas industries based on anchoring that, based on power generation. So I can mention Spain, which now went 100% renewable, and then we saw how that worked out for them in the past couple of days. And then we've also have South Korea. We can learn from countries like China. We can learn from Singapore. We can learn from Japan as well. Dr. Crompton would know, or let me also make a declaration that he used to be my boss at NESA for 10 years. and this and this discussion around gas-fired power, it's not new between him and I. And at some point, he even threw out a report and didn't allow the energy regulator to support it, which was specifically dealing about gas-fired power and the lessons that we can learn from other countries that have successfully done that. So because there are mechanisms that can be used to actually try to reduce the impact. I'm not saying I can't name them now, but because we have to test them with the market. But we are working on something as NASA to actually try to, obviously when we work on something, we engage, we draw from the experiences of the experts that have presented, some of them have presented here today, to make sure that whatever that is we put out there, we propose to the department, to the policymaker, at least it has the approval stamp. Thank you.
Thank you, Theodora. I think you forced me into a position where I must just declare I had no role in selecting these panelists. Over to you, Pengile.
Rod, my take on this is that actually, and I'm glad that the regulator is going in that direction. In my view, there is no cross-subsidization, none at all. What you are introducing here is a new energy carrier in electricity generation, and that's gas, and we don't have it. And we've done that before with renewables. We introduced renewables at a very high cost. There was no merit order argument, by the way, Rod, when we did that, because it was take or pay contracts when we did that as a country. We did that, and the argument was we're going to start the path of decarbonization. We're going to have manufacturing, which I doubt we got those benefits. So it's not new for South Africa to introduce a new energy carrier in electricity generation. What's happening here is a coincidence of two things. That as you introduce gas, and there are only two sources of this gas to supply such a huge electricity generation capacity of gas, which we've heard today is about 6 to 8 gigawatts. It's either you're going LNG or you're going indigenous gas. Fortunately, both of them require you to have a high load factor, both of them. Whether you're looking at LNG or you're using indigenous gas. Of course, if you want a small pockets, 500, 300 megawatts of electricity generation, you can look at compressed natural gas, you can look at a virtual LNG in small carriers, but those are small. But here we're talking about a 6 to 8 gigawatt gap. And therefore, there's only two ways you can have that gas supply. It's either LNG or indigenous gas, both of which require a high load factor because of the capital intensity of building the infrastructure required or developing the project that is required. And when you have that, all you're doing is introducing a new carrier in electricity generation. You're not subsidizing the gas cliff. But here is the nice part about South Africa. When it was renewables, we argued that it will support manufacturing. What we're arguing today, Rod, is that it will supply the industry, it will support the industrial gas users. Because then they'll have access to an LNG terminal. How is that subsidization today?
Thank you. Over to you, Yoshit.
Thanks, Prof. Look, I think is a good energy policy, yes, if it's a transitional strategic intervention. What do I mean by that? Look, I think if it's not time-bound, so it's good policy if it's 5 to 7 years max, because you then could, I mean, one of the objectives of having your high utilization is, of course, your economies of scale, but also lower long-term costs. But you could entrench those long-term costs, leading to higher costs if it's not time-bound. But I think we should also look at the risks as well. Raising ESCOM tariffs, burdening households and small businesses is a risk that needs to be taken into consideration as well. But certainly, I think it's something we could consider in the context of the gas cliff. So it has to be transitional. I think the benefits need to be clearly defined and quantified, and there needs to be a high degree of clarity and just transparency around long-term cost implications. And then certainly it would be a good energy policy. I think the question about does existing policy allow this, I think has been answered. I think maybe on does the Gas Act and the new Electricity Regulation Amendment Act allow it, not explicitly, but it doesn't forbid it either. I think that's the other thing we need to consider, because remember, the exceptions can be made, as you mentioned earlier, if it's in the public interest. And surely that exception about, where an energy infrastructure project can be interpreted as strategic integrated project does then allow for that flexibility. But we then within this context now of saying we need accelerated decision making, but it's got to be obviously then in this context backed by ministerial approval, regulatory approval, for example. And so of course, you need a strong public interest motivation as well. So yeah, it's not explicit, but I think there's opportunities or legal pathways that do exist.
Thank you very much. I think we've got a good sense of the flavor of the policy and regulatory environment for solving the gas cliff from the discussion so far. Can't cover everything in the short time we've had, but let's open it to the floor for questions. I see one, I see two, three. Let's stop there for the moment. Where's the person with our mic?
Thank you so much for an excellent presentation, and glad to see Rod is still your boss. Dr. Masengane raised a very important point, what we in the gas industry call lawfare. Lawfare against the gas industry, funded by foreign interests, right? Now, we've got enough issues with foreigners, but we need to determine our policy. We need to determine our priorities. If we say energy security is top in our modeling in terms of weighting, then so be it. Followed by affordability, followed by environmental sustainability issues. If those are our priorities, in that order of merit, where is the idea that we don't care about the environment coming from? Right? That's number one. Number two, Section 43 of the National Environmental Management Act, when it was amended in 2014, the draft that left Parliament and the draft that was gazetted is not the same draft. Go look at that very carefully.
How would you know, Craig? How would you know?
I wasn't there at the time. Sorry, I'd left by 2009 already. But it needs investigation, because that clause that says all you need to do is just raise your hand in objection, and it puts a stop to project's activity. Now, the legitimate concern that environmentalists raise, and we do talk to them. The last meeting we had with an environmental lobby group was on the 16th of April.
Craig, are we getting to a question soon?
What I want to say is, the point about engaging the environmental lobby groups is a very important one, and we're starting to do that. It's necessary, but they need to be in a forum like this as well, so that we can hear their concerns. They are legitimate concerns, and we can address them here. So not in court, really.
Thank you. Next gentleman with the spectacles back there.
Thank you very much. I don't have a question, but a comment. As somebody from Namibia, on the issue of success, of course, there were some challenges here and there. And I think few things that I want to mention is that the transparency helped us very much. And I'm speaking as somebody who don't edit my views. So I'm critical, but when things are okay, I'm very much happy. So, and I speak also as somebody who was an advisor to the minister, because I served as a member of Sustainable Development Advisory Council. So, and another one is synergy. Okay. So you cannot have government agencies and they're not speaking to each other. The Marine Spatial Planning, I worked for Ministry of Fisheries for 14 years. supposed to include all the stakeholders involved. If they are doing planning and they are not involving people that are participating in oil and gas, it's also not good. One thing is understanding the real meaning of sustainability and sustainable development. Because many a times people take society and environment alone and they leave out economy.
Oh,
So then there is
yes.
no sustainability development there or sustainability. And another one that helped us is quick adjustment of our government. So when there are issues raised, government respond and adjust accordingly, because that will help for you not to lose investment. Another thing is for us to know what we want. Of course, in Namibia, there was a challenge. People discovered oil, but the renewable energy proponent, no, they are always aggressive. Eh? I'm an environmentalist, but I believe in fair justice and fair transitioning. So they would come actually in the interest of the foreign investors and say only renewable energy is good. 2016, I went to Germany through the advisory council that I spoke about earlier. We asked the National Energy Agency of Germany their real view on this push of renewable energy. Then they said, look, renewable energy alone cannot sustain a growing economy like yours, now like Namibia. Hence, they advised that we must have energy mix, where we find a strike, a balance between non-renewable and renewable energy. And I think that would allow us just transitioning.
I hope
But
you're
if
going
we
to wrap
just
up.
push,
I hope you're going to
okay,
wrap up. So
yeah,
we need to move on.
we have to be fair toward our economy and our people, because otherwise we do disservice to ourselves. Thank you.
It's Abby here. Alison? Yeah.
Yeah, let me try to formulate a question. We've been discussing the entire morning how can we accelerate and kickstart a true gas business of materiality in the nation. My question to this panel is, from a legislative perspective, you are a key enabler to make this happen. And it takes something to get something. And if you, through legislation, you kill the start of this nascent industry, then you won't attract investment. In my view, things like a 5-year or 10-year tax holiday to kickstart strategic projects which are elevated to national strategic level, and then which stimulates the economy, and then the government gets its money back through taxes of a growing economy. Has that ever been thought of? You know, you need to put a lure into the water to catch a fish, because the fish you want to eat. And I think if you eat the lure, there'll never be fish. So how do you think you could do that? Because I think the legislative environment is key important, that you have those strategic projects and say, let's really make them happen. Like you alluded to the Pande and Temane and Ramokgopa project, all the noses were pointing in the same direction, and they made it happen. Collaboration, we talked about it this morning. So my question to you is, you know, we can talk for another 3 days like this, but how are we going to collaborate, and what role do you have to play to make it happen?
Okay, panelists, I'm under pressure from my boss here about time. So please each respond, but or those that want to, try and be as concise as possible, because we have to make way for the next panel. Let's start with Sidiso.
Okay. No, thank you very much. I think I'll respond to Abby's intervention and question. So I think we have all the laws that we need. What, you know, I think is lacking is intentionality in terms of enabling this industry to try. We're not intentional, it's like, you know, start, stop. So we have to be intentional and so from the side of government, we need to bring all the state players so that when we come to you, we are able to smooth out any obstacles that are there. that's all that I think needs to happen now going forward.
Eudora?
Yeah, I don't have much to add. The political willingness, it's what's lacking, as Mr. Makobela says. If we can get that right, all the other things, coordination and whatsoever, will just fall into place. Thanks.
Thank you. Pindile?
Yeah, so I think in terms of the coordination, I think the only thing that's lacking is that when each department publishes a document or a plan, in my view, it should have been consulted extensively within government itself before it's put out in the public domain for consultation. But it should be an aligned government position already. Thank you very much.
And sometimes within the same department.
Person? And thank you to the Namibian colleague for giving us the insights from Namibia. Thank you very much.
I was hoping it was going to give us more insight into the Bentley Index, but that can wait.
Yeah, I think maybe just to, from this insights shared, that collaboration is important, especially with both local and foreign, but it has to be principle-based collaboration and in the interest of the country. And so I think that should always be our point of departure and the end point as well. So I would agree with the collaboration, but not just open. But in terms of flexibility, when one looks at the Electricity Regulation Amendment Act, I think we should also see the opportunity in that act because, with the provisions made for the minister to fast track approvals, for example, that create more flexibility for your energy infrastructure projects that are strategically in the national interest, is there an opportunity there to be seized for more flexibility? So I think not all is doom and gloom, but we need to then seize those opportunities that are provided. And then maybe my last point, I think it's Section 10 of the Competition Act. It also allows for exceptions in pricing if it is in the public interest. It is a strong motivation for it being in the public interest. So the legislation does provide, I think, opportunities, and we should look at seizing those.
Just in closing, I think we should also just remember that fiscal policy on oil and gas exploration is determined by National Treasury, and they would be key players in this. I know there's going to be discussion later this afternoon, but they would have to be key players in relation to Ebi's question. Ladies and gentlemen, unfortunately, we don't have time for another round of questions because there's another panel following us. But I hope you got some benefit from this panel, and I think they did a good job. Let's give them a round of applause.
Thank you, boss.
Thanks, Prof. Compton and his panel. The second last session, session 6, I'm going to call upon Dr. Nandi Malumbazo and her panel to come and discuss research and innovation across the gas value chain.
It's either slide that just says who I am, but that will.
Yeah, that should be more on the side.
I'm good.
Umampele. Pardon. India. Yeah.
There's a small.
Yeah. It's on, oh.
Yeah.
Are you fine?
Okay, thanks.
Good afternoon. Good afternoon, ladies and gentlemen. And it's so unfortunate that I've been given a graveyard session. And when I looked at the audience that are left in the room, I was like, it seems like it's only my class that is here. I have familiar faces. And it seems like most of them are my students. No, I'm joking. So my name is Dr. Nandi Malumbazo. I'm a sessional lecturer here at the AELC. I teach energy policy and regulation. And then with me, I have 4 panel members, which I will allow them to introduce themselves. And thereafter, we'll have general thoughts from each and every panel member regarding the research and innovation across the gas value chain in South Africa. And thereafter, we'll have questions from my side and then questions from the audience and thereafter closing remarks. So next to me, I've got Dr. Bruce Young. Bruce, can you please introduce yourself?
Yes, okay. I'm Bruce Young. I started life as a chemical engineering academic in the same department Nandi's in, then spent 30 years at Sasol, then took early retirement. Maurice convinced me to come and work here 3 years ago, and here I am.
Thank you, Bruce. And over to you, Prof. Sefoni.
David Serfontein. I'm a professor in nuclear engineering. I've done almost anything and everything in life. I've farmed. I've been a peer scientist in atmospheric physics. I've been a medical physicist. I've been a pastor in a church. I gave them a speech on the theological errors similar to what I gave you last time. They responded by firing me. So that's why I have the privilege to have me here with you. And I did my PhD and professorship in nuclear engineering, and then found out that it seems to me now like solar and wind to a backup will be cheaper. So now I'm a professor in nuclear engineering, promoting solar and wind and backup. So yeah, I think the last thing is that path tells it to you. I relentlessly seek through and try to catch myself out, and I regularly catch myself out that things that I thought 100% I had it down is wrong. So I change my view about every 5 years completely and find myself in a different field. Yeah, so that's who I am.
So in all, you are an engineer.
Yeah. Nuclear.
Yeah. And then next to Professor Fontaine, we have Dr. Rendani. Can you kindly introduce yourself?
Hi, everyone. Rendani Mampiswana. So I currently also work here as a sessional lecturer on energy innovation since about 2016. I'm also at the University of Johannesburg, where I focus on energy policy. So my intersection is innovation and policy, and I will touch on some of the things when we run through the opening session.
Thank you. And over to you, Prof.
Afternoon, colleagues. I'm Professor Samson Mampieli. I'm the head of the Department of Science, Technology and Innovations Energy Secretariat at the South African National Energy Development Institute. I have a mixed background from environmental science to physics to engineering. I'm a professor, extraordinary professor of chemical engineering at Stellenbosch University. I once ran the Center for Renewable and Sustainable Energy Studies at Stellenbosch University. I'm currently with SANEDI, running the National Department of Science, Technology and Innovations, Research, Development and Innovation Programs on the energy side of things. So SANEDI is tasked with the responsibility of directing and conducting national research on behalf of national government And part of our mandate is to advise two ministers, the Minister of Science, Technology and Innovation, and the minister who was here this morning, I believe, Minister Ramokgopa. Thank you.
Thank you, Prof. Ladies and gentlemen, as we all know that the gas industry has been a monopolized industry and it still is. So there is a need for competent skills in the industry. And so that at the end of the day, the sector can further then develop and advance. In addition to that, the gas industry also needs to have academia, or it needs to have an input from academia for knowledge dissemination, more especially in communities where they are gas filled. And we have been told also in the previous sessions that we've been actually around in communities where there are gas fields, there has been no production due to the fact that there has been protest against any gas developments in the country. So what we are actually going to do, I'm going to start with Bruce to say, Bruce, can you kindly give us your general thoughts around research and innovation across the gas sector?
Thank you, Nandi. So I'm going to talk about skills development in the sector because, Nandi, that's you gave me the opportunity to prepare on that. So I need lots of time to think things through to be good and articulate. So first of all, I'm going to say I'm harshly and justly accused by my wife and others of often offering a negative perspective on things. So I'm going to start with the negative perspective, but then she forced me to put a positive perspective. So I'm going to start with the negative and then I'm going to come to the positive. So the question is whether South Africa has the necessary skills to support the gas sector's anticipated growth as reflected in the draft IRP and the gas master plan. And to me, that requires not a technical answer, but a grounded and realistic one. So both documents project substantial gas developments in the near term, specifically before 2030. But these projections are, in my view, unrealistic and speculative. The fundamentals simply do not align. I think we heard Ebi talking about that earlier. So I agree with him. Upstream resources remain underdeveloped, midstream infrastructure is lacking, and questions around affordability and demand viability persist. So why am I telling you this? Because unrealistic forecasts can be deeply damaging. They create policy momentum and institutional commitments that are misaligned with commercial and technical realities, leading to wasted resources, misallocated effort, and also in terms of teaching people false expectations. So this makes the future of the industrial gas industry in South Africa deeply uncertain and should give us pause when considering how we respond from a skills development perspective. I see Yershin Pillay is here, and maybe we'll have a talk later. We've already seen in the green hydrogen space what can happen when we overcommit to speculative futures, premature and narrowly focused skills programs based on unproven commercial outcomes. This often results in wasted resources, frustrated students, and a misalignment between education and opportunity. Right, so there's the negative perspective. So what?
We need a positive one.
Now, so let's go into, so now let's go to some positive perspective. I would argue that the bottlenecks in the gas sector are not related to skills at this stage. They are commercial, regulatory, environmental, infrastructural, and finance. Until these are resolved, until projects begin reaching final investment decisions, large-scale vocational or sector-specific training efforts are premature. So what do we need? We need instead a cadre of highly educated generalists with a broad interdisciplinary understanding of the energy landscape. This includes insight into technology, economics, regulation, policy, and environmental factors. And now there's even more good news. That's exactly what we try and teach at the African Energy Leadership Center. We provide postgraduate level education designed to produce professionals who can navigate the complex, interconnected challenges facing South Africa's energy sector, not just from a technical perspective, but with strategic policy and commercial acumen. So it's that kind of broad knowledge of a generalist who's well educated across all of these complex spheres that we've heard about today and added into that critical thinking. So that's what we need at the moment. So this kind of integration is what is currently lacking. We need professionals who can think across silos, bridge disciplines, and contribute meaningfully to shaping and enabling an energy transition that is rooted in realistic commercial progress, not aspirational policy. So one of the things that I've learned here in coming into and teaching here for 3 years, what I hear from students is aspirational policy, aspirational forecasts, which are not grounded in reality. So that's not what we need at the moment. So in summary, skills development should not lead commercial outcomes. It should respond to them. For now, our efforts should be directed at preparing adaptable, systems-thinking leaders, not narrowly trained technicians. Once projects gain traction, we can then scale more specific training to meet actual industry needs. Thank you.
Thank you, Bruce. I wanted to have a follow-up question, but I think later on
Yeah,
we'll
okay.
have such. Then over to you, Professor Fontaine. What are your just general comments?
Yeah, Nanda, I want to use the slides that I prepared to make the point. So maybe if you don't want me to do the slides now, skip me for later and then I'll do, so that I can join these two points of the slides and because the slides lead to where I think we should go with the academic thing.
Okay. Jayton will actually flag the slides.
Okay.
You can sit.
Okay, you can skip that one. Yeah, I skip that one.
Prof?
Oh, I can do it.
Yeah, you can see there.
Oh, okay, so I'm master of my own universe. I didn't even know that. It's such a realization, eh? So in any case, so the first thing I told you in the beginning that I'm my own worst critic, and I doubt everything that I believe, especially around technology and stuff and all the other things as well. But I'm deeply disappointed by what I see in science generally in the energy field, is that most scientists pick a field and they're pro-gas or they're pro-nuclear or they're pro-solar or whatever, to the point that I once wrote an article for a lobby group for wind power that had a conference where I tried to present to him what I'm now going to present to you, how we can fix the weak point of wind power, that it's so intermittent with gas and storage and so on. And they wrote back and they said their view is that wind power is a good technology as it is. And they don't want articles that create the suggestion that there's something wrong with it and you've got to add something to it. They promote it as is, which is pure rubbish. But and I see that it's not one group that I target. I see that just wherever I come. So so my point is, how do we move away from that? And today I have had very little. The field that I know is power, so I don't know the other so much. There was a lot of producer push today, but very little consideration of what is the actual needs of the power industry. So since I specialize in that part, I want to say something about it. And that is, these graphs are not perfect, but what you see in the middle is the orange part is the sun that comes up at 6 o'clock, 12 o'clock peak, and then it goes down. And then the wind that picks up in the evening, that's the average for the year. That's not on a given day. On a given day, it's much more up and down. So the point is, where does gas come into this thing? Now, if you are a country, so I've got colleagues that are in countries where the sun rarely shines, like Norway and Sweden and so on. And they have this thing of, look, you'll never get something good out of renewables because, it's just way too long that you've got to wait until the wind blows again or whatever. So they want to do all nuclear. And I think that's a good point in their case. So what's the situation here? In South Africa, you've got to do storage from the one peak that you had through the valley to the next peak. So if you now look at that graph, so at home I've got only a solar system, obviously with no wind, I won't say never any gas, but none that you can burn to make any power with. But in any case, so we've got solar and a battery at home, but it's a trick. I had to install a second battery to get through the night, because in the winter the night is terribly long. Okay, but that's just because I don't have a wind power system at home. So the moment that you've got a wind power, when you're a country and you've got lots of wind power, you just have to do the storage from the time that the sun sets till the wind picks up again, and then from the time that the wind dies down till the time that the sun comes up again. That roughly halves your storage time, which means it roughly halves your storage cost. So in that case, I will show now in next slides that you can actually quite affordably solve the problem with wind and solar and storage. Except that you get these days of 5 days in a row when it just rains, and if you then also the wind doesn't blow. And those stories with these batteries or whatever, they last 1 day. So on day 2 of that thing, you're out of luck, and then you need gas. So the whole discussion this morning, or a lot of it was, what are we going to do when we hit this gas cliff and we've got to import LNG, and LNG costs twice what regular pipeline power now costs. Now, the thing is, if you now go to the client and see what the client's need is, you will see that in this case, it is not a problem. Because if I can now move on to my next slide here, and I wonder where I can see, yeah. So here I have the sort of standard proposal. So you've got lots of solar and wind, and you back it up with gas. So I tried to put some storage technology on it. T's and C's apply. This is my homemade Excel thing, so it's not Plexos and it's not 100% accurate. It gives you an indication of what you would have under ideal circumstances if you don't have to worry about whether there is a cable or the Northern Cape, or Eskom is blocking solar in the Northern Cape, or any of those things. You just say you destroy the whole infrastructure and you build South Africa over from scratch. That's roughly what you could get. So I found out that pump storage is too expensive if you look at the least cost case. So the case where you have zero storage and you just have solar, lots of solar and wind and gas, here is your cheapest case, where you can, for about R1.15 per kilowatt hour, with the T's and C's applying to the number, say that you can supply South Africa with generation, then all the cable costs and so on have to be added to that. So if you want to then go green, so what I then did is, in this green line is where I forced the gas back to 1% of total power generated or total power sold, to say whatever global warming is going to hit us is now going to take 100 times. If it's going to be in 50 years, then it's going to be in 5,000 years. So so I found that the more variable speed pump storage you add in, the less gas, the less solar, and the less wind you have to use. So the prices drop. And then if you go over a certain point, then you overspend on technologies and the cost goes up. But the good news is, with the T's and C's applying, that I can, for roughly R1.35 per kilowatt hour, generate completely clean power, which has got only 1% gas in it. Now, the trick is that you absolutely need the 1% gas, because if you want to build enough storage and wind and solar to get you through that week when the sun doesn't shine and the wind doesn't blow, you've got to build 2 times or 3 times as much solar or wind, so your cost, doubles. So you can absolutely not do it. So you absolutely need the gas to make the solar and the wind work. But you need it on a normal day when there's good sun and good wind. You don't need it at all. But that week that you've got, or those 2 days every now and again, that's bad weather, you absolutely do need it. So you absolutely do need it, but you need so little of it that it doesn't matter what price you pay. So the whole concern of the price is going to double when we switch to LNG is, from my perspective, no concern. So we just need to have the gas, which we don't have at the moment, which means that the solar and wind that we have is now not producing the security of supply that it should for us. Yeah, so my point in all of this is that I want to encourage the scientists to say, instead of to say, I have a solution here and I'm doing research to sort of promote my solution, whether that be nuclear, or I must say something about nuclear, and that is that you often hear it, you hear it everywhere, that people say, okay, if you're going to have a lot of solar and wind, you need baseload, and the only form of clean baseload you need is nuclear, so you absolutely do need nuclear. Now, if you look at these graphs, you will see that the production of sun and wind is up and down. Now, the definition of baseload power is that it runs at 100% output 24/7 a day. So it means that if the wind dies down, and let's say you've got only 3 technologies, solar, wind, and nuclear, then if the sun sets and the wind dies down, you cannot ramp up the nuclear, because by definition, they are already running at 100%. So where do you ramp them up to? So nuclear is a good technology, but to promote it as the compensation for the intermittency of wind and solar is just plain wrong. It's factually incorrect. It's not even a bit biased or whatever. If a student does that in my class, I fail them. So genuinely, I've got no mercy with it. If it comes with that thing, you go down, okay? So, because, you know, you get a bursary so you can do science, not propaganda. So, but the scientists do this. You know, they come in and say, yeah, we do. Okay, so there is nuclear there at the top of this chart. So this is now my T's and C's applying thingy. Yeah, but the other one comes without T's and C's. That's the IRP's number there at the top. So that is the cost of nuclear there at R2.40. And this is my various mixes here with R180 at the maximum and R115 as the minimum and so forth. So yeah, so I'm just trying to say that so that we should not say this is my solution, I'm going to push that, but we should investigate the market and then see with the needs that is around which technology is going to work for which thing. So this technology push thing, we just decide this is what I have, this is what I market, and you guys shall take it. As a guy that's been married for much longer than 30 years, very happily, I can give all of, especially the men here, the advice. If you try that with your wife and you say, look, I'm going to be a good husband, I'm going to do this, I'm going to give you this, and all this, and I will expect that from you, and I make the rules, you know, it's producer push. I'm not interested in what you have to say on this whole thing. I can just guarantee you are going to have a terribly disappointing sex life. So do not go there, eh? But to bring this back to sales, if you do that exactly the same thing with your clients, you're going to have terribly disappointing sales, because you're going to try and push, you know, 24/7 power, gas power on people that needs it every 4th day for 8 hours, okay? So the thing that goes with that is, how do you promote gas as going clean? Now, if you promote this thing of, okay, we are going to burn the gas turbines 24/7, you cannot honestly promote it as clean, because burning the gas is relatively clean, but mining the gas is terribly dirty, because when you leak out the methane gas, it's like 20 times as bad as a ton of CO2. So you can't do that economically, but it's not clean. But you can absolutely promote gas as a clean technology in the way that I said, I need 1% of the energy for my whole system must come from gas, but it absolutely must. If I take that away, the price of, if I put in more solar, more wind, more storage, you know, the price goes up with 30%. So it's absolutely a money saver as an enabler of the other clean technologies. But then in your own mind, you should stop seeing yourself as a promoter of gas power and start seeing yourself as a promoter of this whole ecosystem of energy sources and the public's needs, like you know, with your wife. Is what do you need, darling? So it works, really works, I tell you. So and anyway, I'm not speaking about what I'm thinking here. So, but in any case, yeah. So if we can make that switch, then we can stop promoting ourselves and our industry. We can help our country go forward, solve industry's problems, provide clean, green, and sustainable energy.
Thank you very much, Prof. And over to you, Renani.
Thanks. So I was actually asking myself why academia is placed last. So even when we are tight on time, we'll talk about more. Right. But so I want to take the conversation on the academia side from two lenses. First part is that from a research point of view, you've got 3 tiers of research, right? You got basic research, you got applied research, you got experimental research. Basic research, we actually do research for the sake of research, right? We just want to explore what we are interested in. We love going somewhere. We love water. We love energy nexus. We just do the research to understand what is next in that. There's no near-term, medium-term application. Applied research says there has to be a current problem that the research focuses on. Well, on the other side, experimental research then focuses on the commercialization of the basic research or part of the applied research from a technology point of view. So I think one of the things that we are somehow stuck at from an academia point of view, and just like everybody else in the economy, academics need incentives. At the moment, academics is largely incentivized from a basic research point of view. And I think the one area that we need to gear for, especially from a gas point of view, because I did look at how are the research output looking like around gas, they're actually very low. There's not a lot of research activities around gas. And part of it is, do we have the incentives around applied, not basic research, because I think as Bruce has indicated, the issues around gas are not about skills or lack of knowledge. It's really around some of these policy, regulatory bottlenecks. I think one area that some of the scholars have looked at from Stellenbosch on the gas side, and I think part of it came earlier on the LNG side, is the aspect of a storage for dispatchable energy, which speaks part to what he was referring to. And I think the setting around the incentives has to focus on what are the current bottlenecks to move the gas system from where it is. So there has to be a systems approach, a sequencing approach. So I think one of the things, and I think that's something that the Energy Center can then do, is to map out and say, but what are the bottlenecks of the energy, of the gas value chain? And then the focus of research then moves to solving that particular issue. And then you solve the next issue. So I think aligned to the theory of constraints, that's actually how we want to peg the research space of this. Otherwise, if it's just research for the sake of research, we want to do a lot of amazing things that don't necessarily solve some of the issues that we currently have. So I think the issue, I think one area, and I think I spoke about it earlier with, I think she's right there from formerly at Sasol. So there are a lot of these policies that are all over the place. And I think part of the research that these transdisciplinary scholars have to look at is how do we elevate these gaps and the misalignments. And we are able to elevate them that actually the misalignment on SAREM, on Gas Master Plan, on IRP, is actually what's delaying us from achieving 1, 2, 3. And I think that's where the academics, at least from a gas point of view or an energy system perspective, have to actually be looking at. And of course, there's the other aspect on the experimental side of which Prof. Mampeli could then touch on, where is the technology development part that balances. Yes, in the start, there will be some import of the technologies, but over time, we obviously want to build the local capabilities. And I think that's the work that Sanedi, under the Energy Secretariat, is trying to build towards. So I think that's my opening remark on that. I think that's where we're actually going to get the best back for the money. Otherwise, if we are somewhere in the future, it just doesn't allow us to be able to move forward.
So in all, you agree with what
Yes, so
Bruce
the
was
two
saying?
speakers actually, it helped that they spoke earlier than me.
Let's focus on the challenges that
Let's
we have.
focus. That's what the scholarly work, at least for gas, must focus on. Then over time we can move to other things. But if we are too far, I think we're going to create issues.
Thank you. It's over to you, Prof.
The good thing about being the last speaker is that I can just say I agree with you. Let's move on. But I think one of the things that I just need to demonstrate is the importance of research and innovation. And I want to go a little bit off the gas topic. I'll come back now, just now. So during the COVID-19 pandemic, everybody saw how research was so important in solving that problem, the COVID-19 problem all over the world, including the work that South Africa did when we discovered one of the variants that was unfortunately called the South African variant, which was never a South African variant. We just discovered it because we were so good in research and at that particular point in time in that particular area. If you look at the global disruptors in the energy space, the battery energy storage thing, the lithium-ion battery that Elon Musk, maybe I shouldn't mention this name now, took to America and successfully commercialized. It all came out of research. The Department of Science, Technology, and Innovation always talk about innovation for a capable state. And I want to go back to what Rendan was saying. When you talk about innovation to solve real industrial and societal problems. In South Africa, we operate within what we call the National System of Innovation, which is universities, or let me say, higher education institutions, science councils, private sector, and the community. So that is what you need to solve the gas problems. Pindile talked about the challenges that we currently face, the court battles and things like that. Now, if you look at the National System of Innovation, the way it's structured, if we use that to try and solve some of those issues, because you've got society there, you've got the private sector there, you've got the academia in that particular system. Now, each of these components have got a role to play in the system. The academic space will deal with the research that will advise also in terms of the policies going forward. One of the reasons why these environmental groups, for instance, succeed when they take us to court is because there are also not proper awareness programs. The communities are not aware of you go to communities. As Sanedi, we're involved with the IRP process, for instance. I'm standing in, by the way, for my CEO, who is at NEDLEC today dealing with the IRP. And what we've picked up during the process, the public participation process, is that you have these environmental groups, very well funded. They come, they give information to people who've got no information whatsoever, because the National System of Innovation is not giving that information or an alternative kind of information, which is evidence-based, going to what Prof was saying, to say, as academics, we need to be evidence-based. We do research, we've got the results. What do we do with those results? In most cases, and I'm also an academic, we put them in the library, we put them in journals, in a language that many people don't even understand. It's understood by the few. So for me, we need to take advantage of the National System of Innovation that we have to drive innovation and also to create awareness amongst society, and also to identify problems that we have in the gas side of things, for instance. And I'm heavily involved, by the way, from the Sanedi's point of view, in looking for a solution, because I believe Eskom was here earlier today. They were telling people about, you know, the decommissioning of the coal fleet between now and 2035. Even though we've got life extension and all those things, some of those power stations we will be forced to decommission because they would have reached their end of life and they'll be very expensive to run, just like Komati. I'm not gonna go there. And therefore now I will, because I've used, you know, very limited time, I hope you give me more time later.
Thank you very much, Prof. I actually agree with you that also there has to be a change of mindset in academia, whereby we need to go out there and actually be able to share whatever research work that we are doing. If I can make an example, I think when shale gas was actually started in the country, remember currently there's a moratorium against it. So during that time, we were sent with DSI to the US to go and look at the, you know, shale gas exploration wells, which were really, there was no environmental challenges around those wells. They were just drilling for shale gas next to houses. But then in the country, you'd find that we are saying no to such things. So I think with the work also academia that we are actually doing, going out of the country to go and look what other countries are doing around gas-related R&D work. Also, we need to come back and share such information with the community so that at the end of the day, we won't then be able to face the protests that we're actually facing in the industry when it comes to then environmentalists. So let me then go to Rendani and Bruce. You've both of you agree that they really should, our focus when it comes to R&I should be only on the current relevant challenges that we have. But I tend to disagree with both of you, if you may allow me. Remember, Rendani, you said there are three aspects of research. You've got your basic research, and then you've got your advanced, and then you've got also your experimental component. But as currently, you know that the global community is moving towards the green economy. And when it comes to the production of gas, some of the chemicals that are actually being used in such, they are not that green. Possibly there might be R&D work that should be conducted so that we can also make sure that also there is a green component when it comes to producing gas, and also some of the chemicals that are being used. I also know that also in the US, when it comes to when you're actually for gas to power plants, you need to have, the US has got a policy that says you need to have a CCUS or a CCS incorporated into that power plant. Don't you think that the country should start doing such research work at the current moment before we can actually get into the gas to power production of when it comes to electricity?
Okay, so let me perhaps try and answer your question. I think, so let me first of all pose a question. What is the problem we're trying to solve? And in my mind, the problem we're trying to solve is how do we deal with the gas cliff by 2030?
Yes.
So if that's the question,
that's correct.
Okay, and that in my mind is the question. So if that is the question, then I think technical research and development is irrelevant. As simple as that. I'm not saying for that problem, I'm not saying that research and development isn't vitally important, but I would suggest that in that case, we only use fully commercially proven technology, technology that's at technology readiness level 9, so that there's no question about from that technological aspect. I think that innovation is a much abused term. What innovation should there be? The innovation is about commercial models, financing. How do we get these projects over the line so that we avoid the gas cliff? So if that's the narrow question, then I'm not saying, and I heard it here, that that fundamental R&D isn't vitally important in the long term for all kinds of reasons. But if our question is, how do we avert the gas cliff before 2030, then basic technical R&D, and I'm going to use the word deliberately, is irrelevant.
So I think, I mean, just to also align with Bruce, so I think, and to also pull back, there is an aspect of prioritization. What are we trying to do?
Yes, that's
and I think my response was largely from,
Let's
if we were to go
prioritize.
over the bottlenecks that we with at the moment, what we ought to be prioritizing is research to solve what we need to do.
Okay.
So aspect of applied research says, how do we solve this particular problem? Here's a possible flow scheme. Where can we find the technologies that are of the highest maturity? That's what we do. If there are issues around the policy space, as it was indicated, then our policy scholars need to be helping us understand how we unblock that. I think the argument here is not to say that in other parts of the country, there must not be some basic research. In fact, these 3 tiers of research, when you are progressing well, it's actually a portfolio. You still want to have some basic research.
Yes.
You still want to have some applied research. You still want to have some experimental. So you actually handle it from a portfolio approach. Obviously, with the pressing issues, then you want to say, what do you elevate? And my argument is, for where we are to solve the current issues, you elevate applied research. Of course, it's applied research, not limited to a technical sense, but it's applied research across the research spectrum, right? And then as you move along, then you pull back. And this is where the systems approach is important. Then as you do your monitoring and evaluation, now you understand that you are out of the woods, you can pull back and reinvest differently. And I think that's the argument.
But I think we're in absolute agreement. I was just trying to narrowly phrase the problem. How do we avoid the gas cliff by 2030? Yes, where we are from now till 2030. How do we get there? And there, it's not about technical R&D.
Thank you, colleagues. And the last one to Prof. The industry is, most of the time they are complaining about policy uncertainty. And what are some misalignment or gaps on the regulatory front? And also on those, what role can academia play to support the South African government?
Yeah, in South Africa, I don't think we have a lot more of policy uncertainty. We have a lot more of policy and strategies not being fully or properly implemented. And that's because of the segmentation in the various departments and the solitary nature in which some of the departments operate. You find one department developing a strategy and working alone, and the other one developing a strategy and working alone. What we've done through the Department of Science, Technology and Innovation, for instance, in the hydrogen economy, I had Prof talking about the hydrogen economy earlier. I'm not going to go into the issues that he raised, but I'm going to say this one. So the various departments had their own strategies on how they would like to approach the hydrogen economy, and they were not basically linked to each other. And then the Department of Science, Technology and Innovation developed the Hydrogen Society Roadmap, which basically brought all the various policies together and then took the summaries of all those policies and then developed one kind of a document that speaks to how South Africa should respond to the hydrogen economy. Now, some of these issues can be solved through research, obviously. And coming back to the gas side of things, we're talking more now about the gas cliff. If we solve the gas cliff, we're going to have 2 problems by 2035 that we are not solving now. The one is skills in the sector. We've commissioned a number of studies that shows that we're going to run out of skills in the technical side of things, technologies, technicians, artisans. And that's not only on the gas side of things, across the entire energy space. The other problem that we're going to run into is the technology side of things. So we need research to develop the technologies. We've been looking at this space as SANEDI and the Department of Energy and Electricity. If we are to go into gas to power and today, and ESCOM will also attest to this, for us to get the gas turbines, I'm not talking about the balance of the plant, just the main thing. You need to order 5 years in advance. So if we want a gas turbine in South Africa, that will come and we need to order today for the next 5 years. And that is going to, if you look at what's happening globally, last week we were in the G20 meetings, and part of the discussions were around these gas issues, clean cooking and gas issues as well. Now, most countries are starting to move towards using gas as a mid-merit. And we also have that, by the way, in our IRP. Prof will know, Pindile will know. We've modeled how we're going to use gas as a mid-merit going forward. We'll see what the policy adjustments will say at the end of the day when the minister does that. But the point that I'm trying to drive is that we need to use research, and going back to my initial comments about the National System of Innovation and all that, we need to identify the problems now and try to solve them now. I'm a researcher myself in various fields. I know that it takes time to do applied research and come up with a technology. It takes a lot of time. Now we've got a problem on the technology side, we've got a problem on the policy side of things, on the environmental side of things. For me, we need to do a lot of research on the environmental side of things. Even on the social side of things, socio-environmental aspects, how do we deal with issues of socio-environmental aspects so that we can have some form of energy independence? We are talking about, and we are developing, I'm one of the culprits, we are busy developing all sorts of ideas about how to import LNGs, how to import gas from Namibia and other places. And we're going as far as Qatar. The minister was in Qatar the other day. Unfortunately, I couldn't, accompany him. Maybe some of the people who are here were there. But we've got gas reserves here, trillions of TCF in the country, just here in South Africa. How do we then, the problem is the environmental groups that are coming from outside, and some of those environmental groups, we were with their countries in G20 last week. They are busy with gas there in their own country. And then they come here, they say, no, they buy our communities. Poverty is a problem sometimes. We need to deal with economic growth, so that we can deal with poverty as well. So our people cannot be bought to go and push these placards. But in short, we need to do research on the policy side of things, research that will advise policy on the technology side of things. And we need to start to identify problems, what I call problems of the future. And I think I said this in one of the DEE planning session as well. Let me stop there for the interest of time. I mean, a lecture is about 45 minutes, and I was about to give one.
That has been said. I would like to open the floor for questions.
The students are still awake.
The students are still awake.
So many hands. Probably from the students.
Thank you very much for this opportunity. Good afternoon, everybody. My name is Kgosientso, energy trader for SADC in TCSA. Prof. David, I always enjoy your interactions and how you express yourself. However, I'm just interested in terms of your modeling. What's the time period that you're looking at when you are comparing the different technologies, given that the different technologies have a different life cycle. So if you look at nuclear and you're going to look at a life cycle of 50 to 75 years, you may find that it's actually cheaper than other technologies, you see. I do acknowledge that today is about gas. And yes, we must, gas is a type of energy that needs scale. And we must find ways of how to get the scale in order to get it to be bankable. But I'm just interested in that question. Thank you.
Okay. Yes. So what I did is take each technology on its own. So for battery, you study the thing for 10 years and you ask over a 10-year period, because that's its lifetime more or less. You know, what to store one kilowatt hour of electricity in that battery, what will it cost you? And for the nuclear plant, it lasts 60 years, and then I took it as 60 years. There's one thing that we should remember, and that is with discount rates. So due to the theory of, or the fact of the time value of money, all revenues that you receive in future must be brought back to present time now. By, if it's 60 years in the future and your discount rate is 8.2%, which it is, then you must 60 times divide that by 1.082. You know, you must try that. 100 rands end up as 150 or so. You know, 100 rands revenue that you will receive in 60 years is something like 150 today. So there's really no value between a plant that will last 60 years and one that will last 600 years, because those last, you know, ages, just what centuries just disappear with the discount rate towards zero. So there's a big difference between the value of a plant that lasts 10 years and 20 years. There's a substantial one to 40 years, and after that, they just more or less all the same. But I did it exactly like I should. In that respect. So other stuff I just took the year 2023. So if other years have different weather, I wouldn't know that. I took ESCOM data and only hourly data and so on. So my data has got all the T's and C's that I said. But but that one part of how long is the thing, that numbers that about R2.40 per kilowatt hour for nuclear. That is if you work it out over the full 60 years. And then on top of that, you've got the idea, you've got the problem because it's a baseload technology. If you build enough that you've got more than enough at night, then you must build storage facilities to store it for the day. Then you push up the cost. If you build that it's just at the minimum, that's the baseload theory, that you build it to the minimum that you require in a day, then you've got to have other technologies such as gas. Then it's not so clean anymore because you add a dirty technology or you add other stuff, you know, and you've got to have batteries or storage for that. So that is just, in an ideal world, that's that 240, but you add those other things, it goes up even above that. So, yeah.
Thank you very much, Prof.
Yeah.
And
Good afternoon. Thank you so much for this wonderful program. My name is Ronnie Charlie. My first question is about, is research produced in South Africa? Is it really helping our economy? Or is it just to contribute to the body of knowledge? If I can put an example in my question is, when I was at Sasol, you come there at R&D, they show you all the problems. They say, choose a problem and run with a problem. And my second question, our speaker from Sanedi mentioned skills. When I was at ISCO, I know most people maybe were not even, some of them were not born. When I was at ISCO in 1988, if you are employed as a learner technician or an apprentice which become an artisan or an engineer, which will become an engineer later, you don't sign a contract which they say it's 1 year or whatever. It's a life contract. When you finish and you become a technician or an engineer, then you work for Sasol, for ISCO. If you can't work for ISCO, there are no opportunities. Then you rotate, you roam among, they can take you to ESCOM or they can take you to Transnet. That's what used to happen. And this question I asked the head of training at Transnet. What is done now? A guy comes, he's given a 1-year contract. After a 1-year contract, when it's done, they are kicked out of the system, they must apply. Maybe there were 20 being trained, they must apply for 2 positions. And according to EXA, you need 3 meaningful years to become a professional. I will stop there.
Yes, thank you very much. Let's allow Yago to ask a question, and then thereafter, I think the rest of the other questions you can then ask the panel members after the session, because we are running out of time. It's 5 o'clock now, so we need to do a thank you or a close off session after this. Thank you. So Yago is our last.
Thanks.
to ask.
A lucky one. I have a challenge for academia. And I'm talking about the context of this day, that we've listened to all these particular disciplines across the gas value chain, if you want to call it that. We listen to upstream, midstream, downstream, regulatory, legal, finance, obviously academia, which in my opinion is really the glue that needs to keep all of this together. Now, I think the problem we have in South Africa is really that we believe, all right? We don't have a North Star in terms of all the modeling that we see. Government comes up with an output. We don't know what's in the black box, right? Stellenbosch University, private consultants funded by international oil companies or other environmental agendanists, you know, launches a study, it comes out. All right. So the challenge to me in this journey going forward is for academia to implement a peer review structure around the role of gas. In other words, that we, amongst academia, have a peer review system around where, what, how, when, at what cost, and then that inform our policy as the North Star that we need. So I just want to know if something like that is workable. If I can, let's just flip it into a question. Thanks.
Okay, thank you. Any takers?
I'll have a
Only
stab.
one
Okay,
taker,
all right.
Prof.
You.
Prof, you can.
Yeah, I can take. Is research in South Africa helping our economy? That's a good question. We've got examples of research that moved from the lab to industrialization, and then that will start to contribute into the economy. And I can give many examples, but let me just give an example of what we're doing. So in the hydrogen economy, we supported research on the production of membrane electrode assemblies, MEAs that were done through UCT. And we managed to move from the laboratory to have a spin-off company selling these MEAs around the world. They're now sitting at more than 100 customers around the world. We're now building industry on that to manufacture these MEAs. So that's a typical example of how research can assist in terms of the economic growth of the country. What we're doing now going forward with all our research projects. Okay, the other one is the example of the work that we're doing with Toyota again on the refueling stations in the hydrogen economy that is now picking up, going into the industry side of things. What we're doing now is when we receive proposals, we're encouraging our researchers to first identify real industry problems and then tailor-make their research to solve those kind of problems. So that's what is happening. On the skills side, the training that's not aligned to AXA requirements, we identified that as a problem at Sanedi already. And one of the things that we're doing is we're sitting with about more than 20 what we call interns that we've sent to various institutions. And one of the things that we have developed is a a kind of a guideline that links to AXA requirements. And we're saying they must not exit the system until they meet all these requirements, and we're tracking that. So from the national point of view, we're doing that kind of a pilot, and would like to kind of roll it out nationwide afterwards. Who do we believe in academia? This is the last one. The need for a peer review structure on the gas side of things. Again, we agree there's so many interests, so many people doing running so many models. With the IRP model, we had to go out to experts, open the back end of the model, and show them how the IRP was modeled, so that they can then, on behalf of society, become that kind of a peer review on behalf of the nation. And Sanedi has now taken over in terms of the IRP modeling and the data repository on behalf of the nation. So we will be busy collecting empirical data on everything, including the gas side of things. And we are heavily involved on the gas side of things. So come talk to us. If you want to establish something of this nature, come, let's have a conversation. Let's see what form it can take, and then let's take that forward. Thank you.
Thank you very much, Prof. And on that note, I would like to thank my panel members for agreeing to actually come and sit on this session. And I would like to then close off the session, and then anyone who has got further questions for my panel members, you are allowed to actually contact them or go to them after the event. Thank you very much. Let's give them a round of applause.
Thank you, Nandi and the panel. We move into the last session, session 7, which is basically a close off from Prof. Paho, just to give us an indication as to, after some deliberations throughout the day, where do we go from here?
This one. No, that one. Thanks. Good afternoon, colleagues. My name is David Pao. I'm at the African Energy Leadership Center. Before I start with the last session, it's a graveyard session that I have at Dr. Nandi. I just want to ask permission from my boss, and then I just want to assure all the Arsenal supporters, long-suffering Arsenal supporters, the message from the City of Lights is that in 4 or 5 hours from now on, we'll hear some good news in terms of Arsenal moving forward. So please do not worry. I have a direct line to the men upstairs. Colleagues, thanks so much. I think it's been a hectic afternoon, day and now afternoon. I have a couple of takeaways, but in terms of the mandate that we have, in terms of our engagement with Yago and the team, and also what the expectations are, this is going to be a work in progress, but a number of key takeaways. Before I go to the slides, I have about 300 slides, so you have to bear with me. Some of the key takeaways are, for example, we need to sort out the market space in this country, and I think it came out quite loud. There's need for us to bring in LNG in the interim to cover the envisaged gas shortage in the interim. We will need more indigenous gas exploration to ramp up Orange Basin and other onshore and offshore opportunities should be in play. We need an optimized and effective financial instruments to enhance our gas agenda. The need for policy rigor and certainty, especially for investor confidence and certainty. We need to establish an academic think tank to develop a social compact to drive transformation and economic growth. Other key takeaways, and thanks to the DDG, was the issue that he highlighted, that past experience has shown that diplomacy, especially in the oil and gas ecosystem, works. With everything happening within the SADC region, whether it's Namibia or Mozambique or other areas far afield, it's something that we have to take to heart as a way forward. We have to make sure that all the stakeholders and actors in the ecosystem are involved in our activities. we must effectively implement all our plans efficiently and effectively. We have to address over-regulation, be it real or imagined. And then probably the need for maybe a one-stop regulatory platform would be ideal. We need to have a standard response on the country's energy policy to mitigate against the persistent court actions in South Africa, both by South Africans and from some foreign agents. And last but not least, I think, Jaco, the other issue which ties also to the whole idea of a think tank is a peer review mechanism where, you know what, you have people who are not driven by agendas or funded by other things, but maybe academia is a point of call for us. What I did, Prof. Hadebe, is this points to ponder, but it's part and parcel of the discussion. We need to have guiding principles to develop the National Gas Compact. There is no doubt about it. What do we need to do? And all of this has to do with the greater national interest. We need to set up the academic-led think tank. That's recommendations probably from a credibility point of view, which can drive the development of the gas compact. And I don't know, Prof, maybe Wits Business School should take the lead in coordinating and ensuring the delivery of the envisaged gas compact, working with all the partners. And the most important issue is that we also have to make sure, I think AB mentioned the whole idea about resources, that we need the requisite resources to deliver on the gas compact in the years ahead. The key stakeholders represented on the compact development team, if I can call it that, obviously academia, not just ourselves, but there are a number of players. I think Sanedi are funding a lot of initiatives nationally. I mean, you look at what's happening in Stellenbosch and other universities where there's basically a spoke and wheel system where all these academic researchers are looking at this. And I think the need for us to really bring these teams together, but obviously we need to have maybe a lead. And I think maybe Wits Business School is something that we can, working with ICWASA and other stakeholders, the science councils, whether it's SANEDI or the CSIR or others, government departments and state enterprises and entities like ESCOM. Obviously, the role of the private sector is going to be quite important. Public-private partnership has been shown to be very effective. The huge success Sasol has had in Mozambique is a case in point. And then we need to have guidelines in terms of, how do we proceed in terms of the adoption, the sign-off and implementation of a national gas compact for South Africa. These are things that I'm hoping that colleagues can start thinking about as we look forward to having a gas compact. And then what I would propose as a compact structure, something simple but straightforward that we can build on and with inputs. Obviously, the first section should be, what problem are we trying to solve? What is our ambition? And that would be, what are the targets in terms of, we could have the ambition, but the number of things that we want to pursue. The issue of timeframes, I think Oliver had highlighted the whole thing of schedules, and he repeated it quite a number of times. So we need schedules, and we need milestones that, over the next couple of years as we implement the proposed gas compact, we're looking at how we succeed. What is the definition of victory in terms of our move? The section 2 would be the actions that we need to achieve on this ambition. And then the ambition obviously is for the National Gas Pact. And then we have to look at the outcomes. The outcomes would be, time-based, as I said, the issue of timeframes. And then we have to ensure that they're measurable, so that when you report to all our stakeholders, from right up to the ministry, right up to the Minister of Electricity and Energy, there are ways where people can judge us. And then section 4 would be the required resources and support. Some of the resources probably are financial, but there could be resources that are non-financial for each of the actions. Section 5 would be impact. How is this natural gas compact affecting the broader South Africa in the long term? And then there's a section for us to have a metric of key indicators And obviously the compact should also have a general information about who's who in the zoo, who's responsible for what, but specifically lead entities within the public and the private sector and academy. That's basically broad outlines as to what we can start working on, but this is not cast in stone. It's something that we're hoping that as part of the discussion now is that if you look at what is proposed, what more can we add and other things and start building on it. I'll open the floor for any questions or comments or inputs or violent disagreements. Jaco and Prof. Maurice can say that. Okay. Please go ahead. And to quote Amilcar Cabral, who said, "Do not claim easy victories." The structure was sort of like a lean from some of the global compacts that have been approved worldwide. So it's not, I had to copy from somebody, but obviously there's a benchmark globally. So that should not hurt in terms of how we approach this. Please go ahead.
Thanks, Prof. Paho. My comments really just tie in a little bit what Jaco is saying, and what I wanted to summarize what he was asking for is really just more research on energy economics, and then take it from there, because I think the reply from the Sanedi guy about jumping into the IRP is probably not what you want to start with, but to start with energy economics, and that will eventually lead into all these technical areas and into the various things. But we should have energy economics. Then the second was, and I don't know how to tie into your compact here, what Professor Serfontaine was showing with his graphs is more full cost of electricity as opposed to just the levelized cost. And it's something I really wanted to bring back to him to say, how does his analysis in the end adjust if he takes an FCOE perspective to his analysis? Thanks.
Thanks. I think Dr. Young mentioned something quite important. Also in terms of our skills focus, that is, we have to move beyond just the technical, the engineers and something. We have to have a multidisciplinary teams to look at this. The whole idea that goes beyond just being engineers, the economics of it. And actually what we tried to do was to have another panel member from UJ who's focused on energy economics, but she could not make it, but we are spot on. So we have to have a more multidisciplinary approach as highlighted by my colleague.
I felt like a student sitting in a lecture hall today, and that's great because we are actually sufficient knowledge in this room to solve the problem that we have, and we framed it as the gas cliff 2028. And I want to violently agree that if that is the outline, because that's what we as South Africans will be doing. We come together, we agree on the goal, and we get a solution. So I think that's important that if that's the outline, then I would support that, obviously, getting various stakeholders at the right places involved and taking it from there. Because as a business person today, I'm looking for a solution for the gas cliff. And I think the whole of South Africa is looking to the people in this room today, solve the problem, because that's what we do as business people in South Africa. Thank you.
The ambitions that we put out here, Prof. David, is I mean, absolutely nothing wrong with this. I mean, this is spot on, I think, as an outcome for this initiative. I think there's a step before that, and I want to tie on to what Joshua was saying here also from a pure business perspective. We need a short-term intervention, and that simply is a work group with the Minister of Energy and government officials across these disciplines that we've covered today to sit in a room to say, where do we start? I think that will put practical traction to the very short-term solutions and will ultimately lead to longer-term outcomes in terms of research, guidance of academia, and so on, obviously within a structure that you've very, very sufficiently provided here. Thank you. That's just my closing comment.
Thank you very much, Jaco. I think we just want to check whether we're aligned with what Jaco is saying, that we support this first, the whole idea of a social compact. Secondly, the structure that we're proposing here. I think what Jaco is saying is number two, we need to be very clear about the disciplines and how to populate them and how to drive them. And finally, obviously, I want to make sure that we've got the support that the business school continue to drive this initiative in that direction. I just want to get that indication before, so that could be leading us into the closure of the session. Any support?
If I may add one note.
Yeah, please.
I think what's also critical is to make sure that we got the right players from industry in the room. I think what's happened, if we look at just legislation development and regulation development, all of the comments from industry were ignored in the UPRDA. Ignored. And it still went through. That still needs to be fixed. But right now we've got the regulations that are out for public comment. We still haven't fixed the legislation. So we've got a lot of work to do across several elements. And I think the key now is to make sure that it's not pushed back to us, to coin the phrase of one of the profs. If we want a happy marriage, and we need the happy marriage here, government and industry, we need to make sure it's collaborative.
Other comment there.
I can with confidence say that this initiative enjoys the full support of SAOGA, all of its 150 member companies. And we have worked very closely with Jaco and Nick before. We will continue to do so. We all have our role to play and look forward to working with you all. Thank you.
I just have a small suggestion. So I work in finance, and I was thinking, I don't know much about energy, but I do know a little bit about finance. And that is, in terms of, because I hear a lot about the carbon, what is it called? Gas cliff. And I was thinking, is it possible to structure gas projects or any other projects that are maybe on the, are going to fall off the cliff with built-in decarbonization plans to say maybe carbon capture, right? Or fuel switching or power to hydrogen to keep them eligible for climate-linked capital, because I think we want to future-proof some of these financial, some of these projects through financial instruments that can help that happen or make that happen, right? To embed these transition pathways directly into the business models that we implement.
I think somebody over there. Okay, okay, last one.
Yeah, good. You don't want your friend to express a view.
Yeah, no, I didn't see his view.
Yeah. First and foremost, thank you very much for the opportunity. I think it is helpful and insightful, so thank you very much. But I think it is important to begin to understand that we were a problem, we were challenges. And for me, I want to talk from doing things practically. there is practical things that need to be done. And it seems to me in South Africa, we've developed another culture where we can meet and make speeches and make eloquent speeches and get standing ovations. But there is a shortfall in practical solutions. It is interesting that there was a Vietnamese minister who came to Africa to come and look for investments. And he said the problem with Africa is that the enormous opportunities, the galore, but there's a problem, and the problem is that of a mind shift. And I think it's good to have this, Maurice, and I commend you. But I think we need to go and change the mind shift in the leadership, because there is indeed a crisis. And the crisis is not in 2028 of the gas cliff. It is now. In fact, it is yesterday, if not day before yesterday, if not since 1994. And I want to appeal to you, now that I can see you have this capacity of mobilizing so many people, to say, let's go to something that is concrete, that is deliverable. Some of us want delivery. You know, I don't like the talk shops. It's good because I've learned a few things and a few words. But for us here, it's delivery. What is it that is going to address the poverty there, the unemployment, the economy that is on a spiral downfall, where there's a huge change in the global south that is going to affect us, that's going to affect the future generations of this country? What is it that we need to do to avoid another mass revolution that is coming? Because I come from Alex, and you can see the hunger. And for me, is that we need to move away after taking all this and go and sit with the people to say they need solutions. We need to get to the solutions. That's what I want to appeal for. It's nice to talk like this, but let's go and walk.
There spoke a veteran. This is our veteran, our leader, and our hero. When we grew up, Bradon, he used to be a shining light, and we are inspired by that. Bradon, you've given us a challenge, just giving all of us, get action. So on that note, I would like to basically get an indication. Are you supporting that we continue this initiative to deliver the results and make sure, get an indication? Well, there you are. So you've got fully adopted your new deal and your compact. And I think you want to hand over to Professor Mills to give a vote of thanks.
Thank you very much, Professor Maurice, Professor Paho. Distinguished guests, esteemed speakers, and fellow participants. My name is Mills Soko. I am a professor here at Wits Business School, but also Director of Development and Partnerships. I know it's been a long day, so I will keep this vote of thanks segment nice and crisp, right? Let me begin by thanking members of the audience, that is all of you here, who attended this symposium. The fact that this event was oversubscribed bears testimony to the relevance and urgency of the topic under consideration. There is no doubt that this is an issue of major national importance. Thank you for attending and participating through your thoughtful and probing questions in the panel discussions we held today. Our moderators and panelists were outstanding today. Thank you for sharing your valuable insights and for making yourselves available to take part in today's dialogue. The high quality of preparation of discourse in the various sessions attests to the meticulous preparation that went into framing the discussions. We do not take for granted the extensive work that went into ensuring that the discussions were robust, constructive, focused, and solution-oriented. Your participation and engagement made this event truly special. I would like to express deep gratitude to specific people who went out of their way to make this symposium a resounding success. I will start with the progenitors, the initiators of this dialogue, Professor Maurice, my boss here, Professor Maurice Hadebe, Director and Head of WBS, and Mr. Yako Human, CEO of the Industrial Gas Users Association, IGUA SA. Without your vision and leadership, this seminar would not have seen the light of day. A special thanks in her absence goes to Priscilla Mabelane, Chair of the WBS Advisory Board. Thank you in your absence, Priscilla, for your leadership, guidance, and responsiveness. You are exemplary model of what an advisory board member ought to be. We cannot think. Thank you in her absence. I'm saying this, right? I wrote this for her. We cannot thank you enough for being always there for us and for being our principal troubleshooter. We struggled to secure the minister's participation today, and it is after your intervention that we could ensure that he was able to grace this occasion. And thank you to the organizing team. That is my colleagues from Wits Business School who worked tirelessly to make this event a reality. Professor David Paho, Director of the African Energy Leadership Center, our Program Director, Dr. Stephen Matetsa, the Marketing, Communications and Events team under the leadership of Midupi. Lamula, is Midupi here? I see Alison is here. Anvita Dayal, who is, works in the office of the head of school, as well as our audiovisual and facilities team, Bulelo Kafu, Jaytin Carson, Juan Osteisen, and Dino Gavrildes. And thanks to the catering staff at Olives and Plates, who have provided refreshments since this morning, plus the lunch, delicious lunch we had earlier. Your hard work and dedication are truly appreciated. Our deep appreciation also goes to the IGUA SA, who provided a generous sponsorship, without which holding this event would have not been possible. Thank you, Jaco, and your colleagues at IGUA SA. And thanks also to our media partner, Mail and Guardian, for covering this seminar. We worked very well with our Mail and Guardian colleagues during our Matla Uja Energy Conference in November last year. And it's good to see our partnership growing from strength to strength. Our other media partner, the SABC, that is the public broadcaster, has done a fantastic job in ensuring that these important deliberations here are made public knowledge and do not remain the preserve only of those who are in attendance. As we conclude this symposium, I would like to repeat what Professor Hadebe said in his welcome remarks this morning about the purpose of today's dialogue and what we seek to achieve. And I quote, the reason we decided to host this symposium is to assess and unpack the current situation regarding natural gas supply. But more importantly, we see today as about finding solutions. We have some of the best minds in the oil and gas industry in this room this morning and this afternoon. Let us make this opportunity to explore ways in which we can collaborate as stakeholders towards long-term sustainable solutions to avoid a gas supply disaster situation. Let us combine our leadership experience, our technical expertise, our research, and our passion for the industry to develop a compact for a well-functioning South African gas sector. And that's what Prof. Paho has been trying to help us to do. There is no doubt that our deliberations today went a long way towards laying the foundations we can build on. This is a good start, but there is a great deal more to do to meet our objectives and realize the impact we desire. Once again, I would like to extend my sincere gratitude to everyone who contributed to the success of this National Gas Symposium. Thank you, and I wish you all a wonderful evening.
Sorry, one last announcement. You guys have been here for too long, so, and we know that you're gonna get stuck in traffic. So there's coffee for you to take away outside and some biscuits, or you can just stay around and get those numbers that you wanted for throughout the day. Thank you.